Hello. Hey, thanks for joining us this morning. My name is Greg. I'm the marketing person here at Metastock, and it has been a spell since I've been in the seat in the control room, so there's a really good likelihood that things could just go horribly wrong today. There's all sorts of buttons and switches and dials, and the smallest thing could set this whole thing off and make it a horrible mess. So that should be fun to stay tuned for, but probably, oh, by the way, welcome everyone, and make sure you say hello when you come on and let us know where you're from. We always like to hear from people. No one said hello yet, so I can't say hello back. But it's a beautiful morning here in the Wasatch Front. The sun is just about to come over the Wasatch Mountains, and it looks to be a really, really nice day, and hopefully a really nice event. And all seriousness, I will do my best to make sure that nothing catches fire today, but if it does, there's a very good likelihood you can see this. But hopefully not. So, all right, look at my notes. Of course, as always, make sure to like, subscribe, and hit that bell. We don't want you to like if you didn't like it, but if you did like it, please do like and subscribe, and that would be great for us. Also, if you have not registered for today's event, if you're just watching on YouTube, that's fine. But it would do you well to go ahead and go to metastock.com and hit the banner on the top that says Summit and go ahead and register there, because then you'll be privy to all of the freebies that many of the guests give along with their presentations. So, and also if you want to see there's Jeff and there's Jay. Hello, Jay from Napa. Good morning, Jeff, from the room next door. If you want to see today's speakers and their presentations and read a little bit about it, that's also a good place to go. That's metastock.com. Traders-Summit, and metastock.com/traders-summit. Go there. There's a little registration at the bottom, and also it gives you a detailed explanation of the speakers, when they're going to speak, and what they're going to speak about. All right, so we'll be starting here in about 6 minutes and 15 seconds. Please go ahead and strap in, and I hope you have a really good day, and I'll let you listen to some jazzy music for a little bit while we're waiting. Hi there, Greg Lewis, Metastock Software. As the marketing director, I get asked all the time, what is Metastock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you.
Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of Metastock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with QuoteCenter. QuoteCenter lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the Metastock Forecaster, You can even take advantage of patented technology to view future prices. If you're an options trader, you're going to love Metastock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. Metastock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, Metastock explains how they work in an easy-to-follow commentary window. Metastock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. Metastock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the Armo. As you become a more experienced trader, Metastock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. If you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data.
And if you haven't registered for this event, all you need to do is go to
Add on the world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years.
You might need to know, and also it'll give you a place where you can.
To find out more about Metastock and how it can help your trading, visit metastock.com or contact the product professional via phone, email, or chat.
Presenters are doing whatever previously they're doing outside their normal presentation. So we'll be starting here in about 1 minute and 45 seconds. Crossing fingers. Stick around.
We'll be starting in a second. All right. I'm not ready yet. All right. Hello, everybody. I hope you're doing well. My name is Chef Gibby. I'm going to kick us off today. We're going to read a legal disclaimer. It's going to be amazing. And then we're going to have a really good speaker. So let's go ahead and get going. I want to say thank you for coming to the Online Trader Summit today. If you have questions, make sure to type them in. We're watching both on YouTube and on GoToWebinar. So if you have questions, we will answer them in some way or another. Anyway, let's go ahead and get this thing kicked off. Thanks again for coming. It's good to see you. If you're watching on YouTube, make sure to like, subscribe, do all that good stuff. It helps a great deal. We appreciate it. So let's go ahead and get to that legal agreement like I promised. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and Metastock should have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Hello, Neil. It's good to see you. Okay. Do want to say real quickly thank you to our two sponsors today. CMT Association is a very, very well reputed organization. They do a lot of they do a lot of courses on risk management, systems development, portfolio management, behavioral finance, et cetera, et cetera, et cetera. A very, very well-respected organization with a huge reputation. We want to really thank them for being part of the summit today, cmtassociation.org. Our other sponsor that I'll mention right here now is Stocks and Commodities Magazine. Stocks and Commodities Magazine has been a long-term supporter of the Metastock summits and what we do and all of that kind of good stuff. So we appreciate them. They do a lot of good work with us, and we really do appreciate it. So, of course, we're Metastock. If you haven't heard of Metastock yet, welcome to the summit. It's good to have you here. Metastock, we've been creating software here that's been winning awards for almost 30 years, 29 years this year. And it's been rated #1 in the stocks and commodities for decades now. And we're just scanning. We help you find ideas. We do testing. We help you test trading ideas to see what works well. And then, we have an expert advisor that does a lot of really good commentary and kind of helps you understand different ideas that you might be using. It's a huge toolbox. It does a ton of good stuff for you, and that's the reason it's been rated #1. So in any case, our first presenter at the Online Trading Summit is Rick Sadler. Rick has been a partner of Metastock for a number of years. He runs a company called Hit and Run Candlesticks. He does a lot of training with speakers. We've had him many, many times. He always does a beautiful job. We're always happy to have him in here. Rick, let's go ahead and get you started. Are you here with us? Well, I can see your mic is on.
Test 1, 2. Are you there? Are you there?
Yeah.
Oh,
We got you.
Okay. I think I had the button pushed off. Sorry about that. Okay, I'm here. Good morning, Jeff.
Good morning. No, I'm so glad you're here. And I'm so glad we can hear you. I was about to call you. So let me go ahead and make you the presenter. Where are you at right now? What part of the country?
I'm in Springfield, Missouri, the Midwest. So it's 9:04 a.m. right now
Awesome.
here. Let's see, share my screen. Which screen?
I can see a lot of icons. That's what I can see right now.
Okay, that's the wrong screen then.
Do you know how to change it?
Change it. Let's see. Share screen, show screen. There we go.
Mm-hmm.
Now we're getting somewhere. Oh, that might be it right there. That might be it
welcome
right there.
Welcome to this Metastock Summit. Hello, Rick Sadler.
Hey, good morning.
You can see it. All right.
Good morning, everybody. It's all me now? Okay, thanks, Jeff.
Yeah.
Hey, seriously, everybody out there, Jeff, the gang at Metastock, thank you so very much for having me here. Okay, I appreciate it. I love questions, so feel free to ask questions, and we'll just kind of kick this off, okay? So good morning. If for those watching it live right now, it's good morning to you. Welcome to the Metastock Summit. My name is Rick Sadler, and I'm the founder of Hit and Run Candlesticks. Today, what I'm going to talk about I'm going to be straight up honest with you. It's probably not the most popular thing to talk about because traders tend to migrate toward charts. Traders tend to migrate toward tools and how to trade that stock, how to trade that chart, how to enter into that long or enter into that short, or how do I make 10% or 15% or 20 or 30? How do I double my money, my account in 12 months. Look, seriously, there's, I forget how many speakers we have, 6, 7, 8 today, maybe. And I think every one of them, there's no question you're going to learn something from everybody. Fantastic speakers. The truth is, for everybody out here, all the speakers today, it is very hard to take years of what they know and put it into 40 minutes or so. So it is difficult. So what I'm going to show you is 9 simple principles for the foundation of trading. But at the end of this webinar, Jeff's going to talk about some of the packages that we have on Metastock. But I also want to tell you he's going to offer you a 30-day trial that's absolutely free. And during that 30-day trial, I will teach you until I'm blue in the face. So in case you cannot be in our training room, our trading room, each one of the many little courses that I'm going to teach that will start Wednesday, September 28th, will be recorded, and you will be sent them if you are part of our free trial. Part of our entire membership, in fact, will get this. So at least sign up for the free trial if you can't be in the trading room. That way, you'll at least get the 30 days of use there and education. So quick disclaimer, I know that Metastock already did that, but I want to do that really quick. I'm not going to read this here to you. Bottom line, trading is risky. Trading is, for some people, it's not their thing. And some people that just, you're better off, honestly, to
How about 2 p.m.?
You're better off to go to work every day at the same time, go to lunch at the same time, maybe come home at the same time. Some people are just meant to punch a clock. It is the way it is, okay? Not everybody can ride a horse. Not everybody can trade a stock. So again, trading is very risky and not suitable for everybody. Please consult your own financial advisor when making decisions regarding financial management. All right. Oops, I think I skipped a slide. So we've already done this right here. Here's some things you're going to get on that 30-day trial. You will be, whether you're ever in the trading room or not, if you're signed up, you will be sent a note for 101 private coaching. You'll receive alerts through our alert app, and you'll receive a Trade Logic video. What a Trade Logic video is, whenever we take a trade, close it. Well, Trade Logic video is when we open a trade. So when we make a trade, I make a video. It runs maybe under a minute, maybe a minute and a half at the most, and it explains what I like about the chart, the trade, why I'm buying it. Fantastic educational tool, extremely educational. So right there is just worth its weight in gold. Today, we're going to talk a little bit about my 3 favorite entry setups, and I will cover them in great detail starting Wednesday, September 28th this year, 2022. I will also explain how I can teach you to plan a trade in less than 1 minute. Okay, whenever any educators start talking about planning a trade, all of a sudden we lose people. That's not what traders want to do. Try to stop. Sorry about that, folks. There is this is right here. This is a brain shut off is what this is. Nobody wants to learn how to plan a trade. Everybody wants, give me the trade, just tell me where to buy it, tell me where to close it. Nobody wants to plan it. I've got it down less than 1 minute, and I'll be glad to show everybody how to do that. Of course, you'll get a couple of free ebooks, absolutely, and with complete explanation. So, all right, let's talk about these 9 basic trading principles, okay? There are 9 principles that I truly believe is the absolute core to successful trading. Over the years, and my years are right at 34 years now in trading, And I freely admit my first few years was horrible. I would win, and then lose big. Win, and then lose big. Freely admit, $100,000 at least down the tubes trading, trying to learn how to trade. I wish somebody would have told me years ago when I first started, number one, stop trading till you learn how to trade. It would save a ton of money. It would make my education so much cheaper into trading. But that, we didn't have this technology like right now, what we're doing right now, we didn't have this technology in 1988 when I started. So we take advantage of the technology. It's right there in front of us. So these 9 principles, I think this is a fantastic foundation. There are other things such as price action, candlesticks, indicators, trend lines, patterns, many other tools that you may use as a trader, and not every trader uses the same tool. So some tools may work for somebody, other tools are not going to work for somebody. Principle number 1. Now, I will admit, I have learned over the years, and I've learned this a long time ago, and I neglected to follow it. I would relearn it, and I would neglect to follow it. I would learn it again, and I would neglect to follow it. And when I neglected to follow it, I would lose money, hands down, overall, every time. Sure, some trades would win, but overall, the big picture, who cares about one trade? What you care about is your total account, not just one single trade. This number 1 principle could arguably be the most important, the most absolute important rule of all. Now, I want to stop right here, and I want to remind everybody that I personally am a short-term swing trader. I hold overnight, sometimes just one day, or overnight, and then close it. So I guess that's 2 days, 3 days sometimes, 4 days sometimes, 10 days sometimes, 15 days sometimes. I've got one particular stock I've been in now for, it's a tiny bit of a little longer hold. I think I've got 20, 25 days in it right now. And that's a long time for me. So keep in mind that I'm a short-term swing trader overall, hence the name Hit and Run Candlesticks. So hit, profit, run, candlesticks, okay? So principle number 1, trade in the direction of the market, okay? Trade in the direction of the market. So what we might consider here is the market currently, and for future use, this is September 24th, 2022. Right now, the market, and my market, by the way, is the SPY S&P 500. We're in a bullish downtrend. So trade with the market. Say we get something like this, some kind of a bullish candle in there. This is not the time to be long. This is not the time to say, hey, let's just make a killing here. That's not really what trading is overall. What we want to do is we want to make sure that trend has turned. So we're going to be willing to give this up down here. That's hard money to make. What we want to do is take a look at when we move up. We're always going to come back and test, maybe sideways test, but there's always a test. I know this from over 30 years experience. We move up again. So we might wait till that full trend is in place. Now let's start trading. Principle number 1, trade no matter what chart we're looking at. If you want to go long, let the market tell you we're long. Don't be a bottom picker. If you're looking to be short, this is not the time to trade unless that trend starts to break. Now, right here, this is not the time to be long. Principle number 1, right here, right? See if this works. Yeah, it does. 70 to 90%. Well, let's back up here, I guess. Right through here, 70 to 90% of the stocks will be behind you on a bullish move. and the same on a bearish move. So I ask you, do you want to trade with an 800-pound gorilla sitting on top of you, or would you rather trade with that 800-pound gorilla having your back? And if you're trying to trade long right here in an overall short market, that 800-pound gorilla is jumping up and down on your chest. It's going to be hard to breathe. So let's trade with that gorilla and trade with that gorilla over here. Principle number 2, trade in the direction of the chart being considered. So I see this all the time. I do coaching. In a week's time, my weeks run Saturday. So Monday through Saturday is when I do private coaching. And when I do the private coaching, one thing that always stands out on the majority of people with troubles is, here's the market running downhill, which it happens to be right now. Again, September 24, 2022. It's running downhill, and every time we get a, let's change this to green here. Every time we get a little bump, they want to run into this stock and make some money. Why pick the bottom? No, I'm not joking you. Anybody in our trading room, I tell them this right here. Look, if you're going to be a bottom picker, send me your address. I'm gonna get on my Amazon and I'm gonna send you a box of rubber gloves, because all you're doing is picking a bottom. And that's just uncool, and you're gonna need some rubber gloves. So don't pick the bottom. Allow that trend to work. Don't worry about these pennies down here. This is risk. This is hardcore risk. Let the trend prove itself. A common statement that I get from this is, well, how do you know it's going to go up? Well, or how do you know it's going to go any further and not fall? If it doesn't go any further, then you definitely shouldn't have bought it here, because you don't want that stock. And if it's going to fall, what's it going to do? Get right back into that trend. Wait for the setup, wait and trade in the direction of the trend. So principle number 2, extremely important. Have you ever witnessed somebody driving down a wrong way road? Most people that's been driving 20, 30 years, you've either done it yourself or you have seen somebody do that. Have you ever felt, if you've done it, or have you ever noticed the panic on that person's face when they realize they're going down a wrong way road? Trading is just like that. You know, if you're trading in a bearish market, and all of a sudden you're putting on some bullish trades, and then you think, you know, everything is just going really sweet here, and then all of a sudden it bails, I want you to stop for a minute and just feel your face, how it heats up, the panic, the pressure. The simple thing is, don't go down the wrong way road. Stay in the right way road. There are signs out there. There are signs. Follow those signs. For consistent and for overall consistent profits, trading with the trend is by far a better way to trade. I would venture to say that any trading coach, any educator will tell you that. Look, sometimes you can take bottom picking type charts, and they do work out from time to time, but overall they don't work out. It's not one single trade you take, it's what your overall account does. And if your overall account is doing this, then you're doing something right. However, if your overall account does this, and then one day it takes away half those weeks worth, these are weeks, by the way, weeks worth of profits. One day takes away half a week, or half those weeks in there, or maybe all of that. Look, I'm not sure how many people are listening to this right now, but I would venture to say that everybody listening should be raising your hand right now. Yeah, I've done that. Of course I've done that. Everybody's done that. Everybody in trading has done that. That's one of the lessons learned. Well, let's stop doing that. So here's what you do. When that happens, stop trading and evaluate what's going on. The majority of traders, what they will do is this will happen. They'll kick themselves, take a shot of whiskey or whatever they do, And then what they're going to do is they're going to trade like mad people, just like mad people. Trade, 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 trade. Try to make that up. That is one of the biggest mistakes in trading. Don't trade like a mad person. Stop, take a breath, and evaluate what went wrong. Now, this is where you've got to be honest with yourself. Don't blame it on Wall Street. Don't blame it on politics. Don't blame it on anything but yourself. Yourself. Evaluate what went wrong. Did you try to go long, picking the bottom without gloves in a downtrending market? That might have been what went wrong. Did you try to go short in an uptrending market? That might have been what went wrong. Take a look at it. You'll be surprised. Principle number 3: plan your trades with targets and protective stops. I'm very serious. I will show you how to trade a plan in less than 1 minute. I'll show you how to put stops in there for protective stop. Well, probably one stop, huh? Protective stop in there. I'll show you how to put targets, all less than 1 minute. I will also show you the percentage, how to figure that's not a percent sign. That's a percent sign. I'll show you how to look at the percentage between where you buy it, the stop, and the furthest up target. I'll also show how to take profits into strength. Okay, this is one of the key. This is so key for a swing trader, short-term swing trader. If you're a long-term trader, it's a different ball game. This actually can be used for day trading. You're just moving it to a faster time frame is all you're doing. That's simply all you're doing there. But other than that, it's that way. And I can show you how to set this up in less than a minute. Oh, yeah. Look at this here. I wrote, I believe there's a severe misconception about targets. Yeah, I think there's a serious misconception about targets. So let's do this here. Let's put this up right here, and then let's put some targets up here. So maybe you found targets with Fibonacci lines. Maybe you found it with resistance. However you found it. Maybe you found it because somebody sent you an email that says, hey, XYZ, Tesla, Apple, one of those, they're going to go to this price right here, right? So what do? You hop in, you trade, and all of a sudden it moves up. Man, this is really cool. And you don't take any profits off the table. And then what happens? It fails. And all of a sudden, wherever you got this hot tip, they're at fault. They're not at fault. Just because there's a target in a chart does not mean that that's where that chart's going to go. Believe me, if anybody could actually do that in a consistent basis, believe me, they would own islands. They would own boats and airplanes and all that cool stuff. They would own cities if they could do that. Just because there's a target that posted somewhere doesn't mean it's going to get there. So many things can change the market in a heartbeat nowadays. So always take profits into strength. If you make it to one target, consider taking partial off that trade, if not all of it, maybe. We'll talk about goals here in a minute and what maybe a little percent might do for you. I think you'll be pleasantly surprised. Okay, principle number 4, wait for the entry setup. All right, this is something I think that is really, really important. A little bit about me, I could care less about getting the sharpest, the coolest entry of all. I'm never a bottom picker. I never get the trickiest entry. There's always somebody that gets a better entry than me, always. And that's because I'm not really worrying about the entry. I'm more worried about what the chart can do for me going forward, not the entry, okay? I teach and I use 3 different entries. Now, there are times when I'll, do something a little different, but 99.9% of the time, I use 3 different entries. Let's see here. Let me change this tool real quick. There we go. One of the entries is what we call 3/8 trap. Now, I can tell you right now, it involves the 3 exponential moving average, and the 8 is for the T line. It's the 8 exponential moving average. It's what we call the T line. I can tell you that I could spend 2 hours explaining that. It's not that. It doesn't need 2 hours, but we always want to show chart after chart after chart, repetition, repetition, repetition. Show how to see it, how to scan for it, how to find it, how to recognize it, the little nuances of maybe how to trade it, how to put candlestick signals in there when you do that. This is really one of the coolest entries there is, and this is what I absolutely guarantee that I can teach you. My next favorite entry would be this one right here. And it's not necessarily favorite number 1, favorite number 2, favorite number 3. These are all 3 my favorite. Below the highest high in 5 days will be very much, and a lot of times it will be the 3/8 trap. So what we're looking for is where price moves up and price moves back. This represents the highest high in the past 5 days, and then we're going to look for that bullish candle in there. Now, what we're going to do along with that is we're going to add, remember the T line, that the 8 exponential moving average, that's the T line right here. What we're going to look at that, and then what we're going to look for is how the 3 exponential moving average will follow price, and then price gets trapped in here. So we're working with a little moving average support. There's also stuff on the left of the side of the chart we want to look at, and then it's acting as support. We watch for that bullish activity, certain chart patterns, that candlestick users like, and then that's where we start looking for that swing to that next move up. Because what do we know about trending charts? All trending charts. There's no almost here. This is 110% fact. Absolutely. Any chart that has been trending for a bit, okay, this right here is going to happen every single time. Once you accept this fact, trading just the door to trading just opens up. It's like, holy moly, I wish I would have realized this years ago. This does it every time. So we've just come up with a terrific way to enter. Very visual, very simple, very easy. The 3/8 trap below the highest high in 5 days. We call this a PBO, pullback opportunity. Also, the breakouts. Now, it's the breakouts of the 3/8 trap or the breakout of the highest high in the past 5 days. So we might be looking at an entry in this area right here. Bottom line, what we're doing is we're looking for an entry in that area that's because you can't catch everything. In a perfect world, you catch every one of them down here. It doesn't work that way. So we're looking for that best area, the best area for us, best area for us, best area for me. Any trader out there will be looking for the best area for them. And then you monitor price. We, teach how to do that. And by the way, this works on both bullish and bearish trades. We've got those setups for it. It's just a super simple way to trade. I went through that phase where I complicated trades. It's not hard. The ankle bone is connected to the knee bone. It's that simple. The foot bone's connected to the ankle bone. There's no need to overcomplicate trading. No need. And man, it just doesn't get any easier, simpler than this right here. Principle number 5, take profits into strength for bullishness, weakness for bearishness. I don't know what it is about traders. I know that I did it. When I first started trading, I dreamed of 3-piece suit, diamond cufflinks, doing commercials, all that kind of stuff. Really cool, top of the world, having my own helicopter. Oh yeah, I did. Every trader does. You secretly dream of, you're going to make 100% on every trade. Your account is just going to blow up, and coin and gold is going to fall everywhere. That really is not the way it is. I had to learn that the hard way. Most everybody else learns that the hard way. I've seen many traders be up 15, 20, 30, 15, 20, 30% in 3 to 10 days. And I've seen them lose it all because they didn't have the best trading tool of all. And that's common sense. The best trading tool of all, common sense. Have you ever stopped to think what 15 or 20% might do for you? I don't know what, and every trade is a little different because everybody trades with a little different amount of money. Okay, so I don't know that. I don't know, who's listening, or some people can only put $100 into a position. Some people can put 10,000 into a position. Some people might put $100,000 into a position. Either way, doesn't matter how much. Have you ever stopped to think what 15 to 20% would do for you if you did that on a consistent basis? What if I told you that you could double your account in 12 months? There is a really simple way to do that. There really, really is. As long as you don't let greed bite you in the tail end. Just think about it. I mean, good grief. If you had a, I don't know, $10,000 account, what would $75 on average a day? I don't know what I'm thinking here. There you go. What would $75 on average a day do for you? What would it do for your account? What would $50 a day? If you've got a bigger account, you're gonna, put more money out there. What would $100 do? What would $200 do? What would $500 do on average? Because some days you're not going to get that. Look, the bear's got to eat too. Okay, the bear's got to eat too. We have to feed the bear every now and then. So it's like going to the zoo. You got to feed the bear sometimes. So on average, if you did that, what would your account look like in 12 months? When you get time, figure it out. It is truly amazing. Truly amazing. Where are we here? Principle number 6, setting goals. I kind of covered that just now a little bit. Just like a mechanic, plumber, construction worker, architect, doctor, it doesn't matter. They need the tools to get the job done right. All right. Look, we know the good tools out there. Metastock, fantastic tool, absolute fantastic tool. Everything you learn turns into a tool. Use it as a tool. It doesn't mean you have to use every tool every time. I mean, just because I go to my toolbox and I get a screwdriver out, it doesn't mean that I bring out a pipe wrench too. If I need a screwdriver, I need a screwdriver. I need a pipe wrench, I need a pipe wrench. Clearly, I'm not a doctor or an architect, right? I'm more this mechanic. That is my background right there. That is truly, truly my background, auto mechanic. And you need the right tool for the right job. Metastock, having the right setups, having the right, say, the mental attitude for trading. Like right now in this market. Again, this is September 24th, 2022, and the market, in my opinion, is nearly junk. It's horrible. There's a lot of shorts to be made. Don't get me wrong. I'm all about the whole shorting side of thing, and you can certainly make a lot of money of it. But what happens is you get the bull that's fighting you, and it creates chop, and it creates a lot of volatility. So you've got to have the tool between the ears to say, hey, this just might not be the the best time to trade. So I'm not going to use my screwdriver. I'm going to go get that pipe wrench instead, or a monkey wrench or something like that. So it's essential to have the right tools to trade. These principles that I'm pointing out, these 9 principles, these are tools. These are tools. They're not physical tools, but they are tools. And without those tools, look, you can have a screwdriver and a wrench, pipe wrench, a scalpel, protractor, anything you want in front of you. If you have no idea what it's used for, then it's worthless as a tool. These 9 principles helps with those tools. These 9 principles helps with the foundation. So like I said today, I'm probably talking about the most disliked subject there is in trading, because just give me the trade. Just give me the trade, the setup that works. It doesn't work long-term that way. It just does not work, okay? I talked about doubling your money in 12 months. That is very true. I've done that many a time. I know many a trader that's doing that right now just by simply following some rules. Principle number 7, know when you're over your head. How many people here, and I don't know if there's any questions or anything, I don't see that. How many people here believe that cash is a position? I don't know. You know, how many people know that? How many people set out trading and all they want to do is trade? Why? Because they have more than one monitor. Because they have a trading account. Because they pay a subscription somewhere. So by God, I'm going to trade. Nobody's going to tell me to be in cash. Heck no. I know better. Well, that's the person that usually does not really know better. Look, there are times when you're best to sit out of the market. There are times when it's best to do that. Remember earlier we talked about this right here. If your account has been climbing, these are weeks, and all of a sudden your account takes a nosedive, maybe, and we're talking, you know, the old thing, bulls walk up the stairs, bears jump out the window. That's the way it really works. So while these are weeks going up, these are days coming down. You know, how many times has that happened? What you do is you go back and you figure out why this happened. One of the things to consider is, should I have really been trading through these areas? Was I over my head? Was I over my head? I will bet you $100 a good steak dinner. This is, well, nowadays probably $200. I will bet you that that's what it comes down to. Is truthfully, if we were to sit down and talk about it, look at those trades, you'd probably admit that, yeah, you know what, I might have been over my head this past week or yesterday, or, you know, whatever day that this happened in. So know when you're over your head. You know, the number one rule to trading is not making money. I hate to tell you that. The number one rule to trading is not making money. That was very poorly drawn there. There we go. The number one rule is not to lose money. Do you know what rule number 2, 3, 4, 5, 6, 7, 8, 9 is? Do not lose all your money. Number 10, okay, let's make some money. If you control losing your money, the winners will come. Look, there's no secret, okay? There's no secret to seeing a bullish trend. Anybody can spot that from a mile away. You don't need any indicators to tell you that the chart is moving up. I mean, come on, really? You don't. So what you do is you simply trade the trend. Now, you need to know how to do that, all right? In a bear market, do you need indicators? Do you need news to tell you the market is moving down? Do we need, I mean, it's not rocket science. It really is not. So you trade it to the downside. When you get over your head, step out of the way. When the charts are set up correctly, charts you can understand, charts you can explain. We'll talk about that here in a minute. Charts you can explain, not because Tom, Dick, and Harry said, hey, this chart's going to XYZ or this number, that number, or going down to this number, that number. Okay. If your account drops, let's get your account back up. So here's your account. You've been doing great. Congratulations. Super trading. Your overall account has been climbing. Sweet. Now, if your account drops one day, not one trade. We don't care about one trade. Everybody has losing trades. Everybody has winning trades. If you have a losing day in your overall account, we're not going to get too excited. If your account didn't grow, okay. If it didn't grow today, even by $1, even by $1, that's all we need. But if it doesn't grow by $1, we're not going to panic too much. All of a sudden, the next day, if it's down, okay, let's stop for a second. Why have I lost 2 days in a row? You know what most traders do? Most traders get out there and trade like a madman. Trade long, trade short, trade like a madman, mad woman, madman. We're human. It's what we do. Okay, we don't really want to know why that happened there. What we're going to do is go kick butt and make it up. This is a big mistake. This is a massive mistake. Stop trading. Don't lose your money. Rule number 1 through 9, do not lose all your money. Most people get only 1 or maybe 2 times to lose all their money in trading, and then you quit trading forever because you just can't keep funding it. You know, your spouse says, okay, enough of that, partner or whatever, says enough of this business. You're not going to lose any more money. This is the dumbest thing you've ever done. So now you have to stop. So do not lose your money. When this happens, take note, stop trading, close everything out. Evaluate, walk around the block, take a day off, go pet your dog, go fishing, go golf, take a deep breath, come back and look at the overall market and look at your trade, look at your losing trades, and now evaluate why they made your account go down. It could be that it was you were just over your head and you got, into that trading frenzy. You got into that trading frenzy. Know when this starts. You have to know that. Principle number 8, stay in your lane. I guess we really kind of talked about a lot of that right there. But 2 places that I think that most traders should stay in their lane is earnings and the Fed, FOMC stuff. Okay. Look, you're the boss, okay? It's your money. The buck stops with you. Don't blame the Feds. Don't blame crooked earnings. Don't blame anything but yourself. As far as I'm an anti-earnings trader. I make no bones of it. You know who should or who can trade any earnings trade they want to trade? Anybody with $1 million, okay? If you have $5,000 in your account, I would run as far away from earnings as possible because that will blow up $5,000 in a heartbeat. But if you have $1 million, you've got some dollars to spread around, so it's okay. You'll figure it out. Same with the Fed, FOMC. Why does everybody insist on sitting in the edge of their seat and trying to predict which way the market's going to go? What's going to happen on a 1-minute chart, a 5-minute chart, daily chart, weekly, whatever. Why do people do that? Do you know, and there's no question there's people listening that made money. There is no question about that at all. I'm sure somebody did. Just remember that half of you didn't, okay? So you're the half that I'm talking to right now. Why? there's approximately 210 days in days of trading in a year by my count. You got natural holidays, you got some vacation days, you got some sick days, about 210, something like that. Okay, 210 days. Do you think you can give up a few days on earnings? I think so. Do we think we can give up a day when the day the Fed's going to give out their big numbers on what's going to happen here, whether the market goes up or goes down? Stay in your lane. I mean, if you don't have, what was it? I was in a bar one time. Yeah, I was in a bar. Believe it or not, I was in a bar one time. I saw a sign on the top of the bar. What was it? Be careful not to let the size of your mouth overload the size of your ass. Yeah, right here. Don't play with this. I mean, if you've got big dollars, and if you're an ace trader, knock yourself dead. Enjoy, make money. Just remember, there are people out there that aren't doing it, and you need to know. And these folks that have $1 million in trading, these folks that are ace traders, trust me, they weren't ace traders at one time doing all this. Okay, they've paid their dues. They've paid their dues. I wish somebody years ago would have told me to stay away from this kind of stuff. I've lost many a money, not so much with the FOMC stuff, but with earnings things, whew, makes me shiver how much. Okay, it's just simply too high of a risk. It just truly is simply too high a risk. Principle number 9, pay it forward. It's possible that this is actually principle number 1. It is possible. A big piece of my personal education and success came from paying it forward, really. And first, I want to talk about what it does for other people. When you share your trade with an explanation, not, I just bought Tesla, I just shorted Apple, that doesn't tell anybody squat. Okay? Look, it doesn't matter if you're in a trading room, if you trade all by yourself, go tell your neighbor. Tell somebody what you did in detail. I bought Tesla at this price. I think it's going to go higher or lower because of why. These are the indicators that I use. This is what it's telling me. You will teach somebody something. There is nothing better in the world, a better feeling when you teach somebody something. When they come back to you and say, thanks for that explanation. I use that logic, kind of like the logic video that we send out for every trade to members, that logic video. When you share with people, they will learn something. And it doesn't matter if the trade wins or loses, they will learn. Now, here's what it does for you. And I'm not going to get into great detail, but years ago, I was given the opportunity to share with people. I was given that opportunity. It was a gift to me, an absolute gift. And let me tell you, when you have to be accountable to other people, and it's not like they're going to spank you if you're wrong. They're not going to yell at you if you're wrong. But anytime you get in front of people, you want to put your best foot forward. We're human. We always want to do that. Always. So what'll happen is before you put that trade out there, before you take that trade, before you put money into that trade, you'll think twice. You'll double check your work. You'll go look at the market. Am I going long in a downtrending market? Am I trying to go short in an uptrending market? Am I doing the right thing? Oh man, this thing has earnings tomorrow. Do I really want to do that? Oh, jeepers. There's an FOMC announcement this afternoon. Am I convinced I know what's going to happen to the market? Do I believe in the indicators I use? You'll think about that stuff. It will make you a better trader. Like I said, I was given the gift to be able to share with people in a trading room. And it was a true gift. That was the greatest gift ever given to me, is the ability to share. And truly, truly help my sharing, okay? Truly, truly. Hey, everybody. I want to thank you for listening. Again, my name is Rick Sadler, the founder of Hit and Run Candlesticks. I truly hope these 9 principles hit home. Maybe one of them hit home. That's all it takes sometimes. That is truly, truly all it takes. I want to thank everybody for being here. Absolutely. Thank you, Jeff. Thank you, Metastock, for allowing me to come on here. For some of you, it might be late in the evening. For others, it might be very early in the morning. Thank you so much for being here. You've got a great crew of educators coming your way, a great crew of educators. I do want to remind you, and hey, Jeff, if you're there, I've got a link. I don't know if you have the link, honestly.
I don't have a link, but I can.
Where do I post it at?
Under chat, if you say type message off, you can actually type it in there, or I can type it in for you.
There's a link right there. That link entitles viewers of this video, or viewers of everyone here today, viewers in the future. If you see this video, use that link, and this entitles you to 30-day trial to Hit and Run Candlesticks. Again, if you cannot be in the trading room, and I understand not everybody can be in a trading room all day. Not everybody wants to be in a trading room all day. I get it. Starting Wednesday, this coming week, the 28th, I will record many classes during the day, and I will put them out there and send them to members or trial members of Hit and Run Candlesticks. Do not forget, you will receive a calendar for setting up private coaching. I do this on Skype, and we spend an hour together basically asking any question you want, and I will answer. We'll share charts. We can do it live during live trading. Whatever works for you. But the rounded bottom breakout, Metastock has a what do you call it? A system, a package. There we go. Has a package that shows the Hit and Run Candlestick rounded bottom breakout, and a few others, and we can cover those. So anyway, I'm going to say thank you, Jeff.
Thank you, Rick. Appreciate it.
Yeah, you bet. You bet.
All right. Let's see. Yeah. I went ahead and posted that link also into the YouTube chat room.
Thank you very much.
That would be available as well. And yeah, it's a free 30-day trial to the room. You should definitely go do it. What are you waiting for? Go do it.
Yeah, do it now. Right. Do it now. Do it now, and even Sunday I'll.
We did get one question though. For Principle 4,
go ahead.
Na wants to know, are you looking for a 5-day low on Principle 4?
On Principle 4. Principle 4.
Going short, are you looking for 5-day lows? Exactly.
No. Oh, good. Super question. No, actually what I'm looking for is below a 5-day high. So I'm looking for, no, I'm sorry, I said that wrong. It's early here in the Midwest. I'm looking for above the 5-day low. So I'm looking for an entry on a lift up above the 5-day low. Most everybody has probably heard of a continuation pattern. The next popular way to call a bullish continuation pattern is a J hook. The opposite of a J hook is a bearish H pattern. So those are my two favorite patterns. They're just continuation patterns within a trend is all they are. So bullishly, we're looking for that bullish pullback. Bearishly, we're looking for that pull up. PUO, pull up opportunity. There you go. No, that is actually what we call it. A pull back for bullishness is a pullback opportunity. A pull up for bullishness, a pullback is a PBO, pullback opportunity. A for bearishness, a pull up is a pull up opportunity. And I mean, look, 30 days, I'll cover this, whether you can be in the room or not. It will be on a recording for you in detail, and you get to keep it. It's yours. You know, I want to help. The reason I want to help is because every time I do this, I learn something from myself. I'll do it live in the trading room. That means members will ask questions. I always learn something. I always learn something. Remember to pay it forward, okay?
All right, last question.
Yes, sir.
Or last question we have time for anyway. Rick, do you believe in expected value theory for trading? From Michael.
The expected value theory?
Mm-hmm.
Honestly, I'm not sure what that is. I mean, value, like, you know, like down the road, something like Google, maybe. Google, I think, is nearly on sale. Do you mean the value of it a year from now, 2 years, 3 years, maybe? I'm not completely sure. Yeah,
I'm not sure.
but
okay.
I will say this. I will say this. Do not lose all your money right now. Please don't. One of these days here, I honestly believe we are going to have the biggest gold mine we've ever seen. Look, the market will go up eventually. Eventually it will. And some of these big players, they're on sale like nobody's business. I do not think they're a buy right now. I do not think that. But believe me, I'm creating a watch list. We talk about it every day of some of these big dogs in there that they're game changers for you. So.
All right, cool.
Yeah,
thank you very much, Rick. I'm going to talk a little bit about the add-on we made for you, the patterns for profit. But really appreciate your coming in. Let's see. Somebody's asking again for the link for the trial. Let me just copy that in here, and I'll paste it over. Rick, great having you. Thank you.
Thank you, Jeff. Appreciate it. You guys have a great day for your webinars. I know that I'm going to sit on. I think the last one I can't make it, but all the others I'm going to be here listening.
Okay, you're welcome too. All right, very cool. So
Thank
you guys should be able to see my screen again, and a very beautiful box that says Patterns for Profit on it. We did create, not only, Rick talked a little bit about how his favorite patterns was like the 3x8 scan and the 3x8 exploration, but we added that to a pattern that we already had. So in the Patterns for Profit that we designed with Rick Sadler, it has the rounded bottom breakout, the T-line squeeze, the T-line bounce, and the pin boss setup, and the 3x8 trap. And because we've created this in Metastock, we do have the ability to go in and scan for them and identify them on a chart, as you can see in here, and show them. So a little bit earlier today, I did do a little bit of a scan for the 3x8 trap. And I don't think I have one of the stocks that came back was AbbVie. So actually, if you wanted to see the complete list of the scan I ran, I just ran the S&P 500, the NASDAQ 100, and the Dow 30. So you can see there's a little bit of a report here. This will just scan for 3x8 traps. The other scan that you can run will scan for the other patterns, like the pinball setup and the rounded bottom breakout and that kind of stuff. But if I right click here, I can go in here and just go to the report section. And you can see we have AbbVie, Citrix, General Mills, JM Sucker, Regeneron, and Twitter. Those are the stocks that came up with buys today. The scan took just a couple minutes to run. It wasn't very long. It wasn't a lot of instruments. And this is basically AbbVie that came up. And so you can see in the past here we had some 3x8 setups with these blue bars. Here we're having some new 3x8 setups. These 3x8 setups really didn't confirm. But back here in the past, we have had a lot of 3x8 setups. So you can see where they're at on the chart, what they're looking like. One of the other things that you can do is actually look at what we call an expert commentary, and to kind of give you an explanation for what's happening. So I'm going to open that up real quick. Right here, the trend indicator reading is bullish. The 3x8 combined with the trend indicator is detected on the current bar. If you're looking to take advantage of that, you could look to do a buy signal. You could do a bullish option strategy. And this right here, and the reason I actually wanted to show this one when I was showing it off is it's Rick's favorite strategy for trading. It's his favorite setup. Talks a little bit about how to go into your trade plan and that kind of stuff. But with the add-on and with the Power Metastock, you can easily go in. And out of those 523 stocks I scanned, I just had the 6 or 7 that had a setup. I can now go through them. I can cycle through them. I can kind of see what they look like on the chart, decide if I want to take a trade on them instead of looking at all of those. I love Metastock with its ability to just allow me to focus on what we're doing. So with the patterns for profit, what we're going to offer is it includes those 2 explorations, the what we call an expert advisor, which paints all the stuff, gives you all the commentary, the layouts, and 5 unique patterns, including Rick Sadler's favorite pattern of all time. So very, very good add-on. It's been something that we've been marketing for a number of years now. Normally we sell it at $7.99 as a one-time cost, but we're going to do a discount here at the summit. If you buy it here at the summit, what we're going to do is a $6.99 special. We're going to back it with our 30-day money-back guarantee. So if you try it and you don't like it, you can get your money back. It's a very good risk-reward opportunity for you. Allows you to play with it. If you don't have a copy of Metastock, I'll remind you, Metastock's been rated #1 in its price category for 29 years in a row this year. And it's been rated #1 because it's so good at scanning and helping identify those patterns. So to take advantage of this today, Joel, okay, can everybody see my screen? Because Joel says he can't. Joel, if you're watching on a laptop, try swiping left or right, and it'll alternate between me and ahead. If you're looking on a tablet, that's probably what you're seeing. So, $7.99. I think that was good. Okay. Yeah, okay. So on the tablet, if you're watching on a tablet or a phone, you have to swipe. You can either see me or the screen, but not both. That's all. So, and yeah, that's what was happening. Okay, cool. So $6.99, 30-day money-back guarantee, 800-882-3040, or metastock.com/sales chat will get you there. So in addition, that's going to be part of a Summit Action Pack. With our Summit Action Pack, you get Rick's Patterns for Profits. You're going to get the Guy Cohen's OVI, which is fantastic. The Power Bundle that Daniel Sinnig's going to talk about in just a little bit. 3S Code. Some really good training from another guest today, Oscar Carboni, Barry Burns, Top Dog Trader. All of those add-ons. Plus, you'll get 2 years of Stocks and Commodities magazine, 3 months of LearnMetastock.com, and Unleash the Power of Metastock. So normally, that's a lot of stuff. Normally, that would be $4,429. If you buy it as part of our Summit Action Package today, you'll get it for $1,992. So you can do that at metastock.com/summit deal. You can call us at 800-882-3040, or you can visit us online at metastock.com/sales chat. So Carlos, thank you for your question. That's just the add-on for Rick Sadler. It doesn't include Metastock, but if you don't have a copy of Metastock, which it sounds like you don't, you can actually get a free trial as part of that. Metastock's available on a lease. It starts at $70, $69 per month. So we'll give you a free thing with your 30-day money-back guarantee. So great question. If you have more questions, I'll answer them if you type them in as we get Guy started, or you can go to metastock.com/sales chat and we can send you all kinds of other information. Thanks again. Okay. All right. Let's talk about Stocks and Commodities Magazine. Well, I do want to say thank you to Stocks and Commodities Magazine, or Technical Analysis of Stocks and Commodities, for sponsoring today's event. They've been great sponsors of the Metastock events since we started them over like 11 years ago or something. It's a great magazine. They have 17,000 different articles in their archive, 1.3 million subscribers. They've been making it since 1982. Hello, Guy. If you registered today, if you're watching on YouTube, go to metastock.com/tradersummit, and you can register and you get a bunch of freebies, including a free month of Stocks and Commodities Magazine. And anybody that spends more than $300 at the event today will get a 2-year subscription. That's compliments of Stocks and Commodities. So you can go ahead and get that at metastock.com/tradersummit. So there you go. And then, of course, we talked a little bit about Metastock. We'll talk a little bit more about it later. We're doing no countdown. Let's get to Guy. Guy is our next presenter. Guy I remember hearing about Guy several years ago when he was talking about his OVI indicator, and what he does with his indicator is really cool to look at option sentiments for US-based options. I'm not going to kind of spoil it for him. I'll let him talk about it. But how you doing today, Guy?
I'm suffering. I've given up coffee, and it's really painful. I'm having a bad day, so I need you all to kind of G me up a little bit. Who here has given up coffee ever before? Give me a wave if you've ever done that. Can you see me now? You can. Anyone? I don't know whether. Yeah, Larry and Satvir. Boy, it's.
Sorry.
I'm not even that bad, you know. I'm not even that bad with coffee, but boy, it's. Yeah, I'm having it's rough. I'm telling you guys, headaches and yeah.
Yeah, no. Coffee's rough to get rid of. I just don't know why you'd want to give it up. It's my favorite part of the day.
No, I just a little bit of balance kind of thing. I've also started this Wim Hof breathing thing as well, which is very cool. But the next stage is the ice baths or the cold baths, so that's going to be fun too. Yeah, it's a midlife crisis, Jeffrey. What can I tell you?
I'm asking for a friend, but at what age should I have that?
What, a midlife crisis? Well, I don't know. I just figured that I'm going to get, super lean and really, really on it. I have a busy life. I have this stuff and I have hedge fund stuff and I have 2 young kids and I'm no spring chicken. So, not like you. Anyway, Jay never went back. Look at this. I know. I can handle the caffeine, Michael. It's just I don't know whether it's good for me anymore. Anyway, we'll talk about this. Anyway, I want to say hello. Thanks, Jeff. You've literally left me all to myself.
No problem. Yeah, the floor is yours.
The floor is mine. Nice to see you guys. By the way, I always like talking with you Metastock people. I'm going to do something pretty laid back and relaxed there. By the way, if you have seen me, those of you who have seen me before, seen my market reviews, we have nailed this. We do usually nail it, by the way, but we really have. So if you want to be familiar with me and my work, obviously we work closely with Metastock, but our commentaries would have saved you a bundle or maybe even made you a bundle. But we'll talk about that as we go along here. What I'm here to talk about today is what we call the big money strategy, and it is not the next big thing, let me tell you, because this has been around for a little while and it's a tried and tested situation. Once again, thanks to all the guys at Metastock for inviting me around. You know about the whole thing about stocks and options have large potential rewards and large potential risk, etc. But today's really a training session. Me and Metastock, well, we go back a while. Jeff used to come round to London and we used to have these big breakfasts and stuff like that. I'm hoping for that to happen again. Obviously, my breakfasts are going to have to be kippers and avocado these days. But Metastock is literally the only partner that we advocate on our website at all. So that says something to about Jeff and all the rest of them at Metastock as well. So again, this is not about the next big thing. So that's what you were coming for. That's not what's happening. What it is, I want to really highlight the way that we go about trading in Wise Traders. We go about it in a very, very simple but logical way. First of all is market timing, because provided you don't completely screw up your market timing, you're going to have an advantage. Now, getting market timing is often seen to be something that's impossible. It's not impossible, but there are levels of discretion that you're going to have to learn and create a skill set for. The second piece of our puzzle is stock selection, and for this we follow what we call big money, and we have special ways of doing it, which I'm going to go through in a second. The third part of what we do is our trade plan. This is a game changer. This trade plan, and even if someone just comes to me and learns the trade plan, it's going to change their trading results forever. But today, with the limited time we have, I'm just going to concentrate on the stock selection piece of what we do. Now, when it comes to the next big thing, whether it's crypto or something else, well, I'm not going to bash it because you can short these things. But really what I think we want to avoid is the roller coaster. We want to have something that is far more repeatable. So that's the big word I want you to learn here. So we want the same, if not bigger, upside than whatever the next big thing is, but we want it to be a repeatable and proven strategy. And I don't like to do too many things. I like to do something that's well researched, well based in logic, and then we can do that over and over again. When you repeat something, you've got a business effectively. So what I'm going to do today is I'm going to go through the biggest secret to the success you should be having, how to grow your account consistently, why prices move. Now, the mechanics of why prices actually move is very important. And once you know it, you'll never look back. Then I'll show you the big piece, which is the big money footprint, how we follow big money. How do we determine it's big money and what's the result of that? And then we'll talk about some people who have done remarkably well using just this strategy and how you might be able to follow them as well. I'll do a little demo on the best repeatable setup in a minute. And then also we will talk about the bonus, which is my game-changing trade plan, which I just told you about. So I stay to the end and I will show you my trade plan, which regardless if you love me, if you hate me, this will change your trading forever. Okay, so how have traders more than 3x their accounts in just a few months, whether it's Capri, Sorrento, Goldman's, Roku, General Electric, Advanced Micro? These are all the very same patterns. Pat almost tripled her account in over 3 months, in just under 3 months rather, and she did remarkably little to make that happen. So I'm going to talk to you a little bit about the techniques that she used. And this is when she, sorry, that was tripled, and then literally 8.5x'd in 9 months. So did it again, which is pretty cool, turning 3,800 into 33,000 in 9 months. I just want to get your attention here, guys, just to make sure that you realize what can be done when the markets are right and when the technique is right. And again, 3 ladies have all done multiples of their accounts in a matter of months, one 15xing and one 8.5xing, one 3xing in a very short space of time. They all actually started with small accounts as well. Joyce only had $3,000, 3x'd in 9 months. And there's a whole bunch of what we call big money footprint traders. We all follow what we call the big money footprints. That's what I'm going to show you today. Now, I'm hoping in a very short space of time, we're going to be able to transform your experience of the stock market, get it really nice and tight in there as well, and how you can copy them. But the big thing as well, these people don't make big risks. They don't trade that often either. So by the end, you'll see how they've done it and how you might be able to think about doing it as well. So let's go into the biggest secret to your success first of all. So let's talk about the best, if you like, of the next best thing, which could be Bitcoin, say. Now, it's never been my kind of deal. By the way, it's down a lot more than this little snapshot here. But the problem with these things, like Bitcoin or whatever, is that lots of people make predictions about them, and they haven't got a clue what they're talking about. So John McAfee, for example, he said in 2017 that Bitcoin would reach $1 million by the end of 2020, or he'd eat his ... Now, and he'd do it on YouTube or something as well. Now, luckily, no one had to watch him do that. He actually didn't fulfill his promise either. But it's fairly ridiculous when you see these people making these big social media influencers, and he's kind of like one of those, making these ridiculous predictions. And a lot of these people are, by the way, teenagers with no experience, no foundation, no technique, no nothing. And yet the herds follow them in. They've got no analytical basis, but they do have agendas, don't they? So if these people are loaded up with Bitcoin or whatever it might be, they're going to pump it, right? And you've just got to be careful about this. So no analytical bias, no experience, big agendas. Now, when it comes to something like crypto, yes, there's technology there, and we're trying to figure out how we're going to use it best, and et cetera, et cetera. But as a currency, people, it is unstable, it is untenable as a currency in the short term, maybe even the medium term, probably even the long term. So don't be fooled into that. We've just seen how weak it is as a potential currency just now. So just be aware of that. Now, here's something completely different, a fantastic stock, Apple. Now, when Bitcoin had gone down by 72%, Apple had only gone down by about 13%. Now, obviously, that's gone down a bit further since this snapshot. But it's the point is, it's a much more tradable security. Now, if you want the excitement of next big things, well, stocks are very exciting, by the way. I mean, here's Overstock, tenfold it went up, tenfold, 10x in 4 months. Okay, so stocks can do that. Obviously, different stocks and can do different things. And that came off a short squeeze, funnily enough, which is one of our filters, fun enough. And there's Tesla, very exciting if you like that kind of thing. I don't really like Tesla. Now, you might wonder why I gravitate to stocks and why I urge you also to gravitate to stocks. Well, if we look at the other asset classes, real estate, wonderful, great, but illiquid, and it can tie you into debt and keep you a little bit illiquid too. And in a bad market, it's really difficult to get out of. But you should have it in your portfolio somewhere along the line. Bonds and commodities, well, quite specialized. Crypto and Forex, roll of the dice. Let's not get into it, but I agree. Let's be firm on that one. There is no mathematical or empirical edge to be had from crypto or Forex. That I can promise you from a mathematical point of view. And then you have the alternatives like, classic cars, fine wines, art, etc. And again, it's kind of a specialist game. So what that leaves you with is shares and options, if you like. And these provably can give you an empirical edge, you and me being private investors. And this is why they're so good to trade. I'll tell you a bit more in a minute. But here's another game-changing insight, and that's that stocks can move just as much as NBT's next big things, like crypto, but with one crucial difference that is the difference. And that is stocks can be analyzed with a repeatable strategy. And the big word you've just got to think about here is repeatable. Because every single one of these charts that I could show you here, whether it's Capri, Sorrento, Goldman Sachs, Roku going the other way, General Electric, Advanced Micro, they're the identical same setup. I've just messed up my thing there. There you go. Pressed escape too many times. They're the same setup, one way or another, bullish or bearish. And that's what we do. We focus on just one setup. So the most important question you can ever ask about any trading strategy ever is this: is it repeatable? Now, on top of that, you could ask if it's logical. That's also important. And is it simple? Because if it's not simple, you're not going to be able to do it. Just give me a wave if this makes sense, this resonates with you. It's got to be simple, otherwise you won't do it. It's got to be logical, otherwise it's based in nothing and based on anomalies, which won't work forever. And it's got to be repeatable. Just give me a wave if that makes sense. Okay, good. Got some waves there. Cool. Very, very important. Repeatability is the big secret to your success. Now, a diamond dealer has a repeatable success because they've been to diamond school. They know about the cut, the clarity, the color, the carat, the source, and they know how to mark up a diamond. They know how to buy it, they know how to sell it, so they get a markup, 100, 200% of the time. Coca-Cola, the biggest repeatable business probably in the world, as it were. One recipe, obviously mutations of that now as well, but one recipe in that vault in Atlanta, and it's worth billions. But there's a crucial other piece to this, and that is this: it's not just repeatable, but it's also scarce information. Now, scarce information is another thing I really want you to write down. Scarce information is also a critical key to you holding an advantage over other people in the market. Coca-Cola's scarce information is their secret recipe. A diamond dealer's secret recipe, or scarce information rather, is their diamond school training. KFC's secret recipe, or scarce information, is their secret recipe worth billions. And what you want to have here as well, you want to develop a repeatable strategy, and it's going to be all the more powerful if you are using scarce information. Sorry, I keep on pressing the wrong button. It's that coffee thing, I'm telling you. Okay, so whether it's Boeing or Halliburton or Chubb or Boston Properties, every single one of these was using scarce information in the same setup. So important for you to recognize. I will show you exactly what it is. And again, this is what Pat does. Not going to go into it too much, but this is what my people, my members do. So the secret to your success is repeatability and scarce information. So what about growing your account consistently? Well, keep it simple. And here's the big lesson that you really got to take on board, because I know we're in a whole charting thing and we've got technical analysis and all this, but at its core, trading and the markets are all about people, buyers versus sellers. And your job and my job is to be on the right side on who's winning that tug of war, buyers or sellers. Right now, obviously in the market, it's sellers, and it's very easy to see. What I would suggest is this: regardless of what you're using, regardless of anything, and Metastock's a fine piece of kit, but even with Metastock, keep It's simple. If you've got a chart that kind of looks like that, then I would suggest that's the wrong way to go. What you want is a chart that's much simpler. MedStock have my stuff that can show you what buyers and sellers are doing so that you can systematize a repeatable strategy. Here's George going, I can vouch for Dr. Cohen's magic system. It's not magic and I'm not a doctor, but 88% profit in the year is pretty good for someone working full time. So let's talk about the secrets of growing a small account here. If we look about, Pat and Chloe here, big winners in my membership area. They are trading just over once a week on average. Now they do use options as well, but in a very conservative way. So it's all about quality, yes, not quantity. So again, quality, not quantity. So that's the secret there. You want quality, not quantity in that. Now we're going into why prices move. This is a very important part. And once you've learned this, you'll never ever forget it either. Quick bit on me, my pedigree, I'm a nerdy professional trader. I love doing things like the Rubik Cube, making programs, trading, made over 7 figures and thousands of dollars of 1,000% in profit in personal gains, including 14,500 to 188,000 in just 6 months. I'm also the founder of Wise Traders, and we exist to create trading systems and a platform to help us and you trade better with our strategies. That's all we do. We don't venture into anything else. You may have heard of me, via other MetaStock things, or on Reuters occasionally, or Bloomberg, or whatever. Or my books. You might have picked up one of my books, Options Made Easy, or The Bible of Option Strategies, my 2 bestsellers. A couple of others I've written as well. My background is that I created stuff. I created a platform. I licensed it to the New York Stock Exchange for 9 years. I did data analysis work for the International Securities Exchange, that's NASDAQ now, who was my client. And again, don't overcomplicate. It's all about people. This is what I got from my big money insights. And what this has all led to is creating systems that are based in logic and that are repeatable. And also this translates also into the institutional world, where my models have been beating the S&P hands down for a long time. This is me in blue. This is the S&P in red over 17.5 years. And this is us over the last 2.5 years, where the aim of this particular model was to beat, or is to beat, the benchmark, the S&P. Are we doing it? Well, by about 3-fold, which is not too bad, is it? That's in the last 2.5 years. And that's why I get the big fees from the publishers and from the professional money managers as well. But Wise Traders is all about the family that we have of elite private investors, some of whom are a part of you guys as well, because we all follow the big money footprints and we change people's lives in that result. We transform results, transform lives. And again, I won't go into this right now. From my perspective, yes, of course, it's about the money, but it's also about knowledge. It's about being able to keep on driving forward and hand down that knowledge either to you guys or to my family, and also make some money for my family when the markets are ripe for the doing. So we are going to talk about why do prices move. Well, let's go into it. Picture your dream home. Imagine it's only worth $950,000. That's quite cheap for a dream home these days, but it's the point. It's the learning point that's important. So I'm going to go through 3 scenarios, and each scenario contains a very important trading lesson. So please write down wherever you can. So scenario 1 is that everyone's bidding the asking price, the same. And the issue with that is that when you offer 950 and Bob offers 950 and Sue and Jim offer 950, what's happening to the price? Nothing. Price is staying the same. Same would apply to shares. So learning point is that big money on its own doesn't move the price, does it? Give me a wave if any of this resonates. Big money, you can make as many offers as you like, but if they're all at the same level, at the level that the price is at right now, the price isn't going to move. So the second scenario is when we have some new public information. Google opening an office or big headquarters 5 miles down the road. What's going to happen to the area? Well, guess what? The area is going to get improved, isn't it? It's going to get nice, big, fancy parks and roads and restaurants and gyms, and there's going to be a whole load of people, well-heeled, being paid well, who want more homes. Demand's going to go up, price is going to rise. So Bob figures that out and starts raising his bid. Okay, he raised it to 960, Sue 970. You raise your bid to $990,000. Then Jim wants it. He's prepared to pay $1 million. Now you offer 1.1 million. What's happening here is a classic bidding war. So the learning point here is that big money alone didn't move the price, but big aggressive money moves the price. Just give me a wave again if that makes sense. Big aggressive money moves the price. Now's the third scenario, and this is called scarce information. So Bob has previously bid 960,000. He knows about the Google thing, but he's gone around the area. There's a little old couple who live around the back of this property, and they're prepared to sell him their piece of land confidentially. No one else knows. It's not on the market. Only he knows. And of course, he realizes that could add tremendous value having both together. He could build more homes on it. He could extend his garden. He could do all kinds of things. I know you guys say yard, not garden, but only he knows. So with that information, he knows it's worth potentially more and can bid more than anyone else. Now, if someone else has got scarce information, you don't, then that's going to get you. They're going to get your dream home. So the learning point here is very simple, and that is that information is very valuable, but scarce information is the thing that changes the game. Scarce information. So I put that. And scarce information, of course, means repeatable profits. Hence the diamond dealer, hence Coca-Cola, hence KFC, and hopefully, by the end here, hopefully you as well. Scarce information changes the game. So your aim is to be the diamond dealer of the stock market. So that's why prices move. Now we're on to the big thing, the big money footprints. How do we follow big money? Well, this is everything that I'm about, everything that we're about. So elite investors are trading in the markets with billions of dollars every day. That's in addition to the billions of dollars traded by everyone else. Their activity leaves a trail that's pretty much invisible to the everyday or to the untrained eye. But if you can find that trail, if you can distinguish that trail, again, the game changes. You're going to be more consistent. You're going to be you're going to save a lot of time. You're going to eliminate overwhelm and remove all the guesswork. Now, for me, how did I figure this out? Well, I did an MBA, a finance MBA, back in 1996, 97, after a period where I was quite an ill little fella. That MBA would now cost you $57,000. But the two professors that were key in that MBA said, and I don't even know to this day whether they were joking or whether they're just being pithy or whatever, but they said in separate lectures, if you want to make big money, you got to follow the big money. And they weren't meaning the pension funds, insurance companies. What they were meaning specifically, they said, follow the options traders, the people who are prepared to risk more in order to make more. Give me a wave if that makes sense. Options traders, if you can figure out the right ones, are prepared to risk more because they think they are going to make more. Why? Because they think they got the information. Now, I figured that this would be a tremendous thing to do. I was going to set my goal. I'm going to follow the options traders. But I soon realized that's not an easy thing to do. It would take years of research. It would take billions of rows of data. It would need quants. It would need specialist programmers, servers, expertise, and it would cost millions. I had to find a way, though. But in the meantime, there were three other big money footprints for outperformers that we're going to go through right now. So again, write it down if you haven't done it yet. So here are the three big money footprints. Okay, the first one is very easy. It's the presence of big money. That's not very difficult. The second one is the A word, aggression. So you remember you need that aggression. You need people piling on top of each other for that. And then the third one is something that you don't know yet, but that is the presence of key levels. I'm going to go through all of these right now. Big money footprint number one. Big money footprint number one is very, very important. It's called recent volume acceleration. Now that can either be green bars with higher prices or red bars with lower prices. And what we're looking for is bars towering over what's just gone before. Now, if we go to an old stock, General Electric is not known for being a particularly exciting stock, but this stock went up 83% in 5 months. And if you look at where I've put the footprint on there, that's a marker. It actually happened with earnings, because often these things do. But that's a marker, one of the markers, and that's what has then been part of the story in accelerating the price by 83%. Second big money footprint, number 2, is aggression. Okay, now what I mean by this, watch carefully, is I want to see a pretty big move in most cases. If I see a nice big move before, and then I get a pause, here's what happens. There's lots of eyeballs looking at that. Once a stock jumps, particularly if it's after earnings, by the way, the stock jumps at earnings, eyeballs are on that, on professional trading desks, hedge fund trading desks, and also amateurs as well. Everyone's looking at what happened there, what happened, okay? Now, if it's followed by a pause, like a flag or consolidation, even better, because the next move up could well be a good move up, and we'll go into that in just a second. Okay, so again, this is not in isolation; these are together. So with ATAR, we have a big move up. It doubles, but then it's followed by another move up afterwards, 124% in just 4 days. Don't be put off by a stock that's already moved quite dramatically, especially if it's been moving off a key level or a base. The third big money footprint is, again, all to do with eyeballs, very important. And what it is when a stock goes through and stays gone through a key level, like a 200-day key moving average, like a 50-day moving average, even the 20 in certain cases. I prefer the 200 and the 50. They're my favorites. If it does, again, alarms and alerts are triggering on trading desks. Paul Tudor Jones made the 200-day moving average famous. He wouldn't trade a stock below its 200-day moving average. He wouldn't buy a stock below that. So you know that people are watching. And if people are watching and the circumstances are right, then that's going to be fertile ground for another move up. Give me a wave if that makes sense. Not a dead cert, by the way. We're not saying, oh, this is going to happen every time. There's got to be fertile ground. And I've got to show you what that fertile ground is. But the big money footprints are a very good start. So again, a recent breach of a key level could be up, could be down. Now, with a firm, it took a few breaches, but then it finally did, and then it moved up in a pretty big way. Actually, a lot of it fueled by earnings as well as it happens. This was the 50-day moving average, and that moved 71% in just 12 days. And there's literally thousands of examples you can see of this. But where the real power comes is when you put 2 or 3 of these big money footprints together. You might not always get them all. If you get them all, brilliant. But if you don't, if you want to expand your filtering horizons, then you need to be a little more flexible in your parameters. But with GE, have a look at this. Big money footprint number 1 was big money, i.e. the volume. Big money footprint number 2 was the aggression, as in a decent rise in the recent past. There it is, going through that key level. And then big money footprint number 3 is the key level being breached and held. It breaches it and stays breached. It doesn't go back there. Okay, so it stays up there. And those 3 are really what set the scene for that big rise, 83% in 5 months. The same with ATER. It had big money footprint number 1. These little bars, by the way, they look tiny, but they're not tiny compared to what went on before, are they? They would be towering over. And then you had the big move, and then you had the move above the key level, and then it went even further. With a firm, the same thing. You've still got, we talked about the third big money footprint here, but you had decent move before, and you had big volume in the last 30 days as well. Again, these tower over what went before, enough to constitute big volume as well. Obviously, they were then dwarfed by what happened after that. Now, does it work in the other way, other direction? Well, yes, it does. You saw with Roku earlier, I'll show you again. But with TAL, this was the 20-day key level, down big time. Earnings was the catalyst there. Big volume in the previous 30 days. Look at that, down big volume there, that big one there. And then through a key level as well. So that precipitated a 64% move in just 32 days. Big price stocks like Bill, yes, it applies to those, 87% in 3 months. And small price stocks, you know, $5, $10, yes, you can do that as well. That was a bit mining as well. All those big money footprints present with those. Beyond Meat, this was cool. This was a short squeeze. Love that. If you can combine these big money footprints, by the way, just give me a wave if you can see the big money footprints here with Beyond Meat. Just give me a wave. You can see them already, can't you? Just wave at me furiously if you can see that, because you should start to be able to recognize that. When you get one of those and it's a short squeeze as well, you're going to have a violent move up. And with Beyond Meat, we got a violent move up, 57% in just 2 days from that breakout. So if you think about it, you could already make filters for volume acceleration, price surge, and key levels. What's left is scarce information, because that's what's really going to tip the balance for you. And one other thing I'm going to tell you about in a minute. Goodrooks was another short squeeze, and this was pretty cool. Can you just recognize what I'm talking about? Look, 1, 2, and 3. Can you just see it? Just give me a wave if you can, because super important if you can. This is all we look for. This is the only thing we care about. And the moves are great. So 25% profit in 13 days. Again, here's Rohan saying he loves the short squeeze filter, loves that in addition. So you've got that, and I'm going to go on to scarce information in just a moment. But what I want to also make mention of is that you do definitely also need a trade plan, a robust trade plan. We have a 4-step formula, and I will cover it at the end of the session. So stay with me. I'm going to cover that one because it's a game-changing thing. So is it possible to 3x within a few months with stocks and sensible, smart leverage and stock options? Yes, it is. It's happened over and over again. Whether it's Sorrento, Capri, Goldman's, Roku, General Electric, Advanced Micro, these guys doing very, very well. I won't go into these guys, but they're pretty cool, and these guys as well. The idea that you really want to think about is how you can automate this using filters. So filtering a bunch of stocks into a handful of high probability, big money footprint setups, how to execute the trade plan so you can start being consistent. I'll show you a bit about that in a minute. And then how you have those tools and training that make you confident and consistent. And then you don't want this to take too much time. You want to be able to do the other things you want to do as well. And I cover that all in my Flag Trader program. But here's how it feels. You've got a stock like CRISPR here, and all the big money footprints are there. There it is, there's your breakout, and 30% rise in 7 days. Just off a button that you can press, you can find these, which is pretty cool. Again, these people are doing it. So let's talk now about scarce information, because information is valuable, but scarce information is the game changer, is life changing. So let's have a look and see how that works. Why do I get paid the big sums by money managers and publishers? Well, scarce information. Why do we consistently outperform? Scarce information. Have a look at this. Over the last 2.5 years, we have beaten the S&P by 3x with real dollars, with professional money managers, with a system based on scarce information. If you were to go back to 2005 and push it all the way forward, same model, obviously real money started in 2020, you would be going at a 12x. Pretty good. That's the proof in the pudding. There's nothing more proof-worthy than actually testing it in an automated environment with real money. It doesn't get much better than that. It doesn't get any better than that. And that's why obviously we have institutional work. So the power here is of scarce information. And this is what my professors were talking about when they were talking about the options traders. They were talking about scarce information. They didn't say it was scarce information. That's my interpretation. These options people with scale are prepared to risk more because they're going to make more. Why do they think they're going to make more? Because they believe they hold valuable information. And did it take years of research? Yes. Did it cost? Does it require billions of rows of market data? Yes, it does, because the options data. Does it require quantitative analysts? Yes, it does, and programmers, specialized, and industrial-sized servers, and expertise. And has it cost me millions of dollars? It has cost me millions of dollars as well. But this is the end result. The end result is a line that goes from -1 to +1, representing options activity, pricing, and sentiment. And this line has been responsible for Roger making about $700,000, transforming his retirement life. And I'm now going to tell you all about it. This scarce information, this line, enabled Tobias from being quite an awkward customer to winning 24 out of 25 trades. This scarce information is my options volatility indicator, the OVI. Why is it scarce? Well, one, it's patented, which is highly unusual for software or for that kind of thing. So it's patented, number one, and B, only a few people have it. We could measure how many people have this in the hundreds. There are tens of millions of people trading the markets. Only a few hundred have anything, any exposure to the OVI. So the OVI can improve performance by around 71%. Here's an example how it works. When it's red, you'd be looking bearish, and when it's blue, you'd be looking at bullish opportunities. So as overstock goes right down here, you would expect the OVI to be bearish or red, and it largely is, which is good because there's going to be patterns in there that we can trade. Similarly, when overstock then rises, we would expect the OVI, or hope it would be blue, corroborating that, which it is, in which case there will be opportunities to go long. That's as simple as it gets. That's why it's improved performance by so much. In fact, with this guy here, Kyle, he went from a 30% win rate, which is pretty bad, 3 out of 10, to an 8 out of 10 win rate, still with us right now. Chloe almost doubled her win rate, so again, exceeding that 71%. And again, completely changed her life. She actually works for us as a mentor now. So we're not really talking about 3 big money footprints. We're actually talking about 4 big money footprints. And you might have noticed or not this big blue indicator when the stocks were going up. So with General Electric, that boring stock that went up by 83% in 5 months, well, we had 1 big money footprint with the volume. We had 2 big money footprints with the move, and 3 with the cross and hold of the key level. But the 4th, staring in your face the whole time, was the OVI, the scarce information piece. And it's the same for ATER here. Look, the OVI, scarce information. And by the way, no one else can see this. Only people with access to OVI can see this. The same with Affirm. Only people with OVI can see this. Again, very few people. So this is the Affirm one as well. So pretty cool. All of them there. But what about on the downslide? Well, on Roku and many others right now, by the way, red OVI, persistent red OVI, leading to moves going down. All the big money footprints are there, just as I've told you. Big move down, big volume, through a key level, then going sideways. By the way, catalyst earnings again. Earnings are one of my favorite strategies. I'd love to teach you that sometime as well. And then pushing it down more than 50% in just 15 days. Big stocks like Amazon pre its split, yes. CRISPR, we mentioned that earlier. You should be able to now recognize this and go, God, that was so easy, that one. I could have done that one. And of course you can. Now I've shown you what it is. You can if you follow us. So that was CRISPR, 30% in 7 days. Kirkland was pretty cool. This is a penny stock pretty much. This is a furniture company. $1.50, we caught it at a couple of Junes ago. And I thought, you know what, there's a lot of big money footprints going on around here. Look at the volume, look at the cross and hold, look at the big move percentage-wise. I'm thinking, this is pretty interesting. And of course, it went up by 100% in 6 days. Someone tweeted me to say, yep, I've got my first profit target, looking at my second one there. But he would have to wait a little while because it then went up by 7.5x to over $13. And that wasn't done either because then it went up by, well, it went up all the way up to about 28, 29, $30 in the end. So 1,222% in 8 months. So again, big money or big, next big thing kind of returns, but this isn't the next big thing. This is something that's based in logic, proven, and scarce. So again, very few people have it, and all spawned by that scarce information, that OVI. Leg Mason, okay, you see this over and over again. Big money footprints are present. Nice setup there, very nice. It breaks out, but then it goes and gaps up because of a buyout, 34% in 3 weeks. Goodrooks, we saw this earlier, but you didn't see the OVI. There it is. Okay, OVI, scarce information is present with the other big money footprints as well. Beyond Meat, was it there? Yes, it was. You see it there. This is why we knew. We're not being wise at the time. These are trades and examples that we were spotting at the time before they went crazy. So let's have a look at how other people have 3x'd and more, and in such a short space of time, how you might be able to follow them. These guys, you know about them. I'm not going to go on about it right now. But there's two main technical setups that we use. Consolidations, up or down, so up and then consolidation. And the other one is a pullback and a consolidation. I like consolidations because I can manage my risk with it. It's all about risk management. There's nothing magical about a consolidation. But what is magical about it, on the other sense, is that it helps you control risk through the trading plan. So, two main setups. In the context of those big money footprints, you can specialize in a small number of stocks. Chloe only chooses between 35 to 40 stocks. And look what she did, 15x her account in 30 months. When you are in profit, you protect that profit quickly. There are a couple of mechanisms you have as part of my trade plan. I'll show you later. And also, you don't have to be, trying to chase every trade. 20% of Pat's trades and profits are with Apple. That's quite a high proportion for one stock. They also limit their risk. They don't put all their eggs in one basket, and they keep it really, really simple. My method, big money footprints, scarce information. You want to know the impact this has on people. This was Chloe when she'd lost pretty much everything apart from the last $3,000 by June of 2018. And then by October, she's saying, thanks to the one-on-one session with me in June, I was really struggling. But since that time, I'm up 78%, and my win rate is now 72%. Fast forward to January 2021, now she's at 45,000. Where is she? $45,830. That's a 15x with a win rate of 76%. Pretty good. Pat, the same kind of deal, 8.5x in 9 months. Maybe even more impressive. Maybe even more impressive there. Let's have a look at the trades that Chloe was making here. VJ says, do you have losses too? Of course, but they're contained within the trade plan. But let me go through that in a minute. So Adobe, just give me a wave if you kind of recognize what I'm on about here. You only see one of the big money footprints here, the scarce information, but do you see it? Yep, it's there, the 34%. Advanced Micro, 41.85%, same deal. There's the scarce information. There's the scarce information with Marriott, 20%. There's the scarce information with the Russell, 24%. There's Alibaba, seeing the same big money footprints, the same scarce information, 41.5%, etc. So that's the way that you go through this. Now, let's just have a look and see what happened. You can make these filters. You click a button and you can make a filter for the big money footprints. But let's have a look at Vertex Energy here. This is pretty cool. You can probably recognize, even though the chart's a bit small, you can probably recognize that here's 1, here's 2, here's 3, cross and hold, and here's 4 big money footprints there. And then the move that it made subsequent to that was 73%. General Electric, you already know about. And again, the move that was made after that was 83%. Profit was 61%. So again, one button can help you find these things. And by the way, talking about one button, one winning trade can make the difference. Here's Vince or Vinny at 7 out of 10 win ratio, 34,000 on post-earnings Apple. Simon, $76,000. Tesla was one of his favorites. And we could do this, or we could show you literally hundreds and hundreds of people, whether it's Pat and Joyce and all the rest of them, big money footprint traders. So you can do next big thing, but you can do them and stocks if you want. I don't do the next big thing anymore. It's burnt me too many times. Again, similar upside or better, actually better, but a repeatable, proven strategy and without the roller coaster. I don't want the roller coaster. It doesn't do me any good. Here's what quants say, because we're in the quant world. Using institutional standards of financial modeling, the OVI stands up to rigorous scrutiny as a valuable, logical, robust indicator, valuable in predicting broad market sentiments, that's market timing, and stocks, individual stocks that subsequently perform, stock selection. This is a guy, I can't mention his name, but he's a bigwig. He's a big guy. Call him J, as in initial J. Okay, I'd be glad to share with you. Just by adapting to your method, this is May this year, and putting some basic controls in place has saved me millions in losses. I'll tell you how much that is, actually. He has actually reported 12 million in savings through using this particular method. He's saved himself 12 million, as in they would have been losses had he not known our technique, not adopted our technique, and gone with what other people were saying. Bernard, he says, first and foremost, trading with OVIs increases confidence, feels unfair, like cheating. Downside risk feels very low. Learn to take my profits. Profits from 70% to 550%. So the idea is this: with this technique, you can do it from anywhere. You can do it anytime. Doesn't matter if it's Boeing or Halliburton, Chubb or Boston Property. It's all the same thing every time. Still the same setup every single time. If you want to contact us, know a little bit more about what we do with OVI and Flag Trader, just literally go to ovi.to/consult. That's it. It's all you have to do if you fancy this. Also, Jeff will have something for you as well. But if you want to do that, you want to say something, I'll just put it in the chat here. Let's see, I don't know how to do this, but let me see if I can. If I put it in the chat, I'll just do, I think it's www.ovi.to. OVI, I don't know. We did TO because it just says //consult, and just have a chat with us. And we don't do the hard sell stuff, but have a chat if that's something that you're interested in. Let me show you. I've still got a couple of things to show you right now. Also, if you want this thing, actually do get in touch if you want this little written guide and video tutorials, growth secrets for small trading accounts. By the way, co-written by me and Chloe. Chloe, 15x. I think you probably want to read this and go through the tutorials as well. This is Mike in Minneapolis. Same kind of setup. There's M-Phase a little while ago. 150% winner for him. Now, just a little bit about us. We are a team. We have an R&D team. We have a mentoring team. We have a support team. We have a communications team. We have me and my quant team as well. So, yeah, this is what we are. This is what we do. We support professionals. We support you guys as well. ovi.to/consult. This is a family kind of thing, as you might have gathered. We know you very, very well. We get to know you. We get to make friends with you. It's that kind of familial relationship, a bit like Metastock as well. They have that same ethos, and that's why we like them so much. Now, I said there'd be a bonus at the end, my game-changing trade plan. Write this down. This could change everything. Even if you hate everything else I've said, you've got to go with this. So there are 4 steps to the trade plan. The easy part is the evidence piece. This is the actual setup, with the 4 big money footprints, etc. So if you look at Livungo here, you've got 1, you got 2, you got 3, you got 4 big money footprints there. You should be able to recognize them now already with the volume, with the big move, the cross and hold, and the OVI. They're all there. Okay. Now I say you need 2 minimum, and OVI has always got to be one of them. Okay. 3's better, 4's ideal, but sometimes one of these parameters and constraints will just be missed by a penny or a fraction of a percent, and then it's not actually in the constraint. But we do want minimum 2, and hopefully evidence, visual evidence of all of them. So here is the game training trade plan. The first bit is the evidence bit. Let's just say that's in the bag. The first step is about entry. Now, with entry, we want the setup to be there, and we want a consolidation. We like that, and we're going to trade above that consolidation if it breaks out above that consolidation. We're also going to put a stop in below a natural support level. So either below the key level or below the consolidation. That's the entry. Now, what that does is it gives you control right from the off. So no trade tips. We are just going to control this trade right from the very beginning. You know what your maximum loss is going to be right from the get-go. The next step is this. What do you do once you're in the trade and it's making money? So in here, what we would do is we'll look for a low and we'll look for a high. So 20 and 30, it's 10, okay? That's 10. And we'll literally just divide it by 3 to get 3.33 in this particular case. And we will look for a first profit target, literally up above this breakout area, so above 30, so call it 33, 33. That would be what we call P1, first profit target. Once we have hit P1, we then do what's called, the next phase, which I'm going to talk about now, actually. Once we hit that first profit target, there's a couple of things we can do. Actually, let me show you about it. So here we have that's the entry point. Here's P1. At P1, you have a few choices. You can raise your stop to break even. You can raise your stop to break even and take profit, or you can literally just you can do the raise stop and raise, or do a combination of both. Okay, you can do both. And what that's going to mean is that if you could take profit at this level, and if this level is the same as distance away from your entry as it is from your stop, well, guess what? Even if the stock goes right back to your stop, you're not going to lose because you've taken half profits there. So you've got three choices of what to do there once the stock reaches a conservative first profit target. And we're talking conservative here, guys. We're not talking very aggressive at all. The name of the game is to get to first base. That's what this part is about. And then the next piece of it, the last piece of it, is how you grow your profits should the stock keep on going. So we reached P1 here. We've raised our stop, okay? And now what happens? Let's just raise our stop here to break even. And now, as the stock price rises, we're going to raise our stop. So if the stock price rises up here, we're going to raise our stop. Then our stop's going to be about the same, rises again maybe, or maybe stays the same. And then when we get a big rise, after that rise has happened, then we're going to raise our stop again. So it might be that with Livungo, we were knocked out here. But the second part of our trading plan is how we literally stair step behind the stock price. As the stock rises in our favor, we raise our stop. If it's not doing anything in particular, we keep our stop the same. And that is the game-changing trade plan that will literally save you time and time again. And I've just gone through it very, very briefly for you there. Last thing before questions, TWS is not a motivational quote, but those of you who know me know exactly what it is. It's T for trade, what you see. Okay, trade what you see. Now, what does that actually mean? Because I now hear all these people going on, oh, trade what you see, and they never actually tell you what they're looking for. But here's what we see. We see the presence of big money in the shape of volume. We see the presence of big money in terms of aggressive money with price movement. We see key levels being crossed and held. And we see uniquely, because no one else does, we see the presence of scarce information as well. That's what we see, and that's what's important to us. And that's all we do. We do it for stocks, we do it for options. We have different micro strategies within that, but this is what we're looking for. This is what gives us success. And you can ask us more at ovi.to/consult if you fancy doing more about that. But Jeff, I think I've done this bit now, and you're very welcome to ask questions. Remember, if you ask us, just say, can I get that growth secrets for small trading accounts written guide and video tutorials written by me and Chloe 15x. Sounds like a spy, doesn't she? Chloe 15x. But anyway, get it from us and we'll show you how we do these things as well. William, thank you very much for saying my books are helpful too. I really appreciate that. That's nice. Neil. Wow. Sorry, Noel. Noel, give me a wave. We were at CAS together, or what was then City University Business School. Then came CAS, now it's called Bays. What is OVI, Joel? I think you're covering it there, don't worry. VJ said, do we ever have losses? Yes, of course we do. We're not talking about people who have 100% win rate. Chloe's win rate is like 76%. That means that 24% of the time she doesn't win, but she's containing her losses with the trade plan as well. Krishna, yes, it can apply to indices quite nicely. I use it on SPY. IWM I love. IWM is a very, very, very cool thing to trade. I'm not showing current stocks right now because that wasn't what I was going to do today, I'm afraid. But you can, if you're in my groups, you'll see what I do from week to week. You'll see that. And William, you're saying, no, you're saying are options the trading instrument? They can be, but that's a whole different, that's another tutorial. That is, you can use stocks as the trading instrument, futures if you like, or options, but you got to do options in the right way. That's a nice to see you in person, sort of, says William. Yeah, well, just a normal guy. Let's have a look, see what else was going on there. Oh, there was all the caffeine stuff going on before. Oh yeah, I got through it, didn't I? Jeff, talk to me.
Trying to get my system to unmute. Good job today, guy. Appreciate it.
And likewise, I think I did the questions for you as well.
We did, yes.
I saved
you did. BC wants to know if Access will help you find trades.
Oh yes, one button. That's why I do this button here. The button. This is the button. So that's the idea, is that you make it easy. So we have preset filters for all this stuff.
All right, very cool. Thank you, Guy. I appreciate your spending a little bit of time with us today.
Thank you, Jeff. Always good. Oh, by the way, I had something to ask you. Oh yeah, options. We need to talk about options at some point. Can we talk about that sometime? I know Billy. I was talking to Billy about it, but we need to talk options.
Of course.
Because we can help you. We can help you guys with that.
Sounds
we
good.
would like. I would like to help you guys with options. That's my wheelhouse, as you've seen from William there.
Yes, of course. I will give you. I'll get in touch with you this next week.
Please do. Bye, guys. Thanks a lot.
Good. Thanks, Guy. All right, very cool. Let me go ahead and do this. And one of the things Guy did mention is, as he said before, we're one of the places you can get OVI. So he showed a lot of the stuff that he does in OVI. But we also have the ability to kind of pull that into Metastock and use it with all the data that's available and all that kind of good stuff. And the thing that's actually pretty cool about OVI is if you have a membership to the club, the OVI club, you get all the stuff that's available on his website, and you get the integrations into Metastock for free. So not only can you do OVI, you can do any of the other couple hundred of indicators that are in there. It's all fully integrated. It's the only platform outside of his own web platform that you can actually use his stuff on. So he talks a little bit about, he did a really good job of talking about the OVI. We actually pull the information straight from his servers. So when you, if you have access to the OVI private club, you'll have its color volume, you'll have the OVI indicator with the moving average on it. You'll be able to apply other indicators to that if you want to. You can have explorations or scans. BC, so that'll help you with that. And I love scanning. You know, scanning is the ability to only look at the stuff that has an opportunity right there, and you'll have the template. And as I said, this is just something that we designed for if you have the access to the club, you get the Metastock integration for free. So the OVI Traders Private Club includes weekly live webinars from Guy Cohen, a dashboard, all of the stuff that he showed you on this website, video updates, blogs featuring input from him and other OVI traders, a reversal trade finder, watch lists, and then personal curated watch lists that OVI puts together for you. So all of that stuff is available on there. You get the archive of all of the education, the paper trading app, everything that he has on his website is included. Plus, just for being part of that, you're going to get the OVI Traders Club integration with Metastock with the ability to go in and run scans, look at expert advisor, see commentary, all that kind of stuff. So normally it's $197 per month for that. What we're going to do here at the event is we're going to do $97 per month. And on top of that, we're going to, and that's a permanent discount. You can buy 1 month and you get the second and third month for free. If you do that, you can give us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat to kind of take advantage of that. So in addition to that, it is part of our Trader Summit Action Pack. So you can get patterns for profit, 3 months of that OVI. Daniel's going to come in. He's going to talk about his Power Bundle 360, which has been a brand new add-on for Metastock that's been doing really, really well in this market. The 3S code. You're going to get some really good training from a friend of mine that does really good training classes in Las Vegas, Nevada, Oscar Carboni. I was just actually maybe a week or two, I was down in Nevada for one of the classes that he's doing. You're going to get our Top Dog trading add-on. So all of those add-ons you're going to get as part of it. your Stocks and Commodities is going to give you 2 years of free Stocks and Commodities magazine. You'll get 3 months of a website called learnmetastock.com and Unleash the Power of Metastock. Huge package, $4,429 if you bought all of that on our website. As part of our Summit Action Pack, we're going to let you have it for $19.92. The other thing is most of that is available with a 30-day money-back guarantee. So if you want to try it out, you want to see why Metastock's been rated for 30 years in a row, best software in its price category, this is a good way to do it. To take advantage of this offer today, metastock.com/summit deal will get you to the Summit Deal page. You can give us a call. We have reps in here today that are answering your questions, helping you get logged into the room, et cetera, et cetera, et cetera. You can give them a call at 800-882-3040, or you can chat online with them at metastock.com/saleschat. So there you go. Mark says, thanks, guy. I love options. I love options too. Okay. So in any case, there you go. I'm going to say thank you to CMT Association for sponsoring today's event. We appreciate it. CMT Association's been a very, very, I guess they've been a partner for a year. I was going to say a long-running partner, but they've been a partner since about last November. They're very cool to work with. It's a very well-reputed organization, cmtassociation.org. One of the things we have Tyler come in, Tyler Wood of CMT, and he'll talk about the benefits of getting a CMT accreditation or a CMT designation. And it's actually pretty cool, especially if you're trading as a financial manager. So cmtassociation.org. So there you go. And then, okay. Our next presenter today is Daniel Sinnig. I just mentioned him. Daniel created one of our newest product, the PB360. One of the things I'll say about Daniel is he is a very, very good trader and a very, very good coder. And he not only does he code a lot of stuff for tradingindicators.com, he codes a lot of stuff for other people as well. He's very, very good at it. So we're happy to bring him on board. I like what he has to say about his systems that he's designed for Metastock, but I'm going to let him talk about that. How you doing, Daniel?
Great. Hey guys. Hey, Jeffrey. Happy Saturday, everyone.
Yeah, you
Glad
look
to
good
be
today.
Yeah, I'll try to, put on my my nice shirt for a Saturday. All right, so let me go ahead and share my screen.
Cool. Yeah, I just sent the instructions. Okay, we can see it. We are running just a minute late or two, so I'm gonna hurry and turn it over to you. It's yours.
Perfect. Great. So Jeffrey, do you see my screen? And if yes, which one do you see?
I see cheating your way to profit. Know your odds before entering a trade. Yes, and the proper one. So yeah.
Move this out of the way. Great. All right. So yeah, this is today's title: cheating your way to profit. And perhaps you don't know how to interpret this this line, this title. We chose it explicitly this way because I think we have a way which will allow you to know your odds before entering a trade. And as you can imagine, this would give you a huge advantage. And how this is possible, I will cover in today's presentation. So please get comfortable, lean back, and let's get started. And since it's Saturday, let me really ease into the topic. This is one of my favorite movies. It's dated now. It's been out there probably 15, 20 years. But there's one famous quote, and I'm just going to read it out to you, where George Clooney says, because the house always wins, play long enough and never change the stakes, the house takes you. Unless when the perfect hand comes along, you bet big, and then you take the house. Now, I love that movie. It's a great quote. And but how does it relate to trading? So first of all, I need to stress that I do not believe gambling, this is from a casino movie, gambling equates trading. This is absolutely not the case. So gambling is not sustainable. Gambling is, in my opinion at least, it's for entertainment primarily. But most of us do not trade for entertainment. At least I hope so. Because if you trade, I believe you should be serious about it. Should be systematic, and should be in it for the long run. Okay, so this is all what differentiates trading from gambling. And but another differentiation is that in trading, it's all about managing your risk. Whereas in the casino, I guess you're there for maybe once in a blue moon. You don't really care perhaps about the risk that much. But in trading, it's all about managing risk. And I have one more quote for you, and I promise this is the last one, is from Joel Greenblatt. He said, as much as possible, you don't want to be well paid merely for taking big risks. Everybody can do that. You want to be well paid because you did your homework. All right, so, and when it comes to trading, it is really all about managing your risks. And when it comes to managing risks, it is about having the right tools to do so. And what we have designed and what we have built with our Power Bundle 360 is a set of intelligent indicators which have the power of estimating the success rate for your next trade. And just imagine, if you knew that, if you knew the odds of having a successful trades before taking it, what would you do? I think most of you probably would say, well, if the odds are against me, I'm not going to take that trade. I only take the trade if the odds are in my favor. Perfect. And you may also even get one step further. Say if the odds, if I have two trades, or potential trades, one has, an odds, I don't know, I'm just making up a number of 75%, and the other one has 60%. Which one would you take? I guess the selection is very obvious. The choice is very obvious. You would take the one with the higher odds. So not only will this allow you to, take a trade or not take a trade, but also if you have a choice of taking multiple trades, perhaps you can't take them all because you don't have the funds for it. Nobody can take all the trades. This will allow you to prioritize your trades and your trade signals and focus on the ones which have the highest odds. I think that's a fairly obvious conclusion from this. So what we have done is we have designed a set or a suite of intelligent indicators, which are all packaged up in our Power Bundle 360, which will allow you to not only be applied to the chart and show you where the signals are, but you can also scan for the best signals. And not only this, we can scan for signals, but we can also rank the signals by the ones which have the highest odds, when the odds are in your favor. And this is exactly what I'm going to talk about today. Now, who am I? Well, who are we? So we are tradingindicators.com, and my name is Daniel Sinnig. I'm one of the managing partners at tradingindicators.com. And as Jeffrey said in the beginning, perhaps my career or my CV is a bit different from the other trading educators, which you will hear about or which you already heard in this conference. So by training, I am a software engineer. And my long-term objective back in the day was to become a professor in software engineering. So I went through all the levels. I did my master's, my PhD, postdoc. I was teaching multiple classes at the university, all in software engineering and computer science. But you know what? I always had a fascination by trading and the financial markets. And out of interest, back in the day, I started trading. I tried it out, and guess what? I made all the mistakes that everybody else does in the beginning. I over traded. I took too much risk. I revenge traded everything. So after I've donated quite a fair share to the market, I took a hard view in the mirror, and I realized, wow, trading is hard, and I need help. And for me, as a software engineer, needing help meant I need better trading tools. So I wrapped up my sleeves and I got to work, and I implemented my trading tools which I wanted to use for myself to improve my trading. And this is really how the story of tradingindicators.com started. Most of the indicators that you will see in our online store, if you go to tradingindicators.com, you see all our products, but most of the products there, they have been primarily designed for our own trading. And only later on, once we found them useful, once we've used them, we put them in our store, and in the hope that if we find them useful, if they helped us, perhaps they will help others as well. So check it out at tradingindicators.com. Now, this has been now quite a while back, more than 7 years already since we have our online store, and I've been a trader for more than 10 years of this, and we have written more than 500 trading indicators and automated strategies. Not all of them are on our store, but many of them are. Some of them, they were specifically designed for an individual or a company, so they would not be there. But over the years, we've written all these indicators and strategies for trading educators, as Jeffrey mentioned, for retail traders, for trading organizational traders, and so forth. And they're really all around the world. So we have clients in every corner of the globe. And what is really important to us in our company is that we always want to give it a little extra, something that doesn't exist yet, something that is what is innovative and which stands out. And what we have done, for example, with our Power Bundle 360, we not only have given it a very innovative or intuitive design, and you'll see this when we apply it on the chart, but we also built in features which are truly unique, such as an estimation of the success rate for a given signal. Because this is, in my opinion, so important, because it gives you invaluable information on whether you should take the trade or should not, and how to proportionally risk manage this trade. Because if the odds are not really good, perhaps you want to take less risk, or vice versa. So in all of what we do, we have tried to integrate this little niche into our products. Now, before I really get started, just a quick reminder that trading is risky and not for everyone. If you trade, you should only use risk capital, which is considered as capital. Should you lose it, it will not affect your lifestyle. When it comes to back testing or hypothetical performance, keep in mind that this is not necessarily indicative of future performance. All right, so now that we have gotten this out of the way, let's get started. And before I dive in, if you have any questions, feel free to write them into the chat, either on YouTube or on what's it called, Webby, on the webinar chat, and I will get to them when time permits. Okay, so for those of you who may remember, I have been on this show on the MetaStock Trader Summit in August, on August 1st. And in there, I pointed out a trade idea which I was about to take for this stock here, which is CAR, Carrier Global Corporation. It's a stock in the S&P 500. And I suggested back then, well, I'm going to take this trade. I'm going to go long CAR at 14.15 with these targets and the stop loss. And about 2 weeks later, this trade concluded, and it concluded quite, just a second. It concluded quite successfully. So here we had our entry, and this is on MetaStock. And a couple of days, or maybe 2 weeks later, we did hit both our profit target, which we envisioned. So this trade really worked out nicely. And I'm going to do something very similar today. I'm also going to present to you what is my trade for Monday. I've done this homework this morning, just before the show, and I will recommend to you, well, not recommend because it's a trade which I will take, so don't take this as trade advice, but I will take this trade on Monday. I'm going to look at Airbnb. I'm going to look at going short Airbnb with an entry of 99.70, a target of 90.50, and a stop loss of 110.50. And why I've chosen this particular trade, and there are many, many options which I could have chosen, but I've chosen this one on purpose. This is going to be the topic of this presentation. And as you will see, it's very systematic, and the approach I'm going to show you can be reused by anyone if you have these tools, which I will show you, and if you have MetaStock, for example, which has a really, really super powerful scanner. So this is my purpose of today, to explain to you why I had chosen this trade, why I had chosen the trade on August 1st, and why I have chosen the Airbnb short trade for Monday when the stock market opens. Now, how can we do this? Well, Jeffrey already mentioned we have built the Power Bundle 360. And the Power Bundle 360 is really a suite of 3 indicators. And we've on purpose chosen exactly 3 indicators because each of these indicators excels in one particular market condition. We have a trend trading indicator, which, as you can imagine, excels when the market is trending. We have an indicator which is great at picking reversals or pullbacks. And we have an indicator which is great for trading breakouts. And we believe by having these 3 complementary indicators, you're basically covered for all market phases or market cycles. So what are these 3 indicators? I'm going to show these ones to you on the chart, of course, as well. So the first one is called 1, 2, 3 strike. And this is our trend trading indicator. And it only will show you a signal on the chart if a strong trend is confirmed. And it does it by looking at 3 dimensions. Of course, we need to have directionality. So the price needs to either go up or down. We we need to have increased volume and increased volatility. And in our research, we have figured out that if these three factors come together, chances are that price will continue in the direction of the trend for quite some time afterwards. All right, so this is our first indicator for trend trading. The second one is called divergence cloud. And many of you probably have learned about divergence and that it is a very nice telltale sign that price action may reverse. So perhaps you were in an uptrend before, you see a divergence. Divergence is always a discrepancy between price action and an underlying indicator. And when divergence happens, it may be a telltale sign that the uptrend has come to an end and a downtrend will start. Or vice versa, if you're on a downtrend and you see a bullish divergence, this can be a telltale sign that the downtrend is coming to an end or slowing down and an uptrend may start. What we've done with Divergence Cloud is we have taken a fresh look at divergence, because most of divergence indicators are either based on the RSI or the MACD or stochastics. We've done something different. We've looked at volatility. And what we've figured out is by contrasting price action and underlying volatility, we get a really powerful divergence indicator, which is quite predictive. And in our research, we have shown that this one actually outpaces the ones that you get with the RSI or the classic ones. And how this works, I will show you in just a bit. And now the third indicator is for trading breakouts, and it's called Volatility Crusher. And what this indicator does is if a breakout candle is detected in combination, it's important, with increased volatility, then we're talking about a strong breakout. And if such a strong breakout happens, chances are that the price will continue in the direction of the breakout for quite some time. And we as traders, we can take advantage of that. And in fact, the trade from August 1st, which I had shown in my last webinar, was based on this particular indicator, on the Volatility Crusher. And we're going to do something very similar today, and I'm going to show you how I pick my trades using these three indicators. And as you will see, it is actually very straightforward. So this morning, I had picked my trade of the day for Monday in less than half an hour while drinking my coffee. So it's really straightforward. I'm going to teach you how I have done this morning, and it's something that everybody can do. Now, just to summarize real quick before we're going to look at charts, we have three indicators. 1, 2, 3 strike is our trend experts. For trend trading, then we have Divergence Cloud, which excels in detecting reversals or pullbacks. And we have Volatility Crusher, which is our breakout trader designed to find lasting breakouts. All right, so for the theory, now let's look at some charts. So for this, I'm going to switch over to Metastock. And I'm just going to drag this in for 1 second. And here we have an intraday chart of Tesla. In fact, Tesla, it's the 5-minute chart for Tesla. And I've already applied our trend indicator 1, 2, 3 strike to this chart. And let me now explain to you what you can see. So the first thing you probably see is that the candles are colored differently. So you have greenish candles and reddish candles, as you can see here. And this is done by our indicator. And in fact, it will color candles greenish if we are in an uptrend or reddish if we are in a downtrend. But of course, directionality is not everything that you need to know about trend trading. Our indicator requires two additional factors, which is increased volume and increased volatility. And if all three factors come together, directionality, increased volume and increased volatility, an entry signal is given. And you can see these entry signals on the chart by these bigger arrows here. So here, for example, we have a short entry for Tesla, and vice versa, here we have a long entry. Now, our indicator not only will give you the entries, but it will also tell you when to get out of the trade. This is done by these little arrows, the smaller ones, in the opposite direction of the entry arrow. So here with our first entry, and then we had our an initial partial exit here. And we believe in partial exits, because once price moves in the direction that you want it to move, at some point it's time to book some profits, to lock in some profits, instead of keeping all your risk on the table. If you remember, trading is all about managing your risks properly. So in this case, this indicator has been configured to work with 4 partial exits. When I say configured, I really mean that there are parameters which you can use as a trader to fine-tune these indicators. And this holds true for every single indicator of the power bundle. For example, you can choose how many partial exits would I like to use. In this case, it's configured with 4 partial exits. So here we have our long entry. First partial exit is here, where you take some of your position off. The second one is here. Then we stay in the trade for quite some time. Third partial exit is up here. And then we have a final exit up here. LFE, it's hard to read, but this stands for last final exit. And then you're out of this trade. So 1 entry and 4 partial exit. But as I mentioned before, this can be configured. Now, for our short entries, I can see them here as well. And here also you can see that we have partial exits along the way. And in this case, I configured this indicator to work with 2 partial exits. So first one here, and then the second partial exit is down here. Now, this is 1, 2, 3 strike. And let me perhaps open up a new chart. I'm going to stay intraday for now, but keep in mind that our indicators, they work on any time frame. So intraday, daily charts, weekly charts, it doesn't matter. So let me move on and go to a different symbol. I'm going to open up Agilent. So I had prepared this already. So again, on the 5-minute chart. And again, here we have applied our 1 to 3 strike indicator. And again, you can see that, trades are taken along the way with the partial exits. You can apply this indicator to many different charts and many different time frames. And you will even find symbols which currently have an entry on the last candle, which is very pertinent. You will find many of those, but the question still is, since I can't trade them all, and I should not trade them all, which ones should I trade and which ones should I not avoid or not trade? And we have built into our indicators something which will help you make this decision. In the MetaStock, you can see this information by right-clicking on the chart. You go down to Expert Advisor and open up the commentary. So this will open up a little sub-panel once the calculation has finished. And what you can see here in the first couple of lines is our instant efficiency statistics. We have chosen this term on purpose because it's an estimation of how well the signals for this indicator, the long signals and the short signals, have been working out historically speaking. And we can see here, for example, that historically speaking, 75% of our long signals have been successful for this particular chart, which is Agilent on the 5-minute, and 88% of the short signals have been successful. And guess what? Whenever I change time frame, for example, if I switch back to to Tesla, which we had previously on the chart, you will see that these statistics will be different. So once it finishes loading, you can see for Tesla, it's slightly worse. Long efficiency of 71% and short efficiency of 69%. So this is a way for you as a trader to pick the symbols and the signals which are most likely to result in a successful trade. Okay. Now, having this set, which success rates are considered in quotes profitable or potentially profitable and which ones are not? Well, it depends on which indicator we're looking at. For 1, 2, 3 strike, on average, our winners are bigger than our losers. So even with a success rate of around 50%, you would have a profitable trading system. Yeah? And of course, the higher the chances are, the better it is. All right, so this is 1, 2, 3 strike. And let me now move on to our second indicator, which is divergence cloud. And if you remember, divergence cloud is designed to pinpoint reversals or pullbacks. So for this, I'm going to open up, in this case, a daily chart. Let me just quickly hide the commentary. So I'm going to go to Qualcomm on the daily time frame. You can see it here. And in this case, divergence cloud. Oh, sorry, wrong chart. I want to open up interactive brokers. This one is for volatility crusher. Sorry. Let me go to interactive brokers. All right, there we go. Interactive brokers, but again, on the daily time frame. And in this case, we have applied divergence cloud to this chart. And the first thing you can see similarly to 1, 2, 3 strike, is that some candles are colored reddish and other ones are colored greenish and some are not colored at all. In fact, in this case, the indicator will color the candles if it senses divergence. A reddish color is used if there's bearish divergence, and a bluish color is used if there is bullish divergence. And as mentioned before, divergence can be a telltale sign for a trend reversal. So for example, here we had some sort of a downtrend. At some point, our candles changed to a greenish color. And some additional factors in addition to this come together. The indicator will give you a long entry signal. Yeah. And similarly to 1, 2, 3 strike, also for this indicator, we do have partial exits along the way. In this case, it's configured to work with 6 partial exits for the long side and 2 partial exits for the short side. So again, we have a long entry. In this case, and let me see here we have a short entry, similarly to what we had with 1, 2, 3 strike. Now, divergence cloud is designed to find early trend reversals. So for example, look at the signal up here, which was a partial exit, but it was also a sign that the uptrend may come to an end and now the downtrend is going to start. And with any divergence indicator, the indicator is designed to find trend reversals very early on before a confirmed downtrend is established. Okay. Now, the same way as 1, 2, 3 strike will give you the success rates or the estimated success rates for a signal, we have also built in this feature to Divergence Cloud. In order to open it up, it's the exact same way. You right-click on the chart, you go to Expert Advisor and open up the commentary. And once this loads, you can see that the success rate for interactive brokers in this case was at 66.67% for the long side and at 80% to the short side. And again, similarly to 1, 2, 3 strike, for Divergence Cloud, our winners tend to be bigger than our losers. So these are statistics which I really would like to see. Now, if I go to the very end of this chart, sorry, let me just froze. We can see, for example, here that we are actually in a long trade right now of Divergence Cloud. So here we had a long entry which happened at the beginning of August. Went long. We're still in this trade, so we had 1 partial exit at this point, but the indicator is, so far at least, kept us still in this long trade in the expectation that price will recover from Friday or last week and continue in the direction of the trade signal. All right, and now let's move on to our third indicator, which is Volatility Crusher. So Volatility Crusher is our breakout indicator, and for this I'm going to open up a chart for Qualcomm. And keep in mind, again, this is a daily chart, but this indicator can be used very effectively also on intraday charts. So many of our clients use it, for example, on the 1-minute chart for scalping trades. So once this opens up, it takes a little while because I actually loaded in for Qualcomm 5 years, or no, sorry, 10 years of historical data. So if I just scroll back here, you can see that we have, or even more than 10 years, 15 years or whatever years of historical data. You can see all these trades taking along the way. And what's pretty cool for this particular symbol is that 78% of our long signals and short signals, it's very similar in this case, have been successful. And this for a period of more than 15 years. So these signals for Qualcomm in this case have been working out great for this particular symbol. This doesn't always have to be the case. You will find symbols where the statistics are not in your favor, but this is normal in trading. Not every indicator will work for every symbol and time frame, but it's important that you know on which symbols it will work, because you can then place your trades accordingly. Now, how does Volatility Crusher work? Well, again, we have our long entry signals here and our short entries, but conversely to Divergence Cloud and 1, 2, 3 strike, you know right away, once you have a signal, where your targets will be, because this is our scalping indicator. It's designed for shorter time frame or for shorter trades. I can take it on any time frame, but typically trades are quite short with Volatility Crusher. So you should know when you enter the trade, what are my targets? We have 2 profit targets, and where's my stop loss? And as soon as the signal is generated, you know where these levels are, which makes it very easy for you to manage your risk accordingly, because you know right away, okay, this should be my stop loss, and these are my targets to manage your expectation. And of course, also with Volatility Crusher, we have built in these statistics which will help you discern which signals you should follow and which ones perhaps you should avoid. All right, so these are our 3 indicators, but we haven't gone full circle yet, because I still need to explain to you how did I pick the trade which I suggested for Monday, which is to go short Airbnb when the market opens on Monday. Now, you don't know how to apply these indicators to the chart, but you still don't know how to pick the trade. Now, how have I done this? So for this, let me quickly go back to my slides and let's talk about these statistics just for 1 second. So everything we do are based on these statistics because they really guide us into which signals to follow and which ones not to follow. In other words, they help me make truly informed trading decisions and only take a trade when the odds are stacked in my favor and trading conditions or market conditions are beneficial. Now, so this is going to be the centerpiece, but of course, you need one more piece, and this is a scanning utility. And guess what? Metastock, at least in my opinion, perhaps has the most powerful scanning capability of all the trading tools I work with. Yeah, the Metastock scanner can scan through literally hundreds of thousands of symbols in the market, and you can be assured that you will, for every single trading day and every single time frame, you will find plenty of signals to choose from. But of course, it's also, have too many options, like in a restaurant. If you have too many things on the menu, perhaps it makes your life even harder. Well, this is where our statistics will come in, because with the scan results, you will also see for every signal what are the statistics, what is the long efficiency and what is the short efficiency of that signal, thus helping you to sort, first of all, your signal by the statistics, by this percentage value, and then pick the ones which have the highest odds of succeeding. Now, how can this be done? So let's pause for like 1 second, one more time. All our indicators, as we've seen, they have clear entry and exit signals. All right, they have visuals which will help you to see where are the levels of significance, where should I get into my trade, where should I get out, do we have divergence, do we have currently an uptrend or downtrend. You can see it all on the chart. Our indicators, they will work on any time frame as an asset class and even chart style. So they run anywhere, no matter what your preference is. So whether you're a day trader, a swing trader, a scalper, you can use our indicators. And of course, they are driven by our statistics. So all these 4 things together make this package so powerful. And all these 4 things help me to pick my trade for Monday. Now, how can this be done? Well, first of all, I would need to know which symbols currently have signals. All right, I can do this. I can scan. Metastock has a powerful scanner. All right, so now I perhaps get 100 signals. Now, my second question would be, which signals are the most probable to result in a successful trade? Okay, well, this is where our statistics come in. So now let me show you how I've done it using Metastock. And it works similarly to other platforms. So if you don't have Metastock, you have NinjaTrader or Thinkorswim, the approach will be similar. So let's check out the scanner. Back to Metastock. Let me just quickly hide the expert commentary. And I'm going to switch over to our Power Console and open up the scanner. I would open up in a different window, no problem. So we're here, and we're going down to the scanner. In a Metastock, it's called the Explorer. So I click on Explorer. Once you click on it, and once you've installed our Power Bundle, you will see 3 or 4 different scans associated with the Power Bundle. So you have 1 scan for finding buy and sell signals for 1 to 3 strike, which is our trend indicator. You see 1 scan for finding signals, buy and sell signals for divergence curve, and 1 for volatility crusher. We've also included a 4th scan, which will allow you to scan for bullish and bearish divergence, which may happen without having a signal. So this gives you some extra flexibility. But for now, let's focus on these 3 scans. So I've selected them. And the next thing I need to do is I need to select the instrument I'd like to scan through. In this case, I have built my own custom instrument list, which is called Liquid US Stocks. That's the list I run every morning. I like to do my scans in the morning because typically when the market closes after 4 p.m. or 5 p.m. the latest data will be available, I'm not in the mood to think about the market. So I like to do this fresh in the morning while I'm having my coffee, just like what I've done this morning before this presentation. So I have my stocks here, but if you don't have your own instrument list, you can also pick one of the many predefined instrument lists in Metastock. This guy scanned through 1,260 symbols. These are all US stocks, US equities, for entry signal to 1 to 3 strike, divergence cloud, and volatility crusher. And on the daily time frame, so I've chosen daily time frame because it's for my next swing trade, which I want to take on Monday. If you're not a swing trader, you could have chosen a different time frame in the drop down here. And what's very important is also that you load a sufficient number of records, which means candles, into the scan. Why is that important? Well, because you need to know what is my success rate historically speaking. If you only have very few candles loaded for a chart, you may only have 1 or 2 signals. And then the statistics will be irrelevant. They're not going to be significant. So you want to have many records loaded. So actually that you have some very significant set loaded on which you actually can run statistics, where the statistics mean something. So I chose in this case to load 5,000 records, which means 5,000 trading days, which basically is 15 years of trading. All right, so then you can click Start Exploration. I will not do this now because this will take about 15 minutes. So I usually do this in the morning. I start it, and while this is running, I'm having my coffee, or I'm answering emails or do something else. 15 minutes later, I come back and I look at the results. And the results, in this case, in this morning, looked as follows. So I've run the scan for 1 to 3 strike, divergence cloud, and volatility crusher. So let's first start with 1 to 3 strike. So what we can see here, first of all, are all the instruments which currently, which means on the last bar, on Friday's bar, because we're on the daily time frame, which currently have signals. So for example, I could sort by instruments with long signals by simply clicking on this column here. I'm not sure we had any. Yeah, we had a couple. So let me go here, sort the opposite direction. We can see that these symbols here all had long signals. Yeah, but we can also, of course, sort by short entries. So here, by sorting of short signals, you can see the one here. We can see I have way more signals with short signals. It's not very surprising because the market last week has been trending down. And you can easily verify this by looking at the number of signals that you get. This is our trend indicator. And naturally, if the market is going down, you will get more bearish signals than bullish signals, which is the case here as well. So here we can see that we had perhaps, I don't know, 30, 40 short signals, which I picked up this morning. So now the question becomes, and my bias has been this morning, to be honest, because the market has been so bearish, to look for short trades. So this is something I decided early on. So let's only consider these short signals for the rest of this presentation. So we had like 30, 40 short signals. Now the question is, which ones of them are the most promising one? So this is where these 2 columns come in, long IET and short IET. Basically, the success rates for long trades, historically speaking, or short trades, historically speaking. And what I do is I simply sort this success rate from highest to lowest. And here we can see for our short trades, this stock here, which is Equitrans Midstream, had a success rate, historically speaking, in the last 15 years of 84%, followed by Airbnb at 77%, and by Consol Energy at also 77%. So now, as a trader, as a logical person, what do? Well, I focus first on the symbol of the highest success rate. Why not? It has the highest rate, successfully speaking, so let's check it out. I do not blindly trust these statistics because I also always want to verify it on the chart. So the next step is to click Open Chart, which I will do right now. So this will now open up what's called the equitrends midstream onto my chart on the daily time frame, and I've already applied 1, 2, 3 strike to this chart. And of course, you can see here that we indeed, let me just zoom in a little bit more, we indeed do have a short entry signal on the last candle. Now, okay, that's good. And if I go to expert commentary and look at my statistics, you will see that the statistics picked up in the scanner will match these statistics in the expert commentary at 84% for the short trades. Okay, so far so good. Let me hide these statistics again. Now, would I trade this particular signal? And this is where my manual analysis comes in. In this case, to be quite frankly, I would not trade it for the very simple reason that yesterday's candle, Friday's candle, was very, very bearish. It's very long. So I'm afraid that most of this move has been already done. And I don't like to trade these setups because this is kind of chasing the trend. And personally, this is against of what my trading style would be. So as of personal preference, I would not take this trade because of the fact that I would be chasing the trend. Some of the move has already taken place. It's a bit too late now to enter into it. But that's my personal preference. You perhaps have different preferences, but that was my decision criteria to not take this trade. So, okay, no problem. This one I did not like too much. Let's look at the next symbol. Next on the list was Airbnb. All right, so again, same procedure. Let's open the chart. It will open up on a Metastock. And now let me zoom in a little bit. So what we can see here is something that I like. I like the fact that Airbnb has been in a downtrend, well, basically since COVID for quite some time. I couldn't shake it yet. So it's still basically, if you look at this overall trend here, going down. So that's great. So I'm trading basically in the direction of the overarching trend. That's something I like to see. It makes me feel good. So okay, trading is also about being confident about your trade. This makes me feel good. So Airbnb has been going on for quite some time. I want to trade in the direction of the overarching trend. Great. What I also like about Airbnb is, in this case, the signal happened and it's not a huge candle. It's a bit of an indecisive candle, as you can see here. It's a bit of like a morning star or something, a doji, but it's okay, not bad. So this is our entry candle. It's not the move has started, but then we had some quick pause in the move. Now, I like it. I also like the fact that I have some room to the downside. When I say room, I mean what is the distance to the nearest support level. So here you can see price bounced off here. So this is quite some space. So we have at least $10 still to go to the downside. So there's plenty of room for this trade to come out. All right. And all right, so this is good. I like it. Now, and let's keep this one in mind. So Airbnb looks interesting, but we had more choices too. So let me quickly go back to the scanner. It's here, and open up perhaps Console Energy, which is also which is a similar percentage as Airbnb at 77.41%. So I'm going to open up the chart, and here I can see that for Console Energy, just by looking at this chart, this is really zoomed out. I'm going short. We have a short entry here, but the overarching trend is really bullish. So I'm going against it. This is something I don't like to trade. So I'm going against this trend. It makes me nervous. So I personally don't like it. And this is the reason why I would not pick Console Energy, because it goes against that trend. I also don't really like to trade energy stocks too much because they're heavily driven by political news, which are unpredictable by nature. So of these two reasons, again, personal preference, I would not pick this trade, but I like Airbnb. So let's keep this one in mind. But we're not done yet. And please bear with me. That's not taking too much longer. We still have entry signals for Divergence Cloud and Volatility Crusher. So let's switch over to our next set of scan results for Divergence Cloud. And again, we see our long signals here. Simply by sorting this column. In this case, in fact, there's not a single long signal. Again, not very surprising after what happened on Friday, but we have plenty of short signals. So again, the question is, which ones should I pick? Very simple. I will sort by the short IET column. And I can now see which of my symbols had the highest success rates. And here, in fact, I can see, wow, bridge point, 100%. Amazing. So let's check it out. Okay, I opened the chart. So I selected open chart. It will now load on Metastock. And indeed, we can see that we do have an entry signal here. And if we go to our expert commentary, we can see that indeed, to the short side, we will have a percentage of 100%. All right, so far so good. That's great. Wow, maybe I should take this trade. Everything has been working out. But there's a caveat, which you need to be aware of. And which is basically, if you look at this symbol, you can see, oh, there's not much historical data out there. We only had a handful of trades, which happened to work out to the short side, but that's really not a high number of trades. So historically speaking, this symbol is just too new. It just opened up mid-2021. It's only been there for a year. My statistical subset of price information or trade information is not big enough so that I should follow these statistics. So personally, I would not consider this trade because the success rate was calculated over a too small set of price data. So I don't like it. Next, let's have a look at the second winner here, which is Peloton at 83%. I will quickly open up the chart. Peloton, one of the big winners during COVID. What a run it was. But now also since COVID, well, is COVID really over? But since the peak of COVID, one of the biggest losers. Look at this down run from 160 all the way down to 8.51. Now, we do have a short entry signal here based on divergence cloud. But you know what? I also do not like this trade. I'll tell you why. Because it's been going down for so much. The question now has become, how much further can it possibly go down? We went down from 160 to 8. Oh my, that's a lot. And guess what? Well, actually, just a couple of months ago, when is that? Beginning of beginning of August, we had our all-time low. And this naturally always acts as a level of support where your short trade may bounce off from. So I don't like it because it's so low already and it's very near the all-time low. So again, for me, Peloton, personal preference again, is not a stock trade, even though the down run has been quite astonishing since the peak of the COVID crisis. Okay, so we have one more signal to consider, which is volatility crusher. Now, same principle here. We can sort by long and short entry signals. Let me see if we have any long ones. No long ones, just short ones in this case. And again, I can sort by my short efficiency from highest to lowest. And we can see here, wow, we had one with 100% success rate to the short side, which is Residio. So let's check it out real quick. I'm almost at the end, so don't worry. So I'm going to open it up. I see Residio here. Has a short entry signal, but you know what? This one, and I love support and resistance, is something I always look at. It's very close to the support area here where price bounced off previously. So perhaps not my favorite entry. So I would not take it. And it was similar to what is it, ICAO Corporation, which was also near that level. So in conclusion, because we don't have time to go through this one, I picked Airbnb. Now, for the reasons I mentioned already, Airbnb, let me open it up, has been in a downtrend for quite some time. It has some room to the downside left, and which are both two factors which are important to me. And of course, it has very high success rates, historically speaking, for short entry signals. All right, so now that we have picked Airbnb, the question is, where should I put my targets and stops? So for targets and stops, I always like to look at support and resistance area. So in this case, you can see we had some kind of a support here. So I like to always put my target just a bit above support. In this case, I picked 90.50, which is just around this level here. And for my stop loss, again, I pick it at this resistance level. So if price would go above this level here, which is around 110, it would invalidate my trade. Just one more caveat here. for my entry, I really want to see on Monday that I have a follow through. This is why I suggested a stop sell entry. So I have to wait until the market actually continues going down. If it takes out the low of Friday's candle, which is at 99.70, then I will enter into this trade. And I require this in this case because we really had an indecisive candle on Friday. It's a doji. So just signal some indecision in the market, and I want to have some extra confirmation before entering into this trade. And if you go back to my slide, we can see this all summarized here. So a stop sell entry at 99.70, which is just at the low of Friday's candle, target at 19.50, which is at this, just above this support area here, and a stop loss of 110.50 just at this area of resistance. So this is my trade for Monday. It took me about half an hour this morning to identify this trade, all thanks to the power of Metastock, which has this really powerful and incredible scanner, but also of course, based on the success rates built into our Power Bundle indicators. Now, as mentioned, the Power Bundle is built for Metastock. It works for other platforms as well, but it really excels in Metastocks, where it gives you very clear entry and exit signals. We have the expert commentary with the built-in statistics, and we have predefined scans built into Metastock, which will allow you to scan literally through hundreds of thousands of symbols in a very short period of time. And these scan results are augmented, are qualified with our success statistics, which will allow you to pick the ones and rank the ones which have, historically speaking, the highest statistics, the highest success rates. In our bundle, we've also built in system tests and optimizations. We have not covered this in this presentation, which basically are automated strategies which you can back test in Metastock for some additional analysis, which will also allow you to further optimize. We didn't have time to talk about the parameters which can be used to fine-tune our indicators, but these system tests will allow you to find the optimal combinations of parameters. If you go for the Power Bundle, there will also be a detailed tutorial on how to get most out of this Power Bundle, including a detailed explanation of what every parameter means, how to optimize the parameters, and so forth. All right, so before I wrap up here, the Power Bundle has been out there for quite some time, and it's been very, very encouraging of the feedback which we have received since we have released it. For example, Jamie said she bought the Volatility Crusher indicator. I just want to let you know that the Volatility Crusher indicator from you, which I purchased from you, is one of the best indicators I ever bought. I will be purchasing 123 Strike and Divergence Cloud soon. Or Jonathan said, I'm such a fan of you and your indicators that I believe I'm a forever client. Your indicators are a must-have tool for anyone wishing to trade the market intelligently. I would never trade without them. So this is the feedback. Of course, we sometimes also get feedback which is not as euphoric, but this feedback really drives us, and we're happy and encouraged by any feedback we will get from our clients. Having this said, if you have questions, good or bad, good feedback, bad feedback, you can always reach out to us. Just simply go to tradingindicators.com and drop us a note in our contact form, and we're happy to hear from every single client. And of course, if you have questions about the Power Bundle for Metastock and the special offer that we have for the summit, simply give Metastock a call. The number is here, or simply chat with some of the sales reps which are present today. Jeffrey, are there any questions? Sorry, I talked a lot, but
Hey, you're okay. You did a great job. We do have some questions. Let's see. I think not fur wants to know, is it relevant to go back 15 years to look at more current data? Or would you recommend a shorter time, like 3 to 5 years instead, especially in current markets?
Yeah, in fact, I would recommend a shorter period, as long as you have a significant amount of trades there. So at the minimum, I'd like to see 20 trades being taken in my look back period. But you're right, I went back in this case 15 years just to show that this, no matter what the look back period was, the hit rates were very big. But for my personal trading, I typically use a look back period of 1,200 days, which is around 5 years if it comes to swing trading.
We had a couple comments from G and Noah mentioning risk reward. So I was wondering if you wanted to, if you had kind of a recommendation for risk reward, or is there a minimum level that you're interested in?
No, it's because I can position size properly. So so sometimes, because I look at my profit targets and my stop loss typically at where support and resistance levels. Because to me, just picking them randomly by numbers doesn't mean much. There should be some technical relevance in the market. So this drives everything. And sometimes my stop loss is fairly far away because this is where the next or the nearest technical level is. Sometimes it's nearer. But this is okay because I can position size accordingly. So no, I don't have a preference.
Perfect, Daniel. Well, I want to say thank you for coming in. Thanks for spending a little bit of time with us. Thanks for creating. People are really liking the Power Bundle. It's great. I think it's beautiful. I'm gonna show it. I'm gonna talk a little bit about how to get it. But I want to say thank you for coming in, and thank you for spending all the time designing products for our product, and
Thanks,
doing
Jeffrey.
such a good job with it.
Yes.
All right.
Have a nice Saturday, everyone. Thank you so much for listening. Bye-bye.
Thanks, Daniel.
Bye-bye.
All right. Okay. I'm going to make myself the presenter real quick. We're going to talk a little bit about this. We're running just a little bit behind, but that's okay. We're going to get back on track here in just a little bit. So in any case, thanks for coming. I just want to show you this. You should be able to see the Power Bundle in Metastock. I just think it's really pretty. I did run a scan. This is for the divergence cloud. So this is one of the maybe 4 or 5 that came up on the scan that I ran of the S&P 500, the NASDAQ 100, and the Dow. So there's about 523 stocks here. This one had a really nice looking short entry today on Tapestry. So there's a couple that came up on it. You've got the long entry here. You had a kind of your partial exits that came in. This is obviously a really good. Yet another SFE entry back here as well. So looks really good. One of the things I like about the Power Bundle is the efficiency statistics that Daniel talks a little bit about, and the kind of the custom efficiency statistics. You get those right here in the commentary. I love the coloring. And I like how good it's worked. It's been a very popular new product for Metastock. So I'd recommend you try it. So let's kind of go jump back into the sides. So as part of the Power Bundle, you're going to get the Divergence Cloud, the Volatility Crusher, and the 1, 2, 3 Strike. All of those are methods that you can scan for. They have expert advisors. You can look at the efficiency ratios for. Very good method. They have all of those, all 3 of those methods include scans, they include system tests, they're fully customizable. They have, of course, expert advisors and the commentary and all that kind of good stuff that make a good Metastock add-on. And normally this add-on would cost $1,500. Here at the show today, we're actually going to cut that price down to $1,000. So $995 is the summit special that we're going to give you. It's going to include, like all of our one-time products, a 30-day money-back guarantee. If you need Metastock, if you haven't gotten a copy of Metastock, we'll include a trial to Metastock if you need it. And to take advantage of that, you can give us a call at 800-882-3040, or you can go to metastock.com/saleschat to take advantage of that. So $14.95 is the normal price. We're going to do $9.95. We're going to give you a money-back guarantee. We're going to give you a trial. We're going to give you everything that you need to go ahead and try it out. It is also part of our Trader Summit Action Pack today. And as part of that, what you're going to get is you're going to get the Rick Sadler's Pattern for Profit, Guy Cohen's OVI. You're going to get Daniel Sinnig's Power Bundle. You're going to get Oscar Carboni's training, and he's coming right up. He's going to, Oscar, you're a good speaker coming right up. You're going to get Barry Barnes' Top Dog Trader. You're going to get 2 years of stocks and commodities, as well as 3 months of Learn Metastock. All of this stuff would normally be $4,429. Here today at the summit, we're going to do $1,992. So you can do that at metastock.com/summit deal. You can give us a call at 800-882-3040 or at metastock.com/saleschat. So there you go. Our next presenter, I just got back. I think it was a couple weeks ago, actually. I went down to OmniCamp, talked with Oscar, sat down.
It should be exciting. And when Jeff tells me I can get started,
Guess what happened? We're almost back.
all right.
We're almost back. But the monitor computer that we connect to go to the webinar decided to do a Windows update. It just shut down.
Love with that.
Yeah. We just had a
Tell it
conversation
to
about
go
how
back.
that would be.
You can tell it no, but it only accepts that a few times, and then it does it on you anyway.
Yeah. Anyway, we're back. So if you're joining us on YouTube and still there, thank you for waiting. It was Windows. We blame Microsoft. I'm going to write a letter to Seattle. But in the meantime, Oscar, it's your turn. I'll get out of the way.
Okay. So, Jeff, thank you. And now that we are officially back up and running, let me start with good morning, good afternoon, and good evening, traders from across the globe. Thank you for tuning in. And Metastock, thank you so much for having me. I've literally been using Metastock since I'm 18 years old. Most of the people who work at Metastock probably weren't born when I started using it. And I'll be honest, in the 80s, when there were few programs and I would help to develop so many of them, I tried to migrate away from Metastock just to see what's better out there. And I'll tell you, 20, 30, now 40 years later, there's nothing better than Metastock. I promise you. I promise. I've tried them all. I've been a beta tester for just about everything out there. If it was developed through the 80s and 90s into 2000, I promise you it was sent to me to see if I could make it better. I'm an analyst trader who also programs. Where do you find one of those in 1982? You know what I mean? So I became very popular with the trading software people. And Steve showed me his program, Metastock, and I'll tell you, I've been writing for and using Metastock since I started in the business at 18. And I am still using it today. And of course, I've tried everything else under the sun. Metastock, congratulations for keeping me here this long. So what's going on? Traders, is technical analysis the best roadmap to future market movement? You can buy programs which have parameters, which will need to be tweaked at some point. When the market decides to move in another direction, you've got to go in and tweak, which a lot of times creates a whole new program, which then needs years of testing. So it can get tricky when you're running programs. Now, I've seen some wonderful programs in the presentation before mine today, and I'm not down talking them by any means, but I will tell you this. A chart is a visual look at all the fundamentals, insider trading, government reports that came out, that are going to come out soon, reaction to all that news by traders. It's all built into one emotionless graph. And it will tell you everything that's going to come forward. And if read properly, there is no better roadmap than a chart. So in my last Metastock presentation, I literally went over a series of charts and I said, look, I have just done a video to call the top of the market. There's a good reason for that. The fundamentals are in place. The technicals show all the fundamentals. And the market should start doing something starting January 4th when I put the video out and did a presentation. And then in that presentation, I took a series of charts during a Metastock presentation, just like the one we're doing now. And I showed you where the chart is, where it's going to go, not where it should go, where it might go, where it will go, because that's what a proper read of technical analysis will tell you. So I took a series of charts and we went over them together. And now the best thing I can do to show you the power of technical analysis is to not bring up new charts and show you new stuff. Let's go back and look at every chart that was in my last webinar. And you can go back and look at the webinars that I've done for Metastock and you will see completely unaltered every chart that we used in my last webinar and the projections moving forward. We're going to go look at every one of those charts now and see, does analysis work properly? Or did Oscar show us 10, 15 charts and it didn't really go the way he said it would? I will bring back every single chart that was in the last presentation in its entirety and see what we've done since then. And then we'll use that information to decide how we can make money next week. Now, every time I do one of these webinars, the idea is to show you techniques that work that you can make money with next week, not last week. So I always create a brand new webinar each time I do one for Metastock, and I create it literally the night before. Friday, I sit down and say, well, all the charts are as fresh as could be. Let's build a webinar for Saturday. As I was building my webinar for today, yesterday on Friday, it dawned on me, you know, it's one thing to tell them that charts work well. And if read properly, I promise you, they are the roadmap to future market movement. It's another thing to show them that exactly what we spoke about several months ago is what happened since. Now, that would be proof that analysis works, correct? That is what I'm about to show you. So, again, is technical analysis the best roadmap to future market movement? Absolutely, positively. I am the best in the world at it, and I'll prove that to you right now. So, let's go back and revisit. This very same chart is the first chart I showed you in my presentation, and what I said was, this is the Russell 2000. It has put in a topping pattern. It all began here. The whole drop in the stock market began here. I started to notice it in November, December. And as soon as we got through December, I started to recognize what was going on and made a bold call for a topping pattern. Now, it all started with the Russell 2000, massive head and shoulders, and a drop below the 90-bar moving average. You've got a left shoulder here, illustrated by the left red circle, the head and the right shoulder. A head and shoulders formation tells you the market will drop lower. The market does drop lower into a bear flag, and this is where we were at our last webinar. There was a bear flag, this reddish looking thing right here. The flag pole is this quick drop. The flag itself is here. And take a look at this. And this is exactly what I remember telling you in this last webinar. I said, look, we have a flag and a flag within a flag. We've got a flag within a bear flag. And this whole piece projects down to 1698. Gave that out in my YouTube videos, in my webinars, and of course, in my trading room, my live trading room. All the way up here in the 2000s. Okay, we are trading over 2,000 near 2,100 right here. I call for 1698, and I'm not making a prediction. That's for crazy people. I make projections based exactly off of a chart pattern. And my projection was 1698 on this flag. You want to see something insane? Do you know what the low of the drop was? Look, it starts dropping, continues to drop. When it finally quits dropping, it stopped right here. Do you know what price that is? Look. Let me bring this little price movement tool over for you. This is an amazing thing how well analysis works. Look at the low, 1699.64. I was looking for 1698. Now, is that not technical analysis working on all 8 cylinders? I mean, come on. That's exact. And you see me make that projection in front of your eyes. So analysis really works well. We are going to absolutely instill that into your heads in this next hour. And we're also going to look and see which market is leading the US indices, how we can make money on that. And being that we looked at everything on these charts in the past, and I showed you what they should mean and how to make money with them, we need to now look at what's going to happen in the future. So 2 things will happen next. 1, if you'll indulge me, I want to set something up and show you something. First day of this year, January 1st, I already had analysis pointing to the downside. On January 4th, 4 days into this year, I did a video to tell everybody that follows me. I have fans all around the world, my Omniacs, and I said, listen, you know I've been bullish for years, right? Bullish, bullish, bullish. Well, this video is to tell you that that's it. What's going to happen next is mapped out, and I can map it out for you in a video, and then I will show it to you on charts. This is what happens for the year of 2022. Now, 4th day of this year, I did a video on YouTube, and if you'll indulge me, it'll set up everything that's going to happen next in this webinar. If you'll indulge me, I want you to watch just 4 minutes out of this 20-minute video, and you'll see what I was thinking, what the charts were telling me to think. I don't think. I read charts. What the charts were telling me to think, where the markets are supposed to go, and why. Now, I've been doing this for 41 years, and I promise you, I do not guess. So the charts tell me. That's why I don't guess. So let's, if you don't mind, I would like for you to indulge me now and watch this 4 minutes of video, and then we are going to jump into our bunch of charts, see where they were, where they've gone, and what that means for us next week. So if you don't mind, take a look at this quick clip. Remember, the date is here, 1/05/2022, which means I'm filming it on 1/04, right? The fourth day of the year.
We've got a lot of work ahead of us, traders. What I think will happen here, and I'll show you some charts in a moment, is this. Not what I think will happen. This is the inherent relationship between markets, real estate, and interest rates. They are getting ready to raise rates in the next 3 months. The market is noticing already if bonds are tanking. When bonds go down, interest rates go up. Whether you know it or not, we do not need the Fed to raise or lower rates. Traders can move the bond price and make rates move. Now, the Fed's been buying bonds forever to keep the price of bonds up, keeping rates down, and traders had no chance of fighting against the Fed. Well, the Fed is backing off on their bond buying, eventually stopping the bond buying, and then maybe raising rates, which makes bonds go lower. Now, if the street, the banks, all the traders in the world decide to just sell bonds, the rate will go up automatically, whether or not Jerome Powell flips the trigger or not. That's how this works. If bonds go down in price, the bond futures interest rates go up. Now, of course, the Fed raises and lowers rates, and why? How they keep them in check is by either buying bonds or selling bonds to make sure that the Fed rate doesn't move too much. But if they're not buying bonds, which means they're not selling them, but they're no longer buying as many, if the street sells more than the Fed's buying, rates, bonds will go down, rates will go up, and I'll show you some charts to prove that. Now, if you are buying real estate, here's good news. Rates are really cheap. If they raise rates, it doesn't matter. They're going up a teeny bit. It means nothing to you except for this. It will be, and we'll discuss this again when they get closer to raising rates. When they go to raise rates, this is called the get off the couch segment of interest rate movement. That is any company or any individuals, let's forget companies, individuals, you and your wife, husband, whoever, you're sitting there on the couch and you decided we should buy a house, interest rates haven't moved in so long, that's not a worry. The price of the house fluctuates a bit. We can kind of afford it, but there's no urgency to go out and get it. And then suddenly you hear that they raise rates. What do? You get off the couch and you go buy that house before they raise rates and your mortgage goes up. Now let's go to companies. Big corporation, they're looking at buying a big property. If the rate moves a little bit, it moves a lot. So if they are going to raise rates, it buoys real estate. It makes it go up. Well, at the same time, it makes the stock market have to adjust down the price. Why would that be? If the stock market's made up of corporations, big, huge ones, those corporations sell forward corporate bonds, monthly bonds, quarterly bonds. So you give money to a big company, Goldman Sachs. They use that money for a month to pay their monthly overhead, run their business, and they promise you X amount of interest and return at the end of the month. Those are monthly bonds. Those are how corporate bonds are sold. If at the end of the month of the quarter they owe you 5% interest, great, you get your 5% interest. That's why you would buy a corporate bond instead of a U.S. bond that has low interest. Well, if U.S. bond interest goes up, the 10-year, 30-year, the interest that you get if you buy a bond goes up, well, these companies then have to offer more interest for their corporate bonds. That means they're paying more money for the same amount of money, which means their stock in price and must adjust. In layman's terms, I hope I didn't confuse you, but that's what will happen. When they start to raise rates, real estate will go.
All right. So we don't need to watch the rest of the video. The idea was to show you that, forget charts for a moment. Fundamentally, the market now has to come down this year. Has to. Why? Well, because I just explained, if they're going to raise interest rates, I don't care what's going on in the world, stocks are going to have to revalue themselves. So that was the beginning of the year, and I'll show you what happened next. So that was on the 4th, and let's just go here and open up the next chart. And here is your E-mini S&P. Now, the YouTube video was filmed on 1/4. That's this date right here. That was the absolute high of the year. We have gone down since. Exactly what the analysis pointed to and the fundamentals. So let's now go back to that chart. Let's start at the beginning because I want to go over every chart. We have to go find the leader of the markets right now for next week. And what are the markets working on today that will help us? So when I presented this chart to you back in the last couple of webinars, after this flag did make its projection, the market went back up, and lo and behold, it hits the 90-bar moving average and explodes. Comes back down and starts hovering around the 90. But that's not really going to help us on Monday or Tuesday because of the drop. So I had to find out what is Wall Street keying off of lately in the Russell 2000, and check this out. It is the lowest, smallest average I can remember working on since I started in the 80s. Let me give it a color. I'll make it red just so we can see it. Look at this average that they're keying off of all of a sudden. If you look right here, they bought right there, they bought here, Wall Street bought here, Wall Street bought here, they bought here, Wall Street sold here, Wall Street sold it there, Wall Street didn't know what to do and then bought it right above. That is what they're keying off of right now. I kid you not. Wall Street's keying off of a 9-bar moving average. Look, it's 9. That is so little. This is like stuff that we learned in the beginning of our careers in the 80s, using a 9-bar moving average because the markets didn't move as much as they used to. We're out to like 90-bar moving averages now, 200-bar moving averages because of the insane volatility that has taken place in the last 20 years. But to come back to a 9-bar moving average, Wall Street's getting desperate, kids. So right now, you literally can key off of the 9-bar moving average. If you get to it, you can sell it on the way up. If it gets above it, you can buy it. And what else is going on? The Russell. Is Russell leading the U.S. indices in this down move? I don't know, because here's the previous low right here, marked by this red line. So the lowest we've ever gone in the Russell since the high was made and the low started to drop is right here. So let's just darken that in a little bit. We'll take a quick look and we'll move on. So boom, that's previous lows. Russell settled here on Friday. I don't know if Russell is the leader. It certainly was leading in the beginning of the move because Russell topped out in November. The S&P didn't top out until January. So Russell started this move. It all began here. But it's not leading now, and my job is to find out which one is, so it'll help all of us. So you can key off of the 9-bar moving average, as embarrassing as it sounds. That's what Wall Street's using. That's what we're going to use. And, of course, you expect to at least get down to this test of the lows, the previous lows in June. But I don't think Russell's the leader, and I'd like to know which one is, so I'm going here next. Here's the E-mini S&P. Is E-mini S&P leading? Well, let's go back to when we looked at this very same chart in our webinar. We were all the way up here, and we were just at this point where I was saying the 90 and 200 have crossed. This is bad juju. The market should drop from here. So the analysis tells us it's got to drop. The fundamentals tell us it has to drop, and boom, the drop starts. So what is it doing now? Well, since the video that we shared together, months have passed. The call was for big downside, and here we are now. So what has happened? If you ask me, I think it has built a shoulder. I think it's built a head and another shoulder, and we call this a head and shoulders formation. It's a rather large one that's building. The right shoulder is forming as I speak to you at the moment. Well, I guess the markets are closed. It'll be forming on Monday. And I think we've got a big, broad head and shoulders here below that 90-bar moving average. But because we're not hitting the 90-bar moving average a lot anymore like we were doing up here, we've got to find what works better. So, of course, I did a little research and look at what they're keying off of in the S&P lately. We'll make this one whatever color I come up with. Boom. Look at what they're keying off of lately in the E-mini S&P. This average is a 10-bar average. Look at how small these averages are. So we are working literally off of a 10-bar moving average. If I cut the 90 out for you, you'll probably see it cleaner. Now, as you can see, they are buying it when it hits the average, buying it when it hits the average, selling it when it gets under the average, sell it at the average, Tried to buy it for one day when it got above, didn't work, sold it again. So Wall Street is keying off of literally a 10-bar moving average at the moment in the S&P. That will shift dramatically, but right now it's a very small 10-bar average. And you've got a head and shoulders formation, which points to the downside, right? It should take this market lower. That's what a head and shoulders formation does. And you've seen the head and shoulders formation, right? We just looked at one when we were here. Head and shoulders formation, left shoulder, head, right shoulder, makes a market go lower. All right. So we are on this one now. And yes, a head and shoulders has formed right up until Friday. The right shoulder is still forming. But is this the leader? You know, look, it's not at previous lows yet. It's not close to previous lows yet. It's on its way, but it's not there. And I do not think the S&P is leading right now. And S&P encompasses the YM and the Dow, right? It's all kind of in the S&P chart. So do not fall in love with the upside. Hits my board on 1-4. It has basically been right ever since. During this little rally right here, I took do not fall in love with the upside off my board, put it right back on about here, and do not fall in love with the upside remains one of our staples as we watch this bearish market develop. So, but we know that Russell's not the leader and S&P is not the leader, but we need to know who the leader is. So let's go find someone else. NASDAQ. In our presentation prior to this one, we were over here and we had a bear flag, which projected lower, and it did go lower. But the idea behind this chart was to tell you that you can sell the 150-bar moving average every time you get to it. If you hit it, you can sell it. If you get above it, you can buy it. That was the premise of the NASDAQ chart in our last webinar together. Now we move forward to today. What is it doing? Well, believe it or not, the last thing it did major league was hit that 150 average again and drop. And what's it doing for this week moving forward? Well, look, it has created this parallel channel. Now, NASDAQ is clearly in a parallel channel. The last thing they keyed off of was the 50-bar moving average. And clearly, this channel will continue lower. Let's extend. This channel is going to continue. And the market will follow it down. And oddly enough, the channel and previous support or the double bottom possibility comes in somewhere right around the same spot where you hit the previous lows. If you follow this every day, down 1, down 2, down 3, it will hit support of the channel and it will hit previous lows, probably in the same spot. So there's a likelihood you can bounce from there, but we are going down there because these markets are being led by a leader who's telling us where it's going to go next. And NASDAQ is not the leader at the moment. The last thing I found significant was the 50-bar moving average, being that we've gotten away from the 150. Market has now dropped away from it. The 50-bar moving average has become important, and this channel, and of course, the major support. Now, stops are building up below the previous lows, and that is an absolute. That is what happens when you have a previous low and the market moves higher. All the stops are below that low. So stops are building, and when you get here, it will get dynamic, but we're not there yet. And I don't know if we're going to get there because I need a leader to tell me who's doing that. So your NASDAQ's not leading and the Russell's not leading. The S&P is not leading. I need to know who's leading. There's a better way to do this because without the leader, who do you follow, right? The leader is Dow Jones Transportation Average. Let's go right to today. This represents previous lows. Let me just grab this. This is what previous lows were, the June dip. July dip, actually. Well, the June-July dip, we are through it. We left a gap on the way down, which means it opened dramatically lower and kept going, and we are absolutely through previous lows. This is your leader right now. Things change. Technical analysis morphs. Right now, next week, transportation average is leading this market around. It will give you the clue of where the S&P goes next. So keep your eyes on this. It is the leader, and let's go back and look at it. Way back when we did this webinar together, I showed you this was a capitulation top. And once we capitulated, that's it. It's capitulated. We know the top is in. Now, of course, the Dow Jones did that before the S&P put its top in on July 4th because that capitulation came in November. That is November 2nd, capitulation day in the Dow Jones. S&P catches up to it a little bit later, then the top is in. Lately, this has been Wall Street stalling the 90-bar moving average. This is me repeating what happened in our last webinar. And this is where we were. And yes, the 90 was working well. And look how well it continued to work. After the webinar, it worked here. It worked here. Once you got above, it was perfect. Once you got below, look at the big massive drop. So Wall Street is keying off the 90. They were till this area. The last time we hit the 90-bar moving average was here with the red circle. So what are we doing now and what's happening next week? The leader says, first of all, let's make this channel nice and bright so everyone can see. And let me tell you right now, simple technical analysis, it's the best set of analysis that's on this planet. You can get complicated if you want and pull up all kinds of parameters and create your own little systems, but you're creating something small that's in a box that only you know about, maybe some of your friends. Me, I like to use the most widely used analysis on the planet, so I know half the people on Wall Street are in the same spot I'm in. What does that do? That creates a self-fulfilling prophecy, which is all technical analysis is. If you've got enough analysts looking at the chart a specific way, those analysts are going to tell other traders around the world what should happen, and a lot of times it works. Now, since the advent of AI and this, fast-paced trading and algorithms, the algorithms are keying off of technical analysis. I promise you, I can prove this to you 1,000 times a day, which is right in my realm. I'm like, thank you, algorithms, for doing nothing more than taking the same old point and figure stuff I used to work with when I was 18 and just turning it into what's called an algorithm. So I'm all over this stuff, and I can map it out for you, and I can certainly show you how to do this. It is not complicated. But the analysis I use is simple because trading is complicated. And I don't want to bring complication into an already complicated business. We want to simplify a complicated business. And I promise you, ask the Omniacs around the world who follow me. This is the real McCoy. So let me continue on. So we talked about the Dow Jones Transportation Average. It is the leader. It has broken through what would have been a double bottom and continued on. So let's think about how this makes money for us next week. The leader not only gapped and dropped, but dropped through previous lows, through the support, and is heading to the bottom line of its parallel downward channel. All right. Well, what should this one do then? This should go at least through the previous lows, right? These are our clues. We have a roadmap now, the transportation average. Russell should get at least down to previous lows and go through according to our leader. Who else should do that? Well, S&P hasn't gotten there yet. Let's get the voodoo out of the way here. And S&P has not gotten there yet. Let me just clean up this whole thing. Cut. Look, you're not at the previous lows and certainly not through the previous lows, and no gaps have been left. It will go through the previous lows. We've got a leader telling us so. NASDAQ. The NASDAQ is in that same channel. It is heading towards the bottom of the channel line and will at least attempt, if not go through previous support. Why? Because the analysis that we're looking at tells us we've established a leader, and that leader has already gone through that spot. You are going through, if you're a NASDAQ trader, an S&P trader, a Dow trader, a Russell trader, you are going through previous lows because the transportation average has already proved it to us. Now, nothing goes straight down. So it doesn't mean that you can't bounce off this support and rally up a little, but the transportation average, being that it is leading and it's out ahead a few weeks, you'll see the other markets are following that transportation average right now. So let's go look at another NASDAQ chart. Because when we look at what analysis did in the past, all back in the past, in that last webinar, I also showed you two versions of a NASDAQ chart, the one we seen a few minutes ago and this one. Yes, of course, had a big, massive head and shoulders. Then it had the Oscarism known as the failed head test, which is after you've put in a head and shoulders, you have a last gasp of air rally. If you cannot get past the head, the middle of the head, that's called a failed head test. Down you go. It was absolutely perfect. And look at this. The failed head test that I've been calling since the 80s, literally since the 80s, nothing new for me. The failed head test happened right at the conjunction of the 50 and 200 ball moving averages, which created the top of a bear flare. So analysis all fits together, and I promise you the algorithms are paying attention more to this than any crazy program that somebody wrote that thinks is going to call the markets for them. Algorithms, Wall Street are paying attention to these charts. If you can read these charts properly and not try to throw something on them that doesn't really exist in the rest of the trading industry, you put something on them the rest of the traders are using, you find them much more accurate. So we know Wall Street loves the 200 ball moving average. Why wouldn't I have that in my system, right? All the stuff that's mainstream is what you want to use. Mainstream creates the self-fulfilling prophecy. So NASDAQ told us we had a massive head and shoulders. After the head test, the market would drop. And what did the market do? Exactly what the analysis said it would do. Boom. So what's happening now? We've looked at the other NASDAQ chart. We know we're keying off of a much smaller average. But what's happening here is you must know you are selling rallies. You are expecting the market to not only drop down to the red or to the green line, you're expecting it to eventually break that green line because the leader has proven that's where we're going. This is for trading out next week. Let's find another pretty chart here. Let's see. We will go with crude oil. Now, does technical analysis work? Well, I have to tell you, traders, when the world was calling for $150 crude or $200 crude or you name it a few months ago, I came out with a projection in my Metastock performances, in my nightly YouTube videos, in my live trading room, and we were sitting up here somewhere near the 110 level, and I said we are going to 83, then 77. Not possibly. That's where this is going. And if it gets under the 70s, into the mid 70s, under 77, it will start to push the stock market back up, which is why I'm telling you, nothing goes straight down. I just showed you the indices. Well, the crude going down, I promise you, will actually start to push indices back up for a little while. Okay, so crude oil is under the Wall Street's beloved 200 ball moving average. The projection was that now that we have topped, which is what the market told me was going to happen, the projections were 83. But remember, imagine that none of this inside this rectangle existed yet. Right? If we were inside this rectangle right here, none of this has printed yet. I have a projection. I don't think I can fill a rectangle, right? No, I can't. So I've got a projection. Up here is my projection. None of these bars have happened yet. And my projection is we are going down to 83 and then 77, which is the actual projection with a stoppage at 83. Look what the market did. This is almost ridiculous. Who gets to have a roadmap like this? It's here at the 105, 110 level. It moves down, hits the 200 and bounces, right, like magic. Gets under the 200, stops cold at it. Stops cold at it again. The crack starts. It hits 83. Bingo! What did it do on Friday? This past Friday, yesterday, it landed at 78. Rock and roll technical analysis. So what's happened since I showed you this is we've gone into a big bear channel. So now crude's in a big bearish channel. And it's developed since we did our last webinar. And that channel shows us lower levels to come. Let me expand the channel. If I extend this channel, you'll see that we've got a lot lower to go to get to the bottom of that channel, right? Whoa, we're going a long way to get down there. Now, below the 200 ball moving average is absolutely key. But I promise you this, even though I just showed you the stock market has to go down to catch up to the transportation average, the price of crude dropping will start to help the stock market. I promise you, just not tomorrow. But what will happen is as the price of crude drops, the price of everything on the planet gets cheaper. Everything gets cheaper. Transportation Making a product, raw materials, getting the raw materials to the factory, cheaper. Getting that made product out of raw materials off to a distribution center has gotten cheaper. Getting out of your home to the distribution center or to the store to buy it yourself, gotten cheaper. Having it sent from Amazon, it's gotten cheaper. Go to the pump, it's cheaper. It's cheaper for everything on the planet as soon as crude goes down. Telling you that when crude goes down, it helps to buoy back the stock market. So it won't happen tomorrow, Monday, Tuesday, but you will see if crude continues to go lower, the stock market will have to adjust higher first before the next down leg comes. Crude oil analysis firing on all 8 cylinders. What else do we have out there? There's more. Look at the bonds. Oh, my dear Lord. When we were using this chart last in our last webinar, I showed you this little illustration and said bonds go down, interest rates go up. That's how it works. This is a very bad moment for us, and down we are going to go. I also stated in my video on 104, remember me saying before it happened, if they raise rates, it forces the stock market lower. Well, they raised rates 3 months after my video. Stock market's been going lower since the video because people got ready for them to raise rates, excuse me. So the bonds went lower, just like we projected. The rates went higher, but right now, if you take a look, just simple trend line analysis tells us these bonds got a lot lower to go. Here is the whole bottom of this move. It starts here, it hits here, it hits here, it hits here, it hits here. So imagine just how low we have to go to catch up to the bottom of that trend. You know what I'm saying? It's getting scary out there, kids. They are going to continue raising rates. There is no doubt about it. They will continue raising rates. This action will continue, which forces the stock market lower. Now you've got crude dropping, which helps the stock market go higher. We are going to go into a period of gunfight at the OK Corral or tug of war with the S&P next week, the week after that, because you've got a factor now helping S&P, and you've got the Fed raising rates, which doesn't help the S&P. See what I'm saying? Crude's the factor that will help it. Rates don't. It's going to be a tug of war. Analysis is going to be great over this next month. You'll see. Hang out with me in my live trading room every day. We will get through these rough and tumble markets. So what else is out there? We just looked at bonds. The dollar index. Now, traders, listen to this. I know unless you are from another country, you're not going to believe me, but I promise you, we are watching. This is our U.S. dollar. Look at this insanity. The U.S. dollar just keeps going higher, right? Now, you have to understand what's going on here. Our U.S. dollar keeps doing this, new high after new high after new high. We are at 112, almost 113 U.S. dollar. Now, there are people hemming and hawing about inflation in the United States. I am telling you right now, we see about it, we see it, we hear about it, but we don't feel the inflation unless you go to the pump to fill your car. As much of the rest of the world, I promise you, the dollar rallying is helping to keep pace with inflation. Now, you might think I'm crazy, but here's what happened when we used this chart last. We were inside of this green bull channel, right? And the gyrations were inside the green channel, up, down, up, down. Finally, it gyrates out of the channel, uses the channel for support, and creates something new. So what's new? Well, first of all, let's get the old channel out of the way, and let's go look at the new one. We'll make this little so it's not in our hair, but it still exists, so we'll make it nice and thin. And boom. What has happened since is this. Look at the new channel that is developed outside of or above that green channel. This dollar is just exploding, and the channel tells you it has more room to go higher. Now, I promise you that the prices of things in the United States are going up due to inflation, but so is our buying power. Look at our dollar. I promise you, as an American, you are spoiled right now. You have no idea how much better we have it than the rest of the world. Because think this, you've got inflation and a rising dollar. So you've got prices rising and your currency rising. Great. What if you weren't here? What if you were here? What if you were anywhere in Europe? I'm telling you, you spoiled brat Americans, if you don't see how good we have it right now, imagine if the price of products were going up dramatically and our buying power was doing this. This is a problem, kids. They have inflation. We have a honeymoon compared to what's going on in the rest of the world. Now, this channel is beautiful and will continue to work, and they are absolutely, positively, 100% keying off of the 50-bar moving average. The 50 is your ticket in the euro. If you get to it, it's a short. If it gets above it, it's a buy. And you can see it happening every time. So not only are we in a fantastic channel, but you can key off the 50-bar moving average to find your shorts. This is a disaster. I am telling you right now, a disaster of adding inflation and the high price of crude. The high price of crude and inflation and your currency doing this is a disaster. If you've got high crude, prices of things going up, and your currency is doing this, that is the opposite of a disaster. So Americans, stop complaining about this inflation. We are the most blessed country on the planet right now. Right before your eyes, you can see it. The day will come when Europe gets to raise its interest rates, and our dollar will be done raising rates, and our dollar will start to tank. We'll deal with that when the day comes. For now, we've been blessed with this stronger dollar getting us through this inflationary period. Why is the dollar stronger? We're about the only country in the world that can actually raise rates for real. Other countries are raising rates to try to keep up with us. They don't really need to be raising their rates. We have to. It's real. And when you raise interest rates, it makes your currency more appetizing. And if your currency is more appetizing than my currency, and I'm running a sovereign fund out of another country, and I see I can make way more money for the country if I just switch to US dollars and out of my whatever currency I'm in, I'm switching to US dollars. Currencies go down, dollars go up. That's what you've got going on right now. We are blessed to be Americans right now, I promise. Having that US dollar, you are blessed. What else is going on out there? I also mentioned that you could not hide in crypto when we did our last webinar. I showed you this massive head and shoulders and the bear flag, and it ended there. And I said not even crypto is immune to this down move that's coming. Well, the down move started. The 200-bar moving average gets involved in Ethereum. You create a bear flag right at the 200, and it starts to fall apart. The head and shoulders and the failed head test. See it, kids? This is an Oscarism. I've never seen it in a book. It never will be until I put it. This is called the failed head test. And it failed, and down we went. Well, since then, we've got another baby head and shoulders building. And of course, you can easily, let's move this out of the way, easily turn this into a bear flag, which did work. Flag pole here. All right, we'll straighten that out a little bit. That would have been a flag pole. This would be your flag. Let me just make that thicker for us. All right, blue line's flag pole. Let's go build a flag. Now we have us a little flag. Oh, I'm sorry for extending that. That wasn't on purpose. Let's just make this a little thicker. And this way everyone can see what I'm working on in that corner there. So you had a flag. The flag absolutely positively worked, and you are going lower in your crypto. So I say that crypto does the same thing the stock market is doing, and crypto, or Ethereum at this moment, will take out these previous lows. Because the leader of all markets right now is the transportation average, and that has told us that if you are in the position of looking like the stock market, which that does, you will take out previous lows just like the leader, the transportation average, has done. So that is Ethereum. What else is out there? Bitcoin. Once again, we had the massive head and shoulders when we did this webinar together. Showed that to you. Showed you the bear flag sitting right here under the 200. And since then, what has happened? We've created a massive new bear flag. We are bouncing off the lows of the bear flag right now, and the likelihood is we are going lower in Bitcoin. Not the likelihood. The analysis says absolutely, positively, Bitcoin will find its way lower, especially because it follows the stock market. Stock market's following the transportation average. We know where this is going, kids. We just got to pay attention. So that's your Bitcoin. And I say this bear flag takes us a lot lower. So, I'm sorry to say that because I'm loaded up in this crap, but I've got a 5-year projection, which remains valid. So I'll worry about Bitcoin when we get closer to 5-year projection. What else is there? Open. Let's go to some stocks now. Traders, you remember this NVIDIA chart in our last webinar? I gave you the knock, knock, knock technique, and I told you knock, knock, knock. We had knocked 4 times. We were on our 5th knock. What do I mean by that? So let me grab this little tool here. So the market comes down, and we'll just make that a little bit better of an illustrator. All right, market comes down, and boom, boom, creates the first knock. Heads up. Well, now moving stuff on you kids, I'm sorry. Now I'm wrecking my chart. All right, there we go. All right, so moves up. Comes back down, knock number 2, up, knock number 3, up, knock number 4. And I basically said, you cannot knock on a stock door this many times without it opening. You cannot. It just doesn't work that way. It's called the knock knock technique. So on the 5th knock, it breaks through, boom, we drop and down it goes. Interesting thing though is that the 90-bar moving average was in vogue all the way up here. And look at how it stayed in vogue all the way down here. Much lower prices. The 90 was still right on the money. So what do we have moving forward for NVIDIA? We are in something called an Oscarism known as the F flag. It's sort of a flag that I've coined, the F flag right here in this rectangle. So being that we are in an F flag, the F flag tells me that it should continue down inside of this flag, and the flag will continue to grow, and NVIDIA will continue to break lower inside of that flag. So we'd be selling rallies in NVIDIA, NVDA, anywhere near the top of the bear flag. Or, of course, you get near that 90 and you can sell that. So that's what we'll do with NVIDIA moving forward if you need some information if you're an NVIDIA trader. And there's another chart I remember looking at yesterday. Zoom. Interesting. 2 more projections. Well, 1 projection, but 2 projections on this chart. When we used this chart in our last webinar, it was at 126.44, and I told you, wait for the next signal. As soon as we come up and hit the 55-bar moving average, you can go short, and the projection is 99.30. And I gave that out in the webinar and on YouTube and to my friends around the world. Well, it went from 126 right here, boom. It trades 99.30. How crazy is that? Goes right down to the projection, and here was that projection. All right. Now I'm going to give you a brand new projection, because what are we using now? We're no longer using the 55 MA on Wall Street, right? It seems to be away from it, but they are using something else, and we are going to be able to use it next week. Check this out. They're using the 20-bar moving average right now. That's their darling. And my work says, now that we're below the 20-bar moving average, you're projecting down to 74. My last projection was down to 99 when we were trading at 126. Now my projection is down to 49 when we're trading at 74. That's how you can use Zoom into next week, the week after, moving forward. So I didn't want to show you anything in the past except for stuff we've already looked at together. So you are absolutely a witness to what we did look at in the past and what's happened since. And I have to say, I'm quite impressed with the way the analysis panned out. And let's go back here and remember, traders, that this is your leader. It is through previous lows. It's taken them out already. And it's telling you the other markets will do the same. Traders, if you'd like to join me, I'm in a free live trading room. Simply come to livewithoscar.com. you would log in. If you don't have a username, you create one. No credit cards are required. You click chat live with Oscar, and you are in a live trading room with me. Most of the time I'm on camera and microphone, and boom, I click this, and it turns into a live trading room, which I'm always at. I don't want to remove the camera, so I can't turn this on right now. It'll delete the camera that I'm using for this webinar. But you'd end up in this live trading room. It's full of people, and I'm there, but I left it blank for the moment. And I speak on microphone, I'm on camera, and you guys can type to me, and it's a wonderful place to spend our days. Remember, there are no credit cards required. You could just go to Live with Oscar, sign yourself in, and click Chat Live with Oscar, and you're in my trading room. One other thing that I offer is once every 4 months, I hand choose 3 of you, only 3. 4 is maximum. I let you fill out applications, and I bring you into Las Vegas for a 5-night, 4-day seminar where I train you here in my home office to do the Omni properly, to come up with where to buy, where to sell, where to place your stops. But only 3 or 4 people and only 4 times a year. You've got to be chosen by me out of the applications. If you'd like to join me in Vegas in my home office for 5 nights, 4 days and train with me, my next class or Omni Camp is November 10th. So 46 days from now, I guess, November 10th through the 14th, if you come to omnibootcamp.com, you can fill out an application right here. I will qualify you and see if I want you to come to my Omni Camp. Now, there is this, traders. This is my home. This is where my wife and children live. 2 things happen. 1, you don't sell something to somebody in your home if it doesn't work. You meet them in the city somewhere. And 2, I've got to hand choose you because you are coming to my home. So if you fill out an OmniCamp application, it's no guarantee that you're coming out, but I will absolutely call you and interview you. And with that, Jeff, thank you so much for allowing me to present. I really enjoyed this. If there are any questions, I'm more than happy to help you out. I know I ran a little bit past my time, or my time's up now, but I'm more than happy to answer any questions you have.
Yeah. Rushikesh in YouTube wants to know if the markets gap up on Monday, what should he do?
So if the markets gap up on Monday, basically, well, we can look at any of the indices charts, right? And there's going to be something that you can do. So if you know how to draw proper trend lines on NASDAQ, you would literally have a trend line across these 2 highs. Likelihood is if it gapped higher, you'd find resistance here or there. But the best thing you can do is sit tight and wait for it to hit the next average, which seems to be when Wall Street jumps in and sells it the other way. So if you're bearish and it gaps open, let it go up to a nice resistance level or a great average I've shown you and get short again up there.
I'm going to talk in a second about the course we recorded about drawing proper trend lines. Okay. So in any case, Noel said about 10 minutes into your presentation, Oscar's only been talking for 10 minutes and I already love him.
Oh,
so,
thank you much.
Yeah.
You know, I love what I do. So yes, it shows.
Yeah, we love you too, Oscar. Joseph says, Oscar has consistently said crude will get to 77. He's right.
78 on Friday. That is technical analysis. I do not come up with predictions. That would make me crazy. I read what the chart says and I tell you what that chart says. No matter what my opinion is, you get the chart read from me. Chart said 77 and here we are.
And I think we'll do one more just for time's sake. Krishna wants to know, with oil and DXY, along with oil decreasing, do you think DXY will increase or decrease the impact it has on the S&P 500 index?
So
maybe I should have picked a shorter question.
Let's go pull one of those charts at least, either crude or dollar, so that we can look at it while we're speaking. I'm sorry, I pulled bonds. So either crude or dollar. Dollar moving up is supposed to put pressure on crude oil, right? Because if, let's say, we're on a teeter-totter, and if crude is on this side and dollar is on that side, if crude happens to be the heavier one, crude goes down, dollar goes up. But if dollar is going up, crude goes down, right? You see what I'm saying? They're opposite of one another. Dollar is going up, price of crude's going down. The price of crude goes down, it helps to push the stock market higher. So that's why next week, I promise you, next week and the week after, it's going to be quite the fight out there. you've got something fantastic happening, cheaper crude, and you've got a dollar rallying, which both things really help Americans. So we're in a blessed spot, but there is this. Until they stop raising rates, or until they stop at least the rhetoric, let's say they come out and say we might consider holding off on raising rates at the next meeting, until those words are said, the dollar will continue to go higher. It's the only game in town where the country is raising interest rates worthy of plowing into that dollar. So yeah, dollar will continue higher as long as they raise interest rates. Crude should go lower as the dollar goes higher. That's just a perfect relationship.
All right. Thank you, Oscar. Appreciate it.
My pleasure. If there's anything I can do, please let me help. If anyone wants to meet me, livewithoscar.com. It's free, no credit cards. Just come hang out with me, kids, and we'll get through Monday through Friday, every day, every week, till one of us doesn't get up in the morning.
All right. Thank you, Oscar. I do appreciate that. Great job.
My pleasure. Thank you, Jeff, and call me if you need me.
Okay, we'll do.
Cheers.
Okay. All right. And one of the things I did promise that we would talk about is, I'm going to go ahead and change the presenter back to me real quick. I'm going to get set up for this. Oh, we've gone out of slideshow mode. Let me turn that back on. We did, and this is a training course that we did last year where we did a master class. It was called Trend Lines and Technical Formations. So if you feel like you just learned a lot, you should go to this class. It was really, really good. Basically in the class, he talked for hours about how to properly set up a chart, how to draw your trend lines, how to find support and resistance areas, and kind of the technical formations of a chart. This was a live class, but it's now recorded, and it's normally $4.99. It's available instantly here at the summit as part of a special. We're going to drop $150 off of that price, so you'll get it for just $349. So as you can tell, Oscar does a great job. He's a great teacher. This class is available, and it's only $349. So you can take advantage of that, of course, by giving us a call, 800-882-3040, or you can go to metastruck.com/sales-chat. I really appreciate Oscar. He's I always take notes when he's talking because he does such a good job. So it's good to have him in here. So his training is part of our Summit Action Pack. We've got the Rick Sadler's Patterns for Profit, the 3 months of the OVI, the Power Bundle 360, the training package, the technical formations training package, and Barry Burns' top dog trading toolkit. Along with that, you're going to get 2 years of stocks and commodities, Unleash Your Power Metastock 3-month membership to that premium learning Metastock site, and an Unleash Your Power Metastock workbook and video. So the price for all of that separately is actually $4,429. We are going to drop that down pretty dramatically down to $1,992, and most of it has a 30-day money-back guarantee, so you can try it. You can try out the software that's been rated #1 in its price category for basically 29 years in a row now. So metastock.com/summit deal. You can give us a call at 800-882-3040, or you can visit us online at metastock.com/sales-chat. And all three of those are great ways to kind of take advantage of that. Want to say thank you to CMT Association for sponsoring today's event. CMT runs an accreditation training company to talk about, and very, very well respected nonprofit organization. They've been doing business for a while, and they do accreditation and risk management, systems development, portfolio management, and applied behavioral finance. You can find out more about them at cmtassociation.org. So there you go. Let me go ahead and kind of go over here, and I'm next. So I hope everybody's enjoying it. We did have a question here that I was going to answer a little bit earlier about the recordings, and I'll talk a little bit about the bonus offers too. So the recordings, what's going to happen is we are live streaming this to YouTube. So if you're on YouTube watching me, hello, go ahead and just keep this link. This is going to be where the recordings live forever. So if you're on GoToWebinar, what's going to happen is after we get done today, in another couple hours, we're going to, an hour after that, we're going to send automatically a link to the YouTube, and so you'll have those as well. So there you go. Anyway, my name is Jeff Gibby. This is a picture of me a few years ago when I didn't have a beard. today we're going to talk a little bit about Metastock and systems designing, system analysis, and that kind of stuff. I usually actually, and I'm going to kind of jump back a little bit, and we're going to grab that legal disclaimer. But while I do that, with how is things going today? Are you enjoying the class? Are you enjoying the summit? Let me know. Type in the comments how we're doing. I hope you're enjoying it. You can't believe how much work goes into like organizing these events and getting them done and all that kind of stuff. But I think we're doing a pretty good job today, and I hope you're enjoying it. So let me go ahead, and I just want to move this right here, paste, and then let's go ahead and resume, actually right on that slide. So here we go. All right. Today's demonstration is designed to instruct you on using Metastock and accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So I hope you enjoyed that. As I said, my name is Jeff Gibby. I've been working here at Metastock, if you believe it, 25 years this year. So I actually started in inside sales. I did inside sales for, I think it was just over 10 years. I worked in inside sales, which means if you're calling back then, it would have been 15 years ago now, there's a good chance you'd talk to me and we talked about how you're trading and what you're looking to improve and all that kind of stuff. And it was really, really fun. When I started here, I didn't even know what a stock, I kind of had an idea of what a stock was, but really kind of learned everything else from being here. After I did inside sales, I moved over to our business development team. That's where I met Oscar and all of the presenters today. And it's been great. I've actually learned a lot. I've worked with some of the best and analysts in the industry. So very, very grateful for that. The last 5 years or so, I've been in charge of running all of our events here. I've been in charge of the sales team and all of our US-based partnerships. So there's quite a bit of stuff that I'll do here now, whether it's like helping somebody figure out a coding issue they might be having, or writing some code, or listen to somebody's phone call, or whatever it might be. It's just been a great company to work for. Absolutely loved it. I've learned a lot. I use Metastock. I like to trade. I'd like to trade stocks right now, and it's been something that I've been doing for decades as well. So I would say about Metastock, now that we're going to just kind of transition to what we're talking about today, is it's a great software program. So it's also a great company to work for. I love coming in, have fun almost all the time. So in any case, you probably had a chance to read all these little bullets I have. I started here in '97, and at that time, we had been owned by Reuters for about 2 years. During that time, we've actually kind of worked with them to release a real-time data feed. We've released another real-time data feed. We're no longer owned by Reuters, who became Thomson Reuters, and then they sold the analysis part to Refinitiv. But we still have a really good relationship with us. And if you're familiar with kind of them, that's good because they cover all of the market data. They're, just to kind of give you a little bit of a benchmark into what Reuters does, they're a competitor to Bloomberg. They've spent billions of dollars kind of investing in kind of the real-time delivery of news and information. And our relationship with them means that we have some of the best data news in the world, and we cover 300, well, not quite 300, more than 200 global exchanges. So if you're in India, we've had a lot of questions. We always have a lot of questions about India, some of the best data in India, US, Australia, London, any of the exchanges that you might be interested in, we're going to be able to cover. So in any case, kind of getting a little bit off of the subject there, but there you go. That's a little bit of history about Metastock. The one thing I'll tell you, and we're proud of, is for 29 years in a row, Metastock has been rated #1 in its price category. So, and that's by the readers of Stocks and Commodities magazine. So if you've been using Metastock for a while, thank you. We appreciate it. If you've been voting in this category for a long time, We appreciate that as well. So anyway, there you go. Today, we're going to talk about trading plans, all about trading plans. I'm going to teach you a lot about a trading plan. I'm going to use MACD to kind of help you understand what a trading plan is. We're going to talk a lot about testing trading ideas, and I'll have a special offer for you to try out our software for 30, that's been rated #1 for 29 years in a row. So if you have questions as we go, please, every time I look over here in this direction, I'm looking to see if there's a question. Go ahead and type them out. I have a question for you that I'm going to come back to in a minute, but I want you to answer this in chat. So if you would, here's a question. What do you think is the best profession for trading? Okay, so what I mean, and kind of some examples, is if you're starting a trading profession, what is a good starting place? Is it like a psychologist? Is it a teacher? Is it something like that? Answer that question, okay? And then we'll kind of get back to it in just a second. I want to give you a chance to answer the question. So there we go. All right. This guy here, you can see right here, this is a picture of Richard Dennis. Richard Dennis, if you're not familiar with Richard Dennis, it was actually called Prince of the Pit. He was, actually, I have a couple notes here. We're going to look at my notes together. But he was Prince of the Pit. He borrowed $16,000 and reportedly made it into $350 million. And one of the things that he thought he could teach trading, right? So he actually had a friend, business partner maybe, Bill Eckhart. Richard Dennis thought that you could teach trading. It's something that was very, very teachable. Bill Eckhart disagreed. He thought it was something that you couldn't, that you had to have like really, really specific risk tolerances and genetic capabilities to be able to trade successfully. And so they had a huge disagreement in terms of that. And the way they settled that is they decided to test it. So what they did is they put like an advertisement out in Barron's. They put an advertisement out in like the Wall Street Journal and a few different places. And what they did is they recruited a group of, I think it was 23 traders. They brought them in, and over the course of a few weeks, they taught them how to trade. Okay, they gave them very specific rules around trading. Nobody's guessing a profession. You're going to want to. And with that, it was one of the most successful experiments in trading. It wasn't successful. It was like extremely successful. It was called the turtle trader. So if you've heard the concept of turtle traders, or you've heard about the turtle trading method, that's where that came from. But what they found out was, what they actually did was they turned about, what was it? I had it in the notes. They turned they had an aggregate profit over 5 years of about $175 million. And there's a couple quotes that I used to include, but one of the things Richard said is, I could always tell you could publish the rules in a newspaper and no one would follow them. The key to trading is consistency and discipline. So that's something that he would always talk about, is consistency, discipline. And even though they had a very good rules, especially well crafted for the time that they were trading, he thought nobody would follow them unless they had consistency or discipline. So with that in mind, what do you think is the best profession for trading? And let's go ahead and read a few answers. Oh, I need to scroll down for the answers. Okay, I'm like, nobody's typing anything. I'm like halfway up the chat. Let's see. Taza says, I'm loving this. I'm glad you are. I am too. I think they're doing a great job. Andrew says, how do I access the webinar recordings? Andrew, we'll send them to you 1 hour. Because you're in the GoToWebinar room, you've definitely registered, so you will get them 1 hour after the thing. Carlos says, mathematician. George and ZJ and Stanley all said airline pilot. And so you got it right. So congratulations. I think that's interesting. Another answer that I really like, which isn't the answer I'm looking for, but is psychologist. We get that quite a bit. And actually, I know some psychologists that have done really, really well as analysis later on. So like Jake Bernstein, he started his career as a psychologist. psychiatrist. Same with one of my favorite technicians of all time, Dr. Alexander Elder. His book, Come Into My Training Room, is required reading, I think. But he was also a psychologist, so I don't think there's a bad answer there. Airline pilot, though, is the correct answer, and it has to do with discipline. Actually, Craig Morris was in our office a few weeks ago. He's totally retired now, but we wrote a couple products with him. Great technician. He actually, when he retired, he was managing something like $19 billion, I think it was, with Stadium Money Management, and then he retired. But he was a great technician. He actually was a Top Gun. In addition, another person that we work with, why am I drawing a blank on his name all of a sudden? It was Chuck Hughes. Okay, good, I got it. Chuck Hughes, he actually was a fighter jet pilot as well, so airline pilot. And I think the reason being, without kind of going into painful detail, is discipline. When you're an airline pilot, you take off. When you take off, you follow very specific rules. You follow a very takeoff plan, right? You have exactly what you're supposed to do. When you land, same thing. When there's an emergency, same thing. It's a very, very disciplined approach. So thank you for the answers. I'm glad you sent them. If you guys have stocks that you want to look at in a little bit, we will. Just type in the tickers. And if you have questions as we go, feel free to type them in. I'll try and make sure I don't miss any. So in any case, today what we are going to talk about is, aside from discipline, is trading methodologies, trading plans, how they work, et cetera, et cetera, et cetera. And I'm gonna actually start the presentation with Gerald Appel and the MACD. Because now I want to tell you exactly why I show MACD and why we spend a lot of time talking about MACD. And we'll spend quite a few. You'll have a full understanding of MACD and exactly how it works and some of the most popular ways to look at it. But the reason we chose MACD is it's a very objective way to trade. It's one of our most popular videos on our YouTube channel, youtube.com/Metastock. And I find a lot of people use MACD, but they don't really have a good understanding of, the core mechanics. And I think, personally, if I want to be disciplined about something I'm doing, so let's go into kind of some detail about that. And I just realized that for some reason, it looks like my webcam has been off. So I'll turn that back on. Okay. All right, well, it should be coming through now, too. Can you see the screen? Is there any other issues? Okay. All right, cool. All right. All right, so, okay, Gerald Appel, MACD, creator MACD, he wrote it. So we're going to go ahead and talk a little bit about just how it's calculated. So the MACD is calculated. What you do is you take a 0.075 exponential moving average from a 0.015. Now, those aren't whole numbers. They don't line up exactly to any whole numbers, but the closest moving averages are, and what a lot of software will use, not ours, so we actually use 0.075 and 0.15, but a lot of software will use 0.26 exponential and 12 exponential, okay? If I wanted to calculate a MACD, I'm gonna go ahead and kind of just do this in Metastock real quick. We're looking at Tapestry. I'm gonna go ahead and turn off the commentary real quick. Actually, I'm gonna jump over to Apple. I want to show you how to calculate a MACD real quick here. So what I want to do, though, first is I'm going to go ahead and clean off this chart. I'm going to go ahead and delete all the indicators off of here. I'm just going to go ahead and detach the expert advisor. And so what we should be looking at is a very, very nice, clean chart. Okay, let's go ahead and grab a few. I'm actually going to zoom in a little bit. We'll go ahead and look at this much data. And what I'm going to do is, this is in Metastock right here. This is called our indicator quick list. All of the 300 or so indicators that are in Metastock are on this list. And you can kind of scroll through them, and they're going to have any indicator that you're looking for. If you can't find an indicator you want to use, you can usually find the code for it if you Google it. But there's several hundred built into it. If I want to calculate it, you'll notice right here at the top, the indicators that we have been using on this machine most recently are going to be at the top, which is something they added that I absolutely love, because my moving average and my MACD and all that kind of stuff is right at the top. So I'm going to go ahead and drop in the moving average. And as I said, it was a 12-period exponential and a 26-period exponential. I'm going to go ahead and drop both of those in. I'm going to change the color of this one to a red line. And I'm going to make it just a little bit thicker so you can see it on the internet. If I wanted to calculate a MACD, these are the two lines that I'd use. Actually, they're close to the two lines that I'd use. But what I'm going to do here is I'm going to actually put on a MACD histogram. Okay. The MACD line, we'll go ahead and click on OK. Actually, I'm going to go here for a second. I'm going to actually just make the MACD line visible for now. I'm going to make it real thick. Okay. So this is the MACD line. If I want to calculate the MACD line, if I took the blue line, the shorter moving average from the longer moving average, it's going to give me this red line. Okay. It's just the difference between a shorter term moving average and a longer term moving average. And that's it. That's all you're looking at. It's that simple, right? Most technical analysis is pretty simple usually, right? Okay. But from that, from the difference of a shorter term and a longer term moving average, you can generally tell if the stock is moving up without even looking at the stock, how fast it's moving up, et cetera, et cetera, et cetera. So like for example, right here, if we look at Apple right around June 30th of 2022 to about August of 2022, there's a pretty good upslope here on Apple, right? I'm going to go ahead, we'll draw it out. I'll put a trend line on the chart here, and we'll just say that in general, there was a 33% move. I can see that because it's just going to tell me exactly kind of what the move is if I hover over it. So during that time point, if we look at the difference between these moving averages, we started with the first moving average being well below that one, which is why we have that below zero value. But as that went up, the difference obviously kind of normalized to zero. It crossed up above, and what you ended up having is a positive upward movement on the MACD. Okay. We can also see how fast it's moving up, because the bigger this MACD gets, the faster it's moving up. The faster it's moving up, the more difference there's going to be between this shorter term moving average and this longer term moving average. And so the higher your MACD is. So not only is MACD a good tool to look at trend, which we'll talk about, it's also a good one to measure momentum. And you can use it as a trend and a momentum indicator. That's really kind of the core use of it. Okay, so that's the MACD line. That's this red line. The other thing people use is basically what's called a signal line. It's just a 9-day exponential moving average that's applied to MACD. So I hid that initially so we could just talk about the red line. But if I wanted to kind of just show that, which I'm going to do now, I'm going to double click on it. I'm going to go ahead and back over here, and I'm just going to make that signal line visible. Okay, so we'll go ahead and click on OK here. And oh, I did something wrong. Let's do it again. Visible, apply. I'm going to make that also a little bit thicker because it's dotted, and I want you to be able to see it. Okay, so this is the signal line. It's called a signal line because you can use it as a signal. Generally, a rule of thumb is if the MACD is trending above its signal line, it's going to be in a bullish phase. But we're going to talk more about that in just a second. The other line is actually something that was popularized by Linda Radke. And it's called the MACD histogram line. And it basically, if you subtract the value of the MACD from its signal line, you get another histogram. So let me go ahead and do that real quick. I'm going to go back into the properties of here. I'll make the last line visible. Okay, we'll go ahead and click on apply. We'll go ahead and click on OK. So that's the histogram. The histogram is just the difference between this MACD and its signal line. Okay, so let's go through that again real quick. MACD, the calculation for this red line, is the difference between a shorter period moving average and a longer period moving average. The signal line is just a 9-period exponential moving average of that. And the histogram is just the difference between the MACD and its signal line. Is that clear? If you have questions, let me know, but that's really all you're looking at. Okay, that's it. Okay. Now, common uses for MACD that I'm going to talk about is you can use MACD to identify trend on a chart. You can use it as an oversold indicator. and you can use it for divergence, which is what actually Alex Elder calls the most powerful signal in all of technical analysis. And I'm going to kind of show you the rules for all three of those as well, and kind of how you use it. So trend identification, what you look at is the MACD and its relationship to its own signal line, okay? And of course, like with trend identification, it's very important in technical analysis. Everybody says like the trend is your friend, befriend the trend, or like a rising tide lifts all boats. Trend, there's a very, very specific way if you're using MACD to understand if you're MACD bullish or bearish. And what you do with that is trend identification. So the way that we identify trend using MACD is right here. If the MACD is above its signal line, okay, so if the MACD is up above its signal line, the histogram will be above 0 because you're subtracting the MACD from its signal line. And it's also bullish, okay? And that's it. If it's down below its signal line, so over here, if you see it kind of over here on the righter end of the chart, if the MACD is below its signal line, then the histogram will be below 0. And this is bearish. You can see kind of a bullish and a bearish indication on the chart. Okay, and that's probably the most basic way to look at MACD. Okay, that's the first thing that you can look at is trend identification and how that works. Okay, and what I'm going to do is I'm going to come back into Metastock. Go ahead and delete this indicator off of the chart here. And I'm just going to show you how I got that bullish, bearish reading. Okay, I'm going to go ahead and attach the MACD expert. So in Metastock, we have an expert advisor. What it does, it has hundreds of built-in systems that'll actually tell you what that indicator is doing. Like, let me go ahead and click on this guy in the bolo hat. So for example, there's one in candlesticks, and if I showed that to you, it's going to show you like 30 different candlestick patterns, and you could go into the commentary, and it's going to explain to you what like an engulfing bullish is going to be. But what I'm going to come down here, and there's hundreds of these. What I'm going to do is I'm going to come down here and I'm going to find the one that's labeled MACD by Metastock. Okay, right here. Okay, I'm going to attach that to the chart, and what this is going to do for me is it's going to help me understand what's going on in MACD. Okay. And the first thing it's going to look at is the relationship between MACD and its signal line. So for example, right here, if the MACD crosses up above its signal line, which happens right here on the chart, then like I said in that slide, it's bullish, okay? And so then it kind of paints the bullish. Also, your MACD is going to cross above 0 because you've crossed above your signal line, okay? If it crosses back down below its signal line as it does right here, it's going to be bearish, okay? You're going to enter a bearish stage. The histogram is going to go down below 0, and your MACD is going to be bearish, okay? And you can see when that happens on the chart because I've added the expert advisor, and it's going bullish, bearish, bullish, bearish, bullish, bearish. When that crossover happens, you'll also notice right here, it says there's a MACD buy signal on the chart for you. Right here, it says there's a MACD sell signal. Here, there's a MACD buy signal. Here's a sell signal. Here's a sell signal. These buy and sell signals, they're just showing you when the MACD goes from bearish to bullish and bullish to bearish. It's just drawing that on the chart for you. Okay. And of course, it makes sense. If we're bullish on a stock, if we think the trend is going to go bullish, the logical conclusion is, if we want to take advantage of that, we could look to buy the stock. We could look to buy a put, buy a call. We could look to buy go long on an option strategy, something along those lines when they happen. Okay, but that's all. That's the first way you can look at MACD is a bullish or bearish. And what I like about technical analysis, not just this rule in general, is this is objective. So we're not looking at something that's subjective. If I've done a decent job of explaining exactly what MACD is doing and you understand it, you can do this, and it doesn't. You can do it on any chart you have, as long as it has like MACD, right? It's not something that's subjective. We're not trying to guess what the market's going to do after Jerome Powell raises rates again, or if he's going to raise them again in January. We're not trying to make guess decisions. We're looking at the trend of the market, making decisions based on what the chart is actually doing. In other words, it's objective and not subjective. Okay? So that's the first way you can use MACD. There's all kinds of ways that that you can buy. The other way is you can use it as an overbought, oversold reading. Okay, so this is generally, you'll be using this as an overbought or an oversold reading, a reversion to the mean type of an idea. The thing that we caution about with this, even in the expert advisor commentary, is when you're looking at overbought, oversold readings for MACD, you want to use something else to confirm it. As you know, maybe not this year, but when stocks or markets become bullish in general, they can stay bullish for a really long time. That they're not always, the trend is, in my opinion, going to always be more powerful than just like a reversion to the mean. So just because you're getting an overbought and oversold reading doesn't mean you should look to go short or look to go long. You should always look for a confirmation. Okay. But when the expert advisor sees there's an overbought, oversold reading, I'm going to point out a couple areas on the chart here. You'll notice that this chart is always black or white, okay? Except for when it's red, right? As it is right here, okay? And here, or when it's green, like it is right here. See how the charts are turning green? What this is doing is it's looking at MACD and determining whether or not it's in an overbought or an oversold territory. Okay, so right here we start to get a couple of oversold readings, and then price does reverse. You get a buy signal that goes up. Okay, here you get some overbought, oversold readings, but it just keeps going up because the trend is your friend. Hasn't broken that yet. Okay, so you get some more. You get a sell signal, maybe you could use that as a confirmation. One of the things that we actually do say in the commentary, I'm going to show this to you, is, well, I'll just say it the way the commentary says it. I'm going to open up our expert commentary. There's an expert commentary for all of these different expert advisors. I'm going to go ahead and dock this over to the side right here. Okay. I'm going to point out right now that it's looking at this last bar on the chart, 923.22. So this is the bar that it's in analyzing, and I can move that around. Okay, but right now it's not overbought or oversold, so it's going to tell us there's no overbought oversold range. It is currently in a bearish territory, so it is telling us that. Let me go ahead and kind of just zoom this out so you can kind of read along with me. Currently, the MACD is bearish since it's trading below its signal line. The MACD crossed below its signal line 23 days ago, and since then it's decreased 10%, and other things too, right? I'm going to go back right here, though. I'm going to move that arrow. You'll see now that that arrow is pointing at 817. When I do that, it ignores that rest of the chart. It's looking at that day and pretending that that day is the current. And you can see right here that it says as of 817, because that's the day that we're pointing at. This is the day where we had that overbought, oversold reading. And I want to just kind of talk to you a little bit about what that means. So right here, the MACD was in an overbought range. Now, prices may continue to move higher for some time. You want to wait for prices to move lower before considering any short-term moves, okay? And particularly if you're getting overbought and oversold, you see it continued to move on Apple quite a bit more. And so we never want to use, well, the recommendation here is, I'm not telling you how to trade. The recommendation is if you're looking at overbought, oversold readings, we would, at least Metastock, the software would encourage you to wait for confirmation of something else that it's going to go lower. Maybe you're looking for that MACD sell signal to come in afterwards, or maybe you just look at it overbought and oversold, and so maybe you take a more conservative stop strategy. But in general, with overbought and oversold readings, with MACD, the recommendation here is wait for confirmation. Okay. Yeah. Okay. I think that covers that enough. Oh, actually, I want to show you a different chart. I was looking at this the other day, and this is a good reason why you want to wait for confirmation. I'm going to go ahead and pull up Tesla. With the same expert advisor attached, let's zoom into the chart. And I saw this on the chart, and I think it was, you'll notice right here, we started to get overbought, oversold readings for this on 7/28 at about 272. And it continued that trend upward for 5-6 more days till 8/4, went up another to 310 before it kind of started to run into some stuttering. So I'd always recommend that you look at confirmation. Here's the example I was actually thinking about. Look at this upward move we had on MACD right here. you're getting overbought from 283. It goes to 400. The trend's your friend. It just kept going up. So this could be a good early warning indicator, but you always want to wait for that confirmation. So let me go back to Apple. Okay, and then I'll go back to my bot as well. So way one, you can look. The first method is trend identification. You can look at it to do overbought, oversold readings. As with most overbought, oversold indicators, it's probably advisable to wait for a confirmation. As prices can continue to trend much higher, definitely longer than you have solvency. So the third one I just want to talk about, and it is listed in the expert advisor in the commentary. And Alexander Elder actually calls it the most powerful signal in all of technical analysis. It's a concept that's called MACD divergence, okay? And the MACD divergence, basically what you're looking for is well, let's just draw it on a chart, okay? I went back into Apple. I'm going to zoom into kind of a view that's a little bit easier to see here. I'm not sure we have a MACD divergence here, but we're going to look for one, okay? So right here, what I'm going to look for is the MACD. The way Alex actually kind of talks about looking for a MACD divergence is he'll look for a peak to a peak or a trough to a trough, okay? Right here, you have kind of a trough to a trough, and he specifically wants it to cross above the 0 line. So right here, you have a MACD. If we're looking at this particular trough to this particular trough, we could draw a certain line right here, okay? And I'm going to go ahead and do that. We'll go ahead and kind of draw from this trough right here just to this trough, okay? And it actually hasn't established a trough yet. It's still kind of selling off. So maybe we'll go from peak to peak instead. And I actually am going to. So right here, we're going to go ahead and go from this peak to this peak, okay? I'm going to just make an observation. You'll probably all agree with me. This line has slipped up, okay? Actually, this is going to be a pretty good example. I'm going to look at price during the same area, okay? If I look at the price right here, okay, this line from this peak to this peak is going down. This is a divergence. Usually I just say, okay, well, the lines go the same direction, but this is actually a really good example of a divergence. You have an upward sloping MACD, okay? Price is not supporting that upward movement. So the way Alexander Elder actually kind of describes that is he's calling that the breaking the back of the bulls. So the most powerful bearish signal you can get in all of technical analysis. And this happened right here on Apple, right before we had a pretty sudden downward move. So that's the third way of the different ways we're going to talk about technical analysis. If Metastock finds a divergence, it's actually going to say it right here. There's been a divergence. We've noticed a divergence within the last 5 days, okay, based on what it's doing. So there you go. Those are the 3 ways to use MACD. Do you guys have any questions about those? Greg, are you talking to me? Okay, all right. I can kind of hear you through the wall, but I don't have my headset in. So you had to bing on the wall if you need me. Again, trend identification, overbought, oversold. Holy crap, I'm almost out of time. And divergence. Those are the 3 ways that you can look at MACD. And the ones I'm going to discuss. Why do I like technical analysis in general? It's objective. It's not subjective. As an objective thing, I think you can learn about, you can look at it, you can see, well, if I bought here based on the MACD going bullish, and if I sold here based on the MACD going bearish, how did that work out for me? How did that show up on the chart? So if I sold here, I'm happy. Like 168 is now to 15, right? If I bought here, 137, and sold here, I'm happy, right? Here, not so much. This would have been a loser. This would have been a loser. But I can have a very objective. I can go in and say, if I would bought here and sold here to make a profit, how much? What was my drawdowns, et cetera, et cetera, et cetera. Since it's objective, I have the ability to do that. And since it's objective, Metastock has the ability to test that as a trading methodology for me. So very, very quickly, because I kind of took too much time, I'm going to go in and kind of show you a little bit about how that works. Let me just go ahead and do this real quick. Okay, very cool. And that's one of the questions that we get, because remember with Metastock, Metastock's a very mature tool. We've been working on it for over 30 years. And as such, there's hundreds of indicators, there's hundreds of systems, there's all kinds of different stuff that we want to do. And if you're new to trading and your idea is like, I want to figure out something that's working well, we spent 10 minutes too long and 40 minutes total talking about MACD. If I just want to understand how well something works, what I can do is I can actually test it. And then before I go in and learn about it, I can see how well it worked on the chart. So let me go ahead and actually just we'll throw in a couple of symbols here. Here's Dow, SPY. We'll do Tesla as well because we talked about it, AAPL. And I do like our system tester quite a bit for a few reasons. I can test as many stocks as I want. I can test as many methodologies as I want. I'm just going to choose a handful of them here. But it's pretty easy for me to go in and very, very easily see how well did this methodology work over a certain amount of period. I'm going to throw the MACD in there as well. And I think, let's go ahead and do this. We'll do the pattern figure. I am on purpose skipping any systems that require optimization, et cetera, et cetera, et cetera. And I'm only picking ones that are built into the program. So let me go ahead and do this. I'm going to go ahead and kind of run these through real quick. There's about 90 of these performance systems. In fact, I think I can do this real quick. Hit select all. Okay. We'll go ahead and select just a bunch of them. Okay. And of course, you can select as many as you want. Can I do this? Yes, I can do that. Okay, I found a faster way. Okay. We're going to go ahead and, I'm going to select all these too. I've got 102 systems selected. You kind of get the idea. I've gone in and selected a lot of the ones that are included in Metastock, and I'm going to test them against Dow, S&P, Tesla, and Apple. All of those are going to kind of go into my system backtest. Those are what we're going to run with. Okay. Now we're going to simulate this. So we're going to go back in time. In this case, we're going to go back 500 daily bars. So it says 500. That means 500 bars. It says daily here. That's roughly with about 251 or 2. That's almost 2 years of data. Okay, 250 trading days in a year. That's going to be about 2 years. Okay, I'm going to do long trades. So every time it tells me to go long on one of these systems, I'm going to go long. Every time it tells me to go short, I'm going to go short. Okay, and what I wanted to do is just tell me which of these methods work on whatever stocks that I'm testing. And I'm doing 4. Okay, but I could do the S&P 500. I could do all the optionable stocks. The reason I don't is it takes a little bit more time. I just don't have much time left. Okay. Carlos asks, does Metastock have a scanner? It does. In my totally unbiased, don't work for Metastock. I think it's one of the best scanners available, but we do have a scanner. I use it every day to trade. Last 10 minutes of the day, I run a scan and see what's out there. Okay. So we're going to use the last 2 years of data. What I'm going to do, just to show you how this is set up, is I'm going to start with $100,000. That's going to be my trading account. Every time I get a trade, I could say buy 50 shares or buy $500 worth of shares. I'm going to have it trade a percent of available equity. I'll have it do half. So my first would be about $50,000. And as I get more money, it'll be half of whatever I have. As I get less money, it'll be half of whatever I have. So in terms of broker, I've taken the fees out of here. Most commissions have gone away in the last decade or so. And I'm going to use realistic market prices. With realistic market prices, all it means is it waits till the bar is closed. And since the bar is closed, it'll buy on the next open. Okay. There's a longer explanation, but I don't have time for it. That's really what it's doing. You can change that. Like if you're doing all of your executions on the closes like I do, you could have it just execute at the close. I'm going to leave it at realistic for right now. Okay, we're going to go ahead and click OK. I'm going to start that system test. And just to recap what it's doing, it's going to go through all 101 of those systems. It's going to do those stocks I just randomly picked in. And it's going to tell me if they worked, how successful they were, how unsuccessful they are, how many times they traded, all of that kind of stuff. Now, what it's going to figure out is what methods work best for these stocks. So if I'm looking to have a very disciplined airline pilot type of approach to trading, I want to probably start with a business plan that works well. That's another thing I love about trading. You have a business plan. So what I want to do is I want to see how well this works, how well the different methodologies work. Now, I think this is important, though. Once we decide on a methodology, I think you should learn how to use it. So in other words, I think that helps with discipline, and that's where the expert advisor and the commentator comes in. So let's go ahead and quickly look at these reports. I have about 12 minutes to go, and we'll just kind of talk a little bit about kind of the high-level things that I look for. So since we tested a whole bunch of stocks, I'm looking at average numbers. So we have the name of the system here. We have average net profit, average percent gain, best profit, worst profit. All of these numbers are averages because we tested a basket of stocks, okay? And that basket can be anything that we want it to be. In this case, it was just 4 that I keyed in, okay? I'm going to sort it by average net profit. And so just out of the box with all of the built-in systems, most of them were profitable, even in the last 2 years, okay? Even with the market being just as kind of up and down and roller coaster as it's been, these methodologies didn't work well in the last 2 years with these stocks. Okay, so we want to be able to focus on objectively what works. And so by focusing on kind of this end and not this end, we can kind of focus our education into the methods that work. Okay, over here, I'm just going to kind of expand some of these columns out and kind of go through them. Right here, this is ACT. ACT is a system that is part of Metastock. It's based on John Eller's work. John Ehlers wrote a couple of books. One of them was called Rocket Science for Traders, and there was another one, Cybernetics in Trading, I think. Anyway, very, very good technician. This is his adaptive exponential moving average, and it was a system that performed best. Okay. In fact, over the last year, it made about, or the last 2 years, on those 4 stocks, it would have made about 30% on average, with the worst performing, or the best performing being about $89,000 up, and the worst being about $2,700 up. On average, on the 4 stocks, it traded about 27. And on average, it had 12 winners to 15 losers. So its actually batting average was lower than 50%, but for every time it lost $1, it gained about $3. So in general, this looks pretty good for me, okay? 27 trades over 2 years, that means every other month or so, right? If it was 24, that'd be, well, actually, no, let me change that. If it was 24, that would be 1 trade a month. There's 24 months in about 2 years, right? So that would be 12 trades a year, about 1 a month, okay? The batting average, I don't love. I'd prefer it to be more winners than losers, but I might be willing to kind of look over that if it's a 3-to-1 return on that, okay? Our next performing system was the fractal trading system. It had about 64 trades, and you can kind of see. And I do look at these numbers. For me, and I do call it finding the right strategy for you, because for me, I kind of work full time, and then I have, you know, a bunch of kids when I go home, and I generally try and I do all my trading within about the last 15 minutes of the day. So for me, 27 trades is certainly a lot better than 64 trades per stock. 32 is also pretty good. The batting average kind of is worse here, and the profit for loss is worse here. So I think out of these top 3 or 4 systems, actually Turtle breakout, I wonder where that comes from. I have a story about that. But the Turtle breakout was pretty good too. It made about 23%. Okay. I think all things considered, actually, we're going to look at the adaptive cycle toolkit, adaptive moving average. So I'm going to go ahead and click on view. We don't have a lot of time to look at kind of this, but these would be all of the stocks. This worked best on Tesla. Worked really well on Apple. Kind of mediocre on the S&P 500. Going to sort this on profit as well. Here's Tesla. Our adaptive EMA made 89% on Tesla. 22 trades, 10 winners, 12 losers. Again, the batting average I don't love, but it did make $3.60 every time it lost $1. So, yeah, Okay. The next performing system was Apple. It made about 23% on 32 trades, and you kind of get the idea. There is a whole bunch of metrics. I'm going to go ahead and kind of come in here to this Tesla one, and I can compare how it performed versus buy and hold. I can look at the profit loss index. So for every time that number goes from plus 100 to minus 100, 22 is okay. Our risk reward was about 72%, which is really, really good. Okay. There's all kinds of other numbers. If you have questions about these as you're going through your MetaStock trade, you can click on help. We also have training videos that are better timed that don't have to do it within 7 minutes. So if I look at our equity line, I can kind of see how well this performed. I'm going to kick this out based on the equity line alone. I don't like this. It's horrible. Like it goes up, it's down, it's up, it's down. There's no consistency there. So always look at the equity line as well. So let's go ahead and go back. We're going to kind of kick that one out. And instead, maybe we'll look at the fractal trading system number 1. So go ahead and click on view. Okay. We'll just repeat the process. Let's look at that with Tesla. Let's go straight to the equity line. Then see, that's much better. Okay. So this is the fractal trading system number 1. It had a way better equity line. Okay. So let's go to the next step real quick. If I want to learn more about this system, I can open the chart. Go ahead and plot this on the chart. Okay. We'll go ahead and close out the system tester. It'll have Tesla. This is kind of our win and loss. We can see where our buys came in. We can see where our sells went in. And I'm going to go ahead and also attach that expert advisor to the chart. So if I come in here, and we're going to find that fractal trading system number 1. Okay. We'll go ahead and attach that to the chart. We'll go ahead and click on close. I'm going to zoom in right here. Okay. Not only is it going to tell me when it goes long that it's going long and short and vice versa, I can see exactly how that performed over time, but it's also going to tell me more about what the system is. And I think this is important because it helps you understand how your methods are going to work and how they grow. Okay, so let's kind of zoom in a little bit here. While there are many definitions for fractals in securities trading, the definition used in this system is a minor version of the type defined by Bill Williams, PhD, and his chaos-based trading methods. According to Bill Williams, an up fractal is defined as a middle bar with 2 lower highs on each side. Okay? A down fractal would be the opposite. So you'd be looking at this is sometimes called a pivot low. It's also called a fractal low, but you look for a low with 2 higher lows. Okay, so you look for the lowest value that's confirmed with a higher low on this side and a higher low on that side. That would be a down fractal, according to this. And the up fractal would be a high shown by 2 lower highs. Okay, with Bill Williams, according to Bill Williams, an up fractal, would be the reverse. This system enters a long position when a price crosses above the most recent up fractal. The position would be exited and a short position entered when the price crosses down below that recent down fractal. So what he's looking at is very similar to what the turtle traders, maybe a little shorter term than the turtle traders that we're looking for. He's looking for a resistance area, which is defined as a area that has a high surrounded by 2 lower highs. Okay. When that is penetrated, he'll go long. Okay, which is what happened here. We could look back here to this signal here. If we wanted to find the high that it's looking to break, I'm going to tell you it's probably this one. This high surrounded by these 2 lower highs. Or maybe this one is it. Okay, but he's looking for a break of that high. When that break happens, that's when he's going to go long. And he's going to exit that position when a low fractal is breached. Here's the low fractal right here. You see this low surrounded by 2 lower lows right here. Okay, that's where I got out of that trade on this bar. Okay, that's all it is. Okay, but if I want to learn more about what it's doing, I can actually look up Bill Williams on the internet. It's going to tell me what we're looking for. But in this particular case, that's all he's looking for. He's just looking for a break of resistance. And then when a support is established higher up and that support breaks, that's where he's going to get out. Okay. Carlos says, how do we do scanning? I'm going to show you that real quick. You can scan anything you want to in Metastock. I love the Metastock scanner. Okay, so let's say real quick that we wanted to scan on those fractal signals. Okay, the scanner, we call it the Explorer. That's kind of the terminology that we use. Okay, but if I want to define that, I could come down here. It was the fractal trading system number 1. Let's say I like that system. I like the idea of trading based on that breakout. I'm going to go ahead and select it. I can scan anything I want. So, and literally just about anything I want. With the Refinitiv data feed, what we cover is about 321,000 instruments. Okay, and I really think that the way that they've designed it with our programmers that sit right here, because I'm pointing right there, they've done a really good job of organizing that. So, like for example, if you're in like Europe and you want to scan European, you can just do that, and we'll just find the London exchange. I could scan that, right? Or if you're Asia, same thing. You can just find the Asia. Okay. If I go into North America, I could scan NASDAQ or New York Stock Exchange or all of the ETFs or all of the optionable. Or the other thing that I can do, and this is a scan I actually run, is I could just scan an index constituent. You see this list right here, index constituents. And usually I do is the NASDAQ 100, the S&P 500, and the Dow 30. I'll put those all in a scan and run for it. But that's just what I do. If you want to find optionables, you can run the scan against that. If you want to provide your own list, Carlos, you can provide that. Do whatever you want, but they do have a lot of really good predefined lists. Okay, I'll go ahead and start the scan. We're not going to stay here while it completes. But there it goes. It's going to go through, and what it's doing is rejecting all of the stocks that don't have an opportunity and telling us just the ones that did. I wish I would have been better at managing my time, so I could have spent a little bit more time in the expert advisor, but we're going to move on. The one thing I will add to that, 29 years in a row, Metastock has been rated the best software for its price category by the readers of Stocks and Commodities. I'm so proud of that. I love, like I said earlier, I love working for Metastock. I've learned so much from like Melissa and the experts that we work with. And I hope you've enjoyed today's summit, because I have. I took some notes during when Oscar was talking. I always kind of come in with a little, or I always leave these sessions with a little bit different of an idea or something learned about the market. So 29 years in a row, it's been rated number 1. We have 2 versions of Metastock. I'm going to go through this real quick. With the real-time version, which normally retails for about $265. That comes with Metastock, which is everything I've showed you here today, a whole bunch of other stuff I didn't have an opportunity to show you, and our Zenith platform that has really, it's a Bloomberg quality feed for data, news, information, everything that you want. All of that's included in one type of package. And the same package, if you were an institution buying it, would be like at least three times more expensive. So that's $265 a month with Metastock. We also have an end-of-day version, which is Metastock. It does all the scanning, everything. It's only $69 per month. Okay. The offer that we're going to do here is basically a 3-month extended trial, where if you pay for a month, we'll give you the second month for free. We'll give you the third month for free. Okay. That'll include Metastock 18. Data region that you need. We're going to have somebody help you install it and kind of give you a one-on-one tour of the program. We're also going to give you a training called Unleash Your Power Metastock. So for about $70, you can try 69 exactly. You can try the highest rated software in its price category for 29 years in a row. You're going to get unlimited access to our support team. You can do that at 800-882-3040. You can visit metastock.com/sales chat as well. You can also do that as part of your Summit Action Pack, or the Summit Traders Action Pack, which includes all of the add-ons that we've talked about today: the Patterns for Profits, the Guy Cohen's OVI, Power Bundle 360, the training from Oscar Carboni that we talked about just a minute ago. Barry Burns' Top Dog Trader. It'll throw in 2 years of stocks and commodities for it. 3 months of LearnMetastock.com. It's a premium subscription. And normally that would be $4,429. Almost all of that package has a money-back guarantee on it. Your price today is $19.92. So go to metastock.com/summit deal. Give us a call at 800-882-3040 and metastock.com/sales chat. So there we go. I do want to say thank you real quick to CMT for sponsoring today's event. CMT is a hugely well-respected organization. They've been partners since November of last year. They're great to work with. We're proud to be associated with the CMT Association. So find out more about them at cmtassociation.org. And we're going to move right on. I'm actually glad I only went 2 minutes over. Melissa's our next speaker. She does a great job. She's going to talk today. And she's been a big fan of Metastock. Well, we've been a big fan of Melissa, let me say it that way. She's been in several of our events. She's a regular. We love to have her, et cetera, et cetera, et cetera. So Melissa, how are you doing today?
Good afternoon. Can you hear me?
Yeah, I can hear you. You're coming through good. Let me go ahead and get you a presentation screen. Okay, let's see. Okay, I just made you the presenter. So it should be harassing you to share your screen. And I will let you know when we can see it. And we can see it.
Wonderful.
So I know we're starting just a little bit late. Sorry about that, but the floor is all yours. You got it.
Thank you so much. Well, great presentation by Jeff. And for those of you that are looking for a cost-effective way to scan, Jeff definitely has it. He was talking about Bloomberg. You can pay upwards of $30,000 a year for all the bells and whistles if you want Bloomberg's information. So what Jeff offers actually is very economical for the amount of information you get for the cost. And anybody that trades is always looking for what? For the picks, for ways to find the picks. So today we're going to talk about how you can find the right pick. And for those of you that don't know me, my name is Melissa Armo. I own my own company. It's called the Stock Swoosh. And today we're going to talk about trading on the side of institutional money and gaps. And I will explain what a gap is. For those of you that don't know what a gap is, I'm going to explain it today. And it's a great weekend to discuss trading and even to have this presentation because why? The market had a crazy day on Friday, an absolutely crazy day on Friday, a big sell-off. And of course, everyone's looking forward to this coming week, and especially Monday morning, to see really where is the market going to be gapping. And if you have questions, you can plop them in the room. I can see the questions on the side. Feel free to just ask me any questions as we go along. I also appear on TV, and of course, I've been talking all year really about the market sell-off. The last time the market made brand new all-time highs was January. Hard to believe. Here we are. It's 9 months into the year, one more week left in September, and we're nowhere near the highs. And in fact, we keep falling. If you'd like more information after today's presentation, you can call me at 929-3200-GAP, or you can email me at melissa@thestockswoosh.com, and you can follow me on Twitter, Facebook, YouTube, or Skype. I do put my TV hits on there as well. Again, we've been talking a lot about everything that's been happening. Fears of a recession. Some people say we already are in a recession. Obviously, everyone's aware of the fact that we're in a period of inflation. And now we have on top of that what's going on with Russia and Ukraine, which I think was also weighing on the markets besides higher interest rates on Friday. And we're going to talk about that a little bit later too. Before I get started, I wanted to put the stats for this year. This is year to date through actually just a couple days ago through the 20th for the live trading room. So far year to date, with an average risk of $2,800 per trade. These are equity trades, which means what? These are trades you would take on margin. We are going to talk about equity trades today, and we're also going to talk about options. But so far, year to date, if you were in the live room risking $2,800 per trade, you could have made over $500,000 a year, and the year isn't over. I do specialize in shorting, and we are going to discuss that today. So this has been a particularly good year for us in the room. Why? There's been a lot of short opportunities. In fact, we shorted the market on Friday. We shorted the QQQs. And we've been shorting the Qs, and we've been shorting the SPY. And guess what? It's been gapping, so it's been working. Again, we're going to talk about day trading and options today. So some of you may be doing options. Some of you may not be trading at all. And again, if you're here and you're new, that's okay. You can feel free to ask me any questions as we go along. But if you're interested in trading, it's actually a real job if you take it seriously. I've been teaching people for 10 years now. I've had the business of Stock Swoosh for 10 years. I've been trading for 14, going on 15. And a lot of people that I've come across don't take trading seriously enough. It really doesn't matter whether you're doing it full-time or whether you're doing it part-time. You still have to take it seriously if you want to be successful. And the same thing goes for how much money you risk. Whether you're risking $100 a trade or $2,800 a trade, you still should take it seriously because every single dollar that you put on in a trade, you could lose. So you want to take it seriously so that you can actually win. And remember, trading is not investing, okay? Retail traders are struggling this year in 2022 because the market has been falling off. And retail traders love to go long. In fact, they prefer to go long than short. But I'm going to talk today about shorting. I'm going to talk about gas, and I'm going to be talking about shorting because actually shorting gives you an edge. So you must have an edge. If you can call it an edge, you can call it a niche to be successful in the market. Why? Everybody's in the market. Everybody's doing something, going long, going short. Everyone is risking money, and they're all going after the same thing, okay? So every time you make money in a trade, you're taking that money from somebody else. When I make money, I'm taking that away from somebody else. That person's losing and I'm winning, okay? So you really have to have an edge against other people if you want to be successful. And what we're going to talk about today, specifically not just shorting, but also gaps, I found has given me that edge. But this is a chart. This is a chart here as of Friday's close. This is the SPY. This is the ETF for the S&P. What I have found, okay, in today's markets, and this year we're in 2022, it is really important to know what to do. I think it's important to know what to do all the time, but in this market environment, you really need to know what to do, okay? There were people, actually, this was Friday's close, that went long into the bounce, Friday into the 4 o'clock bounce into the close, okay? That was crazy to me. I watched it happen, all right? We made money, like I said earlier, to the downside, but people actually went long on Friday into the close, expecting the market to bounce into Monday. And we did have a tail. This little taily thing here is a bounce. But the fact is that if you don't know why you're going long, again, many people are just buying dips. That's what many retail traders do. That does not consistently work to make money. And that's not a niche. And you have no edge if you're doing that at all. So you have to really think like a professional. You have to think like someone that is sitting at a trading desk. I just mentioned Bloomberg. You have to think about someone that is high profile, risking a lot of money, has a lot of access to a lot of resources, is making very important decisions and taking it seriously, okay? So you have to think like a professional. You must have a reason to take the trades that you're going to take. And you have to have a reason to risk money. It can't be because you want to buy the dip. It can't be because, I'm just going to go back really quickly, it can't be because you think the market can't go any lower. Because guess what? It can. I'm not saying it will, but I'm saying it can. Do you know what I mean? So again, that's why buying on Friday into the close, the bounce, was really, in my opinion, not a wise thing to do. You have to have a reason why you're taking the trades. So one of the things that I look at, okay, is momentum. We've had a lot of momentum this year to the downside. Trading momentum gives me an edge. Why? Because I can place a small, medium, or even a large risk and get a big move and make a lot of money. That means percentage-wise. Do you know what I'm saying? Meaning you can risk $500 and make $1,000. All right, percentage-wise, that's a good return. That gives you an edge too, because a lot of traders scalp. They risk $500 to make $100. That, in my opinion, is not a good trade. So you need a system that is going to have big winners. Why? Because you will have some losers. There is no 100% win ratio system where you always win. That's impossible, okay? You have to look at every trade with a set risk, knowing that you will lose on certain trades, but you still have to win on more than you lose, and you need some big winners, all right? So momentum trading is where it's at, especially if you're an individual trader. Momentum trading is one of the most profitable and fastest ways to make money trading. Learn how to take a position in stock in anticipation that the stock will have an explosive move. These enormous moves happen in one direction and happen really fast. And we saw that Friday in the market. It was to the downside. Momentum trading is very profitable, and that's how you can make big money in the market. And again, you can get in and out, in and out. What do I mean? I mean quickly. I mean in several minutes. If you're in a day trade, or if you're in an option in 24 to 48 hours, or even a week. We're doing the weekly options, okay, which is still really quick if you're doing a trade overnight. Now, this trade, I put this trade in here. This was the biggest trade that we've done this month, okay? I put this trade in here because everybody that did it made a huge amount of money. But I really put this trade in here so that you can see how you have to be in it to win it. What do I mean? You don't know when you're going to get the big ones. I didn't know that this was going to be a huge trade. I just thought this would be a normal trade that we did. I'm going to show you what it was in a minute. But the fact is, you don't know when you're going to get the big ones. You know when you know, because you have to participate. You have to be in the market. You have to be long or short or whatever you are. And you have to have the right pick. And that is so important, because if you don't have the right pick, and if you're not in the right direction, you're not going to make any money at all, let alone have big winners. Okay. So first of all, I was talking about gaps. And again, I know this is a new concept for some of you, but I'm going to explain what is a gap. A gap is when a stock closes at one price, which every stock in the market closes at 4 o'clock Eastern time and opens the next day at 9:30 a.m. Eastern time. I'm in New York, I live in Manhattan, so I'm on Eastern time zone. You can be anywhere in the world though and trade the US stock market, just so you know. So this was FTX, all right? This closed here, this was the 15th. This was the 15th of September. It closed at one price at 4 o'clock and opened at a different price the next morning on September 16th at 9:30 in the morning. So this is a gap, okay? It closed at one price, opened at a different price. In this case here, it was a bearish gap. So the stock opened lower than where it closed. Now, I'm also going to show you a bullish gap. We didn't play this, but I'm going to show you this. A bullish gap is where you have a 4 o'clock close, and then the next day it opens higher. And actually, theoretically, you could have gone long this here if you got in, got out, and made money. I did not do that. But actually, that was a green bar. It had a rally on that day and a gap up. Okay. Now, what did we do? We were short this in puts. So I called on September 7th, way before the 16th. I'm going to go back and show you in a minute. Actually, it expired on the 16th. It went the last day. I called the 195 FTX puts that expired on the 16th, and I called them on the 7th. Now, I'm going to go back here, right there. So FTX closed here, gap down. I called, take it to the right. I called the 195s. We actually did drop slightly down on that particular day. Trade was up a little bit. Then the trade rallied, and then it fell out of the sky. You can see here where this opened, it was like $35 through the strike. Okay, this is a daily chart of FTX. The cost of the trade was really relatively cheap for this price point of the stock. I don't consider FTX inexpensive. It's kind of pricey. Cost was $3. Contract number, if you took an advanced risk of 25 contracts, the risk was 7,500. Sold at 34. I think it went up close to $40 that day was the high of the options trade. I'd have to go back and check it. It was crazy where it went that day because it was so far to the strike. Profit on this one trade was 1,033%, and with a $7,500 risk, it was $77,500. If you took 4 contracts, you could have made $12,400. Again, a massive return on investment. It literally sliced through the strike and fell out of the sky. Now, how can something like that happen? There's many reasons. I don't know if anyone remembers this particular move in the day because it was all over the news. Again, I talk on the news. We were talking about this. The CEO of FTX came out on the 15th, the day before, okay, on this day, and was talking about the fact that we're going to have a slowdown, a recession, and all kinds of things. And then it created a big sell-off in the stock. And actually, the market was down that particular day, too. So did I think this trade would go? Yes. Did I know it was going to be over 1,000% return on investment? No. But again, you have to get the big ones in order to get the money. But this goes back to my point at the beginning. This is momentum. This is a $35 move, literally in a week, okay? And that to me is a short time for an overnight. You also could have shorted this as a day trade too if you wanted to. So again, this was an option. This was a newsletter that I sent out at 10 a.m. in the morning. I plopped in here an example of one of many, many emails that I got from clients. This was Bill. He was new to the options newsletter doing gaps with me, and he made over $13,000 on this trade. He did a great job. He got a better fill than me. He got a lower price in it and a better fill in it. He had a fabulous day in this. The point I want to make is that real people are doing this and real people are trading. And I always get these questions because when people are trying to trade and attempting to trade and failing at trading the market and making money, they get frustrated over years. You're just not doing the right thing if you're not making money. I mean, it's as simple as that. Just like I said, people bought the market on Friday. That was nuts. That was nuts, okay? That wasn't the right thing to do no matter what. Even if we bounce on Monday, it still wasn't the right thing to do, okay? But the fact is that real people are doing it with me and successful. So it is possible to do it. Bill sent me this picture. This is so sweet of him and his wife. So he's new. He's new. He just started and he got that trade. And he's new to this concept of gaps. For me, it's all about looking for the footprints of institutional money. So what happened in FDX? In FDX, institutions dumped it. They dumped it out of the sky. A stock can go from, 200 and change, boom, down to 160 overnight. Remember, this is from 4 to 9:30. That's not a long time. Okay, the post market closes and then you have a close, and then the pre-market opens and has an open. But this is like very fast, people. Okay, it's a dump. It's an institutional dump. It was selling that came in and pushed the stock price down. We can talk all day long about fundamentals. I make trading decisions based on technical analysis. But in this case here, the fundamentals actually matched up with the technicals, okay? I'm talking about that in a little bit here. Someone's asking about it, about taking the trade. So we're looking for the footprints of institutional money. Big money that comes into a stock. It can go to the upside too. It can, we go long too. We've gone long some things this year, okay? But again, a lot of institutions are doing what? They are selling their long positions in the market. You've seen that in stocks. You've seen that in big stocks. Tesla sold off the last 2 days, and that stock's very strong. Tesla's in an uptrend. Tesla's not in a downtrend. It's in an uptrend, but it's gotten dumped in the last 2 days, okay? So every time you look at anything at all, any chart, any decision that you want to make a trade in, whether you go long or short, you have to look at who is in charge, the bulls or the bears. Because if you want to make money going long, then you better get the bulls on your side. If you want to make money to the downside, shorting or doing a put, then you need the bears on your side. Otherwise, you're going to lose. So for me, it is about a method to spot institutional money. So I developed a process. It took me 3 years to create my system. I go through a checklist in the morning to determine the best pick to see, are institutions going to come in and buy the stock or short it? That is the process I go through. And it is an analysis that I go through in the morning in the pre-market that I get up early and do it early. You could go through and take you about 30 minutes to do it. I do not rush the process. I get up and start rating gaps about 7 a.m. in the morning. But that is the whole system that I teach everyone that comes to me and wants to learn to trade my method in a class that I teach once a month. That class is a 14-hour class. So again, a lot of people just want to take pot shots. They want to buy on support, okay? You can look at charts and you can set up moving averages and you can set up Fibonacci's and you can set up everything in the world. But if everything in institutional money is going against you, it doesn't matter if the stock is holding on support. Like what happened in Friday. We bounced on support Friday and people bought the market into close. And so I'm telling you right now, that was the wrong thing to do, okay? Even if it holds for a day or a week, it still was the wrong thing to do. But it's all about looking at really who is in charge. So I'm following the moves that institutional money make in the market. I'm capturing those moves in a small time frame, and I'm looking at the daily chart to do it. But for me, not only do I look at gaps, I'm also looking at the short side, okay? So speaking of institutional money, the benefits of shorting is what? You get fast moves. You get big moves. Again, FDX was a big move. I'm not saying that we back to the upside in a call or a long or an overnight call. No, we did a couple years ago, 2019, I think was the year. We were in BYND when it first came out. We were in that stock in calls and it gapped up huge, and we had a similar move in that stock. But I'm telling you that shorting moves happen big and they happen fast, more so than longs. Again, and for it is what? Because of fear and panic selling. Because really there's no rush. If I said, oh, you could go long Apple if you want to, you're like, well, let me think about it a little bit. There's no panic involved in doing it. You're like, well, let me think about it a bit. You know, there's no rush, okay? Either the stock rallies, Monday, Tuesday, Wednesday, there's no rush, okay? Panic buying is very, very rare. Actually, it was something that you saw in that BYND a couple years ago. It was soon after the issue came out. I think it was 2019. But panic buying is rare. panic selling is not rare, okay, and actually happens quite often. And that is really what I'm looking for every single day when I'm trying to analyze what stock to do and make the pick. It happens because of fear. So again, this whole concept, when you think about it, it actually makes a lot of sense. I clipped this here. This is a 15-minute chart. This goes back from 826. This is a SPY. What happened here? Boom. I don't know if anybody remembers this. This was 826. We had I remember it was a Friday. It was a Friday in August. It was a month ago. Today's September 24th. This was a month ago. It feels like longer, but actually it was only a month ago when we had just a straight down sell-off, power trend day to the downside on 826. In fact, I don't even remember the reason that we sold off that day. Not that it matters, but you can see it right here. And this is a 15-minute going back since then, okay? I find institutional moves by looking for the gap, and then I go through a process in the pre-market in the morning, which is a checklist that I go through to determine if it's going to get bought by institutional money or shorted or sold, okay? So a big flow of money going in a certain direction is what moves the market. Stocks creates momentum and sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. And I will say this also, we will go against the trend. So this is not all trend trading, just so you know. Like, for example, you could have shorted Tesla last week and made money even though the Tesla trend is up. You want to be in the side of the power in order for you to make money trading, because that's how you're going to make money. And institutional money is in charge of the market and stocks at all times. And I think that's something that people miss out on when they're trying to minutia hone something down, looking at individual indicators that they're using other charts, and they're not working this year. They're just not working, and so people are losing. Okay. It really requires becoming a specialist in defining where the institutions are buying or selling a stock. This is what I teach in my class. Again, it's 14 hours. It's not something that I'm going to be able to teach you today in an hour, even if I wanted to. People pay me for the information and my time, and it's a complicated system. Once you learn it, you will know how to do it. But until you do, you don't understand it. But it all has to do with advanced technical analysis. Now, if you're a person that loves to read stuff, and you love the fundamentals about stuff, fine. If it matches up with the technicals, which we've had and seen this year in different times when the economic data has come out or when the Fed has talked and it's matched up with the technicals. But then again, there's been times you can rewind back 2021, even 2020. We had bad data, and the market was rallying. So it does not always match up, okay? But it is very important to look at what's happening in the price action and charts. You can't ignore that. If you're ignoring that and looking at the fundamentals, you're missing out. And you could be in for a lot of pain, okay, in order till those two things come to intersect. Like, a lot of people right now are looking for quote unquote long opportunities. They're like, oh my God, this is so cheap. The market's down almost 50% in the SPY and the Qs. Not quite, but almost, from the rally. People should not be looking for long opportunities at this point. Why? We could still go another 25% down. Who's to say? You know what I mean? So comprehending how to redefine and trade with this power will have a huge positive impact on your profitability as a trader. Elevate yourself, your trading, and your profits to a higher level of consistency and success by learning how to read the footprints of institutions trading in the market. It's about looking at gaps. It's about the power that comes in the gap. And this has the ability to pay you. A lot of people, again, want to scalp because they're so afraid they're going to lose. So they'll take a trade. Maybe they take a trade with size. And they take up 1,000 shares. I'm talking about a trade on margin. Or even an option, for example. Maybe they take a large contract position. But they want to get out really quick because they're so scared it's going to go against them or lose. And the market's been volatile this year. That's true. We had a big rally up in the summer. And then it failed, okay? We're already through that point. And now everybody's scared and they don't know what to do. Again, we could hold here, but if we do, my take on it is it's not for long. So the reality is the market's in a position right now. We got 3 months left in the year and 1 week. That's it. We will not make a brand new all-time high in the stock market at all between now and the rest of the year. That I can tell you right now with 100% conviction. So, if you're looking to trade, you have to look for individual stocks and individual 1 day or 2 day plays in the market, because you've got to make money in the momentum, in the moves. Because if you're looking for a follow through the upside or even to the downside, you've been having a difficult time finding that this year. You've had to get your timing right, even if you wanted to hold a short. You know what I'm saying? So again, let's talk about where I get in these positions. I get in the gap because everything I do is based on a gap. So what is a gap? We were talking about earlier. A stock gas when the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. Very, very simple. Okay. So can you go long every bullish gap? No. Can you short every bearish gap? No. Can you do the reverse in everyone? No. Do gap fills work? No. People get confused about that too. While sometimes a gap can quote unquote fill itself, but that really doesn't make any sense at all. That's not a way to play it, and it doesn't consistently work. Something that you want to do that's going to consistently work. And also it should work in any market conditions. It should work when the market is bullish, and it should work when the market is bearish. And my read on the market, I'll just tell you right now, is the market is still in an uptrend in the Qs and the SPY. I know I'm probably the only one that's saying that, but I don't make decisions based on percentages off the high. And I've said that on television. Now, I may change my tune in the next week or two. But the reality is, as of right now, the market is still holding the uptrend in both the QQQs and the SPY. And this is based on my reading of gaps and technical analysis. So let's take a look here at some bullish gaps and bearish gaps. Again, what is a gap? This is a QQQs, closed here, gapped up, rallied. This was back, again, feels like a million years ago, when you see where the market closed on Friday. But at one point, this was September 9th, people. Look, this is the 12th. We are on the 50-period moving average right here, snug as a bug, just a couple of weeks ago. That wasn't like last year, people. Look where the market closed on Friday. Look where how this looked very different the first week of September. Look at that. And anyways, this is an example of a bullish gap. Now, this is an example of a bearish gap. We did play this. Closed here, gap down, fell. Market closed here, and then gap down right in here, and you could have shorted this, and you could have done a put, and then it dropped. That was back in August, after that big rally. Remember that rally? That was the rally I was talking about from the June 16th, 17th lows that rallied in June, rallied in July, rallied half the month of August, and then we lost it. Actually, here, you can see it better here. I clipped the whole thing. So this is June 17th in the SPY. Here's the rally. This is the gap in the SPY I just was talking to you about. Here's the gap in the Qs. That was early September. So again, there are bullish gaps, there are bearish gaps. I prefer to short. Again, it's not that I don't like to go long, but I do prefer to short. So we did another put in the SPY. We did it on that day I showed you the market sold off on the 26th. This was very recently priced at $3, 517% return on investment. Just a huge trade. We got the 415s. Let's go back. The 26 here. Here's the big fat day that I showed you on the 15-minute that we sold off like a hot cake. We did the 415 puts, fell down, boom, boom, boom. And you actually could have held this, as crazy as it seems. This came down to 390. I did not hold that into the last day. You could have made even more than 500% return on investment if you held it the last day. It was so far through the strike. One of the things with options that you have to get right is not only direction, but again, aggressive entries is something that I really focus on so that we can get in early. You can decide if you want to hold it. You can decide if you want to get out quick, or you can divvy up your position. If you want to take 4, you can get out of 2, hold 2, whatever you want to do. But again, it's all about momentum, like we were talking about at the beginning. What is that? That's momentum, people. It's a big fat red bar to the downside, okay? And again, with volume. So who is making that move? Institutional money is making that move, but we're in super duper early, 10 a.m., okay? If you took a beginner risk of 4 contracts with a $3 risk, you could have made $6,200. Again, this is an exit of the first drop down 1-2. It's not holding it into the last day, but you could have. It was an insane move. It went 25 bucks through the strike. Okay. So we do puts and we also do day trades. But either way, everything that I do is about the gap. They have huge opportunity when I look for these golden gaps and find them because they spot the power of money. And it's the whole idea that power money is in charge. It just is. Even if you think it's not there, it is. Power money is in charge of the stock's direction. Trends are set and moved by the power money people, of which there's a lot of in the market. What do I mean? I mean big hedge funds, medium-sized hedge funds. I mean professional traders, banks, okay? Banks have trading desks. You can look at the banks right now. The financials are getting killed. But gaps happen in the market pretty much every day. They happen in the market on a regular basis. However, some gaps are better than others. The power is in the gaps, but you can't play every gap. So I developed a system to find the special gaps. I coined the term golden gap, but I find the good ones, okay? The ones that are powerful displays of institutional money. The ones that are important, that signify a change of direction or a bigger move in the same direction. Either way, understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. And that's how you know when the power money will flow to pay you and you can take it and get in. Another one we did, now I didn't show the follow through of this. This Nike sold off. Nike came all the way down. Nike broke 100. Nike broke 99. We did a day trade in Nike. I'm showing you this from the 20th, but after this day, 21, 22, 23, we tanked in Nike. You can pull it up and look at it yourself, but we did this on this one particular day. It was a day trade where you would take this trade on margin. So if you want to open up a margin account, you have to have a margin account at a retail broker. You can go to a prop broker. You can get 4-to-1 margin at a retail place. You can get 10-to-1 at a prop place. We don't always do expensive stocks like this, but sometimes we do. The entry was 103.90, 3,500 shares is a risk of 31.50. We put in a stop. If it stops me out, then I'm going to lose. Okay. This was a trade that was in the stats at the beginning that I showed you. We're in, we're out. We're in, we're out. This is a quick trade in several minutes. We're out. I'm just going to show you the 1 minute in a second. Profit was 33.25. When I'm doing a day trade on margin, I'm looking for one turnover, 1-to-1. This is close enough. It's a little bit more, but actually I want to show you this continued further. It actually went all the way down, broke 102. So if we did this trade here, got in, get out quickly, but I want to show you it actually went more than another $1 if you held it into the afternoon. Now, typically I play the morning, I'm in and out. So this is a 1 minute chart. Here's the gap. Stock close here, gap down, rallied. We shorted it, got the drop. This over here, again, was the low of the day in here. I did not hold it into 2 o'clock. You could have been in the trade. It would have held all day. You could have held it down if you wanted to. We did an option in this too. I don't have that in here. But the chart itself on the daily fell, of course, with the market in the last few days. So that was, again, a day trade, a trade on margin. But the foundation for taking that Nike trade and the FDX trade and the SPY was because it was a gap. And then I rated it using my system to see that it would actually follow through lower. So we shorted it, whether it was a put, which is a short as an option, or a day trade short, where you're shorting it on your platform. But either way, the reason or the foundation for taking the trade is a gap. Like if someone said to me, well, I'm going long on support, why? I mean, probably people can't really explain that. They could say, well, it's on blah, blah, blah moving average, but that's really not a strategy. It may be something you do that's an entry, but that's not a strategy. It's not the core foundation for why you're taking it. And I think, again, that's one of the reasons why people struggle with trading. They're doing things that are entries. They're not a strategy. So this is an entry here that we did in out. Okay, the strategy was the gap itself, two different things. So again, a stock gaps in the opening price today is different from the closing price of the previous day's trading. A gap is a break in the price action from one day to the next. You get gaps all the time. You can pay for a scanner to find gaps. Jeff was talking about it earlier. Just sign up, pay for it, boom. You'll find thousands and thousands and thousands every day. Okay, there's a plethora of gaps out there, but not all gaps are good. Okay. Here's another one. This is BA. You can see the nice, beautiful move this had on Friday. This stock closed here, gap down, fell. That was Friday the 23rd. Okay. Again, you can see here where this bounced in the June lows. This was, I think this is the 15th that BA bounced. Now, what if you're a beginner? Can you trade as a beginner? Sure, you can trade as a beginner. You can open up an options account with as little as $2,000. Options are not, you can trade options with just a cash account. You don't need a margin account to trade options. You do need a margin account if you're going to do day trades or equity trades, like, for example, the Nike trade. Now, here was another option we did. This was NVIDIA. This one was, what day was this one? 9/1. We did a NVIDIA put. This was a while ago now. This fell off of Planet 2. I don't even know where this closed on Friday. 145 puts we did. Cost was $6. 2 contracts. Risk was $1,200. You could have made $1,400. Again, you're looking to turn it over one. That's a good trade. That's a solid trade. If you had $5,000 in your account, you could have done this trade, and look how much of a percentage you would have made of your account in such a short time, like more than 20%. So again, if you're a new person, a beginner, doing options sometimes can really grow your account rather quickly. Similar thing with the FDX trade. Oh, I thought I had the NVIDIA chart in here. I guess I don't. I'll show that at the end here if we have time. Any questions here as I'm going along? Let me look and see if I missed anything. Any questions while I'm talking this through? So again, even with the options, I'm doing directional trades. I'm doing directional trades where if I rate the gap and it's lower, we're buying the put and we're selling it. If I rate the gap up and it's higher, we're buying a call and I'm selling it, okay? If I see a gap down and we're gonna day trade it, which we did like in the Nike, then I'm gonna short it on margin, and I do it as a day trade when I'm in and out quick. So I run a live trading room where I'm calling these trades live, but it's all about just chunking it out. You can hold options overnight. You can get big moves doing that. But again, we're not doing leads. We're not doing long-term things. I mean, who can even say? If you said to me, you know, where's the market going to be, or where's Apple going to be as of January 30th, 2023? Nobody could even say that right now. Look at where the market's been the last 9 months. If you rewind 12 months ago, no one would have ever thought we'd be at this point. It's just like the Fed trying to predict inflation and where, you know, where or how long they think it's going to take to get inflation down to 2%. They've been wrong all along. They've been wrong for the last 2 years. They don't even know, you know. But everything that I do, it looks at 26 points. If you come and you want to learn my method, this is what you learn. It's the meat and potatoes of what I do. It's a rating system that I go through and I rate everything in the morning. And I say, okay, Nike, NVIDIA, FDX, they all rank good enough to do what? To short in these cases here. Again, I prefer to short. This was another day trade that we did. This was Marvell. This was pretty medium priced. Entry was 53.35, 1,500 shares, risk 32.25. We did an add in this. So it pulled my price slightly down, but I saw it was running. You can do that if you have a bigger target in mind. 50.52 was the exit profit, was 8,100. This was a fabulous day trade. Again, we were talking about momentum, selling, panic, fear. What happened here? This was the same day that the market fell. We had the market on our side. We sold off all day like a hotcake. This closed here, gap down, fell, boom. And we hit it. And we hit it. This was a really nice trade. Let me go see. There's a couple questions here. These are day trades. No, they're day trades, not swing trades. If you're going to do an overnight, you should do an option. Why? Because an option has a fixed risk. If you're doing a swing trade, you basically have unlimited risk, okay? You need to have your account set up to short a margin. It should not be difficult to short at any broker at all. What do you mean post the gap? Well, you see it, the gap happens and then you see it. I don't know if that's what you mean. I don't know what you mean by IV crush within the first hour. You lost me there. I don't understand that question. We wait for the gap, then I rate it, then I play it if it rates good. I don't understand your question about crush. How many hours in the morning am I trading? Very, like not even an hour. If I even keep the room open till 10:30, 11, that's a long day. many of these trades, I open up the room at 9, we start trading at 9:30, 9:35, and then we could be done before 10. If I'm still in a trade by 10:30, 11 o'clock, that's a long trade, that's a late trade. So the room is usually open for a half an hour, hour a day. I'm not trading long. If I'm going to hold something long, then I'm doing an option. You know what I mean? So, I mean, it's easier to hold something in an option to wait for the move. In a day trade, I must be flat before 4. Otherwise, I'm not going to get the margin. You know, I'll go from 4-to-1 margin to 2-to-1 margin or cash. I don't want to do that. I exit all my trades before 4, and I try to exit everything if I can quick in the morning. Now, I'm not going to kill something if I'm waiting it out. And sometimes I do afternoon trades, but that is so rare that it's like hardly ever. No, I don't do futures at all. I do equity trading, and I find it to be very profitable. And I think one of the reasons that people veer towards futures is because they can trade with small amounts of money. That should not be your reason to decide to do any one particular type of trading. You could trade options with a small amount of money if you think $2,000 is small. If you have less than $2,000 and you want to trade, in my opinion, you should really wait to save till you have more money. You know, if you're someone that's really strapped for cash, you should wait and save till you have more money to trade, because every trade that you take, you're putting money on at risk, and you don't want to put yourself in a position where you can't afford to lose. Does that make sense? So if you're trading with me, we take 10 trades, Sam, talking about on average, you're going to figure about 7.5 are going to win and about 2.5 are going to lose on average. So you can't risk your whole account in one trade, and you can't trade with next to no money. I would save up till you get to a position where you can open an options account with $2,000. You're talking about, you're talking about I trade. Okay, you're talking about something that I don't do. I'm not looking at the time value or the decay. I'm looking at the momentum. So for example, if the stock has a big move and I'm getting in the right direction, the trade's going to go in my favor. I don't care about time decay. If it doesn't go in my favor, then I'm going to lose no matter what. Does that make sense? Let me go back to the market one. Oh, no, I did open the NVIDIA chart. I skipped over it. Here. Here was the day we did this. Let me quick show you. That was the day we did the NVIDIA put. Someone's asking about time decay. Let me just go back here to the market. So this trade, for example, here that we did, the 415 puts, the person that asked me the question about that. Let's say the market, this was a 26, expired the 2nd. Let's say the market rallied. Let's say this didn't do that. Let's say it flipped and it rallied up here. The trade would have lost. Whether it did that in a series of 5 days or 6 days or 2 days, and then just kind of pittered off, if it went the opposite direction, meaning it went the opposite direction of the momentum I'm trying to get. Remember, this was a put. So the momentum I'm looking for in this case is to the downside. If I had gotten momentum to the upside, the trade would have lost. Like if this had happened here, pretend that happened here. It didn't, but pretend it did. It wouldn't have mattered how many days I had left or anything else at all. It was going in the wrong direction. Does that make sense? So again, if I get a move, momentum move, then the trade's going to go. And when I lose in a trade, it goes bust, and I just lose in it because it doesn't go in my favor. Does that make sense? So I'm not worried about 25, 50 cents, 75 cents in options decay, because I'm not trying to eke out, squeeze out pennies on the dollar from my profit. You see, I mean, you can see these trades here. You know, I'm looking for 50%, 100%, 200%. I'm looking for huge returns on investment if I'm going to hold something. Ideally, if it goes the first day, we get a really, 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 really big move, you know. but you could get a 50% move the first day and get out. I've done that on trades before. There's nothing wrong with 50% return on investment either. What was I saying? I showed you the NVIDIA. Here we talked about Marvell. Anyways, once you learn how to find the momentum, it's really not hard to make money. It's a lot of people don't understand that, and they're doing the wrong thing. So we also did a short in the market, which again, you could have done a put in this if you didn't want to do it on margin because it was expensive. Entry was 392.35, shares 1500, risk 29.25. We did an add in this, plopped it on, huge trade here. This was on 9-1. Let's take a look at it. Again, this doesn't even look like much. Doesn't even look like much at all, but it was a beautiful trade. Stock close here, gap down, boom, fell, we got in, out. So I was asking, how long do I trade? Quick, short, boom, 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 in and out. Here it is. Market close here, gap down. We shorted it, got the drop, out, done. 10 o'clock, 10:15, done. Okay. So again, I don't mess around when I'm day trading. And again, I'm calling these trades live in the room, but it's about having a focus, a daily focus. One pick a day is all you need. Professional traders have specialized strategy systems and reasons for taking trades. A lot of people don't have reasons for taking trades. They think they do, but they don't. It's really just an entry or something that they're doing, but there's no structure behind it. There's no system behind it. The system and the strategy is what allows me to get these kinds of trades, number one, that have big profits, and number two, to be very effective, like I'm throwing a bullseye, like a dart to hit a bullseye when I'm trying to get something on a Thursday, on a Friday, on a Monday, okay? I'm trying to hit one bullseye every day. That's it. That's all I need. I don't need to hit 10 bullseyes. And when I hit it, then I'm done, okay? So I'm looking for a high probability of directional bias for the entire day, a big move in the day, preferably, early confirmation. Got to get it in the morning, out of the gate, and precise entries with follow through and a good risk reward. But I'm analyzing the large time frame of the daily and then making entry decisions and exit decisions on the 1 minute chart. That is both things that you would learn in the class from me. You'd learn how to rate the gap. You learn how to take all the entries that I do, and then you would learn how I exit as well. But using the 1 minute chart allows for good risk to reward trades, but the checklist really tells me what to pick. This is also how it's helped me read the market right for this year, and really, make the kind of predictions that I made to you earlier, that the market will not make a brand new all-time high before the end of the year, which a lot of people think it could. We might have a Christmas rally, but we're not going to be near the highs. And we do have earnings season starting in October. It's going to be a very profitable time to trade when earnings season comes out. But even if we rally from where we are here, we won't make it up by that point. But everything I do is I use a checklist. That checklist is a plan of action. It tells me what to focus on. I'm not in the chat room taking ideas blind. Okay, I don't have the TV on and I'm taking ideas blind from people. You have to write it down. Why are you doing this? Plan it. Look at your risk. Look at the targets. Look at everything you're doing. Do I really want to do this thing? I think people, once they trade for a while, they become sort of desperate, actually. Desperate to make money, desperate to be successful, desperate to get the losses back that they've had for the last umpteen trades they've taken that they haven't made money, or even classes that they took where they didn't feel like they got their money's worth. You have to have a fresh, new outlook. What you're doing is say, tomorrow, Monday morning, I'm going to get up and I'm going to do something completely different because what I was doing wasn't working. If what you're doing is working, keep doing it, okay? But a lot of people attempt to trade, fail at the beginning, and then flounder for years, okay? So if you're one of those people floundering, winning, losing, but at the end of the year losing, stop, take a break, pull back, and change what you're doing, okay? That could be coming to me and taking my class, learning something completely new, but don't keep losing money, okay? It's stupid, actually, all right? And in today's day and age, you can't do that. You can't. When you go to the store and everything costs more, I know they're saying inflation's, 13% they said now or something crazy. That's ridiculous. I shop at the grocery store for myself. I order in Manhattan. I have food delivered. I mean, there's things I'm buying now that are 100% more than they were a year ago. Because I can tell. I can go onto my thing and see what I paid in my checklist in my Amazon. I mean, it's crazy. So you have to think about what you're doing with your money. Think, okay? All my thinking is in the morning when I'm going through the checklist. My checklist is my plan of action. Everyone that puts money into the market should have a plan of action and a checklist. On a professional level, all high-income career field specialists have a checklist. If you were a pilot, if you were a surgeon, you have a checklist, okay? I'm not gonna go operate on somebody without going through the checklist. You have to think about what you're doing, and a lot of people don't, all right? So again, why are gaps so profitable? Because they're created with large institutional money and they're an event. It creates a sense of urgency. Remember, we're talking about panic. That's an action is being forced by participants of the stock. They have to do something, they have to do it right now. This is why gap trading is incredibly powerful. Trading gaps is a powerful and profitable way to trade because you're trading on the side of power money. For example, what does bullish institutional money look like? This has been a nice chart. Now, this did sell off in the last couple of days with everything else, I know. But this is one of the strongest things out there. You want a bullish pick? Here you go, Ulta. Beautiful chart. Look at how this has held up with the market this year. This was through the 12th, and it fell somewhat in here, but this is still super duper strong. Love this chart, okay? What about bearish institutional money? Dell, we did this one. This was a really good one in here. This was, again, a gap down, fell off a planet. This is large institutional money selling the stock, okay? The course is a 2-day live course. It is October 1st and 2nd, 9 a.m. to 5 p.m. Eastern time. You must be there live. You will want to be there live so you can participate, ask questions, and obviously get the most out of it that you can get out of it. If you want to learn it, which you want to learn it. Learning it is essential. So then you understand it. Yes, there's people like Bill that are taking the trades and they're just taking them. But understanding it is really important too. Why? So that you can risk more or maybe hold a little bit more. Do you know what I mean? Maybe take on a little bit more risk. But don't waste time trading without getting anywhere. It just makes no sense. And a lot of people just, I don't know, they do waste time. I don't know why people do it. I guess they hope one day they'll wake up and something will be different, but people just really waste years of their life not getting anywhere with the market. You got to get to the point that time is too precious to waste. If you don't realize that now after COVID, after 2020, I don't know if you ever will. Your financial freedom counts. You have to learn how to trade properly. It's an investment. It's an investment in your own success and your future, but it can well pay off. So Bill paid $69.99 and he made almost 14 grand in one trade. So, and that was his first month. I think he was 2 weeks into the program. So, who knows what we'll get tomorrow? Who knows what we'll get this week? I don't know. I don't plan that far ahead. I get up in the morning every day and I look for the gap and I rate the gap. This is Daryl. He's been doing extremely well too. He's one of these people that just goes right after it. He just goes right after it. And he's in the room every day as well. So again, I'm teaching people how to do this. I'm here if you have any questions. If you'd like a trial for the live trading room for this week, email me at melissa@thestockswoosh.com. If you're interested in the class, you can email me too. But it is a 2-day class where you learn the rating system. It teaches you how to play the stock on the day. You do need to empower yourself to trade. It is a complete system to use how to trade. And again, you can go to my website, which is www.thestockswoosh.com. It's a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. The class is online. It is $69.99. It's October 1st and 2nd, 9 to 5. If you have questions, you can email me at melissa@thestockswoosh.com. I'm doing a Twilight Zone special because Sci-Fi had a marathon this past weekend, and I love the Twilight Zone. I don't know if anybody else here loves it. But if you sign up by Wednesday, September 28th, you get the trading room free for 1 year. So this is a good deal. Again, I call the trades live in the room with the entries, the exits, and the stops. And it is a class on how to find, pick, and play professional bearish gaps. You must email me if you want to sign up. You must email me if you want a trial. What else? I'm teaching about gaps. Yep, that's everything that I do. If I do an option, it's based on the gap. If I do a day trade, it's based on the gap. It's one system that you can use to do day trades or options or both. Personally, I like both because of the fact that you can hold the options overnight. And so I'm taking slightly more risk in those because some of those trades are more expensive and I want the bigger moves. But again, the day trades, if you just want to focus on the day trades in the room, that's fine too. No, the class is live. Someone asked. I know we started a little late. So I went a little bit over. I hope that was okay, Jeff. Thank you so much for having me.
Oops. Yeah, you're totally fine, Melissa. You're doing great. Can you hear me?
Yeah, I can hear you.
Hello? Okay. Good.
Thanks so much.
Yeah. Let's see. I think there was a question, and I didn't hear an answer for it. BC wanted to know if the course was recorded. Like, can they get a recording of the lessons?
No, the class is not recorded. I'm sorry, I thought I answered that. The class is not recorded. You must be there live. One class per person, one payment per person per class. But you can, of course, ask me questions every day in the room if you're in the live room. And you can always email me questions, call me, and ask me questions.
Okay, perfect.
Thank you.
All right. Thank you, Melissa. Appreciate that. Thanks for coming in today. All right. Let's go and do this. All right. Let's, okay. All right. Let me go ahead and make me the presenter. We'll go ahead and share my screen. Okay. Show my screen. And we'll just kind of get on with it. Okay. Hope you're still enjoying it. We have another great presenter coming right up. Let me get into the slideshow. Before we get there, I do want to remind you of the Summit Special that we're running today for coming. It includes Patterns for Profit by Rick Sadler, 3 months of Guy Cohen's OVI, the Power Bundle 360, very, very popular new add-on, the Oscar Carboni training, our Top Dog Trader add-on, Barry Burns, 2 years of stocks and commodities, 3 months of Learn Metastock and Unleash the Power of Metastock for free. Normally that would be $4,429, but here at the show today, it's $1,992, and you can get that by going to metastock.com/summit deal. You can call us at 800-882-3040, or you can visit online at metastock.com/sales chat. So there you go. Let me go ahead and let's say thank you to Stocks and Commodities for sponsoring today's event. Stocks and Commodities has been sponsoring all of our events. I went and tried to add it up today, how many events we've done. I think we've been running them now for 9 years, at least quarterly, and then we've been doing them monthly for a while. But I'm going to have to figure out how many total summits we've done. I'm sure it's a huge number. Anyway, they've sponsored every single one of them, and it's a great company to work for. They've done 17,000 trading articles, 1.3 million subscribers, publishing continuously since 1982. If you're watching us on YouTube, go to metastock.com/tradersummit and register today so you can get a free copy of their magazine. Also, if you take advantage of if you spend $300 or more today, you will get 2 years subscription. So that's provided by them. So if you want to claim your free issue, go to metastock.com/traders-summit. You can get a free issue. So, and we do appreciate all the work that they've done to help us advertise these events and make them what they are today. So in any case, our next speaker is somebody that I've been working with all of those 10 years and even further back. I bet we go back decades. But Steve Primo, I like kind of the methods. I think he's probably going to talk about method 4 today, but I could be wrong. What I like about Steve is he's very thorough. He's very well-paced. When he says stuff, I understand what he's talking about. He's very clear. He's a great teacher. And so let's go ahead and bring him on here. Steve, how are you doing?
Hi, Jeff. I'm doing great. Thank you. Can you hear me all right?
Yeah, I can hear you now. So
okay.
Let's see.
There we go. Let's see. Can you see everything okay?
Yeah, what I see right now is 2 edges to help us survive any market, which sounds like it'll be important right now.
Yeah, it's going to really help. Thanks, everyone, for attending today. And thanks to Jeff and everyone at Metastock and the Online Traders Summit. I have a great presentation for you today because I'm going to be talking about 2 edges to help you survive virtually any market. And you'll see the importance of that in the last weeks or months or so we've been experiencing. These 2 edges are so simple, but you'll actually be able to start applying them as early as Monday. And I really feel they'll help elevate your trading in terms of consistency. Now, for example, let's take a look at this older chart here in PLRX. Most traders looking at this would say, well, Steve, there's actually no direction. This is a trendless market, right? Kind of just going sideways. And I kind of think I'll just avoid this because it's really not giving me any clues as to what it wants to do. Well, that's not necessarily true because the first edge I'll be teaching you actually would have indicated that the overall trend was up. Therefore, the overall trend is up. You should be looking for buying opportunities. Now, the second edge that I'll be teaching you today would have indicated immediately that the short-term trend was up as well. Now, when you have the overall as well as the short-term in sync with each other, you have a high probability for some rather big moves. And as we can see later on what happened, the stock gapped up roughly about 15 points, okay? Based on some news or some announcement that came out, obviously the gap up opening. The funny thing is, though, with the tools and techniques I'm sharing with you today, you would have noticed that this was, in the realm of a high probability move days or even weeks in advance of that. Now, the same thing works for the downside. Here's a chart in CHTR charter. Once again, people looking at this would say, hey, Steve, this is a range market. I've always been taught to stay away from range markets, right? That's trading 101. Because whenever you buy it, it goes down, and whenever you exit, it kind of just falters and stays where it is. So you're going to get whipsawed, right? Well, not necessarily true, because once again, the first edge I'll be teaching you actually would have indicated days in advance that the overall trend was down. So even though we may be going sideways, it was telling you the overall trend is down. And then secondly, the second edge told you that the short-term trend is down. And once again, when you have these two in sync, based on the chart I'm showing you right here, it has a high probability for a strong move down. And you can see it fell 130 points coming into the next month. Now, this is what we're going to be talking about, these two edges to help you survive any market. They are extremely simple, but as you can just see right now, they are extremely powerful. And by Monday, you'll be able to apply them to any market, any time frame, and in any direction. So welcome once again. My name is Stephen Primo. I'm the president and founder of Specialist Trading. I've been trading now for 45 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. So that's where we get the name Specialist Trading. Now, if you're not familiar with what a specialist is or what you used to do, because there aren't already that many specialists around anymore, it doesn't mean that you're any more special than anyone else. But in the old days, before the internet, before high-speed computers, if you wanted to buy or sell a stock, let's say, you would call your broker, let's say E.F. Hutton. Many people may not remember E.F. Hutton, but in the old days, I was a major broker. And the broker would take your order over the phone. He, in turn, would call up the floor broker on the trading floor. Tell him, let's say, to buy 100 shares of IBM. He would copy down that order, then walk over to the trader who specialized in making a market in IBM. In fact, IBM was one of the stocks I made a market in. So the specialist would either buy or sell. That's how we created a fair and orderly market. So that's what we did. I traded through the crash of 1987 and the bull market that followed. So I've seen just about every technique, every market environment, straight up, straight down. I've traded through about 4 or 5 different crashes and bear markets. I've traded through the great bull market that started in the 80s or so. And so I know what works in terms of consistency, and I know what doesn't. So roughly about 15 years ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate traders about things that really work and to have them stay away from things that really have no levels of consistency. So that's what you'll see today with these two edges, that they're grounded in simplicity, but they really can help take your trading to the next level. Now, before we begin, as always, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these two edges, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, if you'd like some more education on a daily basis, see a lot of new names here, please feel free to follow us on Twitter. I would highly recommend copying down our handle right there, abbreviation for Specialist Trading, because every day I post different information, a little displays on some of our signal strategies that have been generated and go into a little bit of detail as to why or what they're based off of. Also, a little bit of financial wisdom along the way as well. So there's lots of great free information on a daily basis. So please feel free to follow us on Twitter. Now, we are a little bit different from other companies, first and foremost, because we are an educational company and because our belief is that no two traders should trade alike. In other words, you should be able to identify, looking at the chart you're looking at, what the market wants to do and what direction it wants to go to and what you should be doing. But you should never take your cue from someone or something else. That, in my opinion, is a recipe for disaster. That's why my goal is simply to provide you with techniques and methods and tips and strategies so that you can ultimately make your decisions as to where you want to buy, where you want to exit, where you want to place your stop. Okay, we provide you with all that information, but ultimately you're making the decision. The reason why I focus on this and emphasize this so much is because in my 45 years of trading, the only traders who have stood the test of time, who have that amount of longevity, are the ones that make their own trading decisions. They don't go to chat rooms or trading rooms. They don't wait for earnings to be, announced. They don't look at, jobless claims or announcements, and they don't watch somebody on TV. They have a simple plan in place, and they just stick with it. That's how you become a consistent trader. So my goal as a mentor is not to force feed you signals, but it's to teach you how to trade with a specialist edge. In fact, let me share with you what I learned trading on the floor of the exchange. Here's what my mentors taught me. One of the first things they taught me, and what I teach all of my students around the world, and that's this. It's the easiest thing in the world to overcomplicate your trading. Virtually anyone can do that. I mean, think of it. You can be trading for 30 minutes or 30 years. Doesn't matter. And you can pile on more and more indicators, more and more systems, more and more tools that will give you this false sense of security that you're going to be successful, because the more things you have, the better your odds are of being a successful trader, right? I mean, that's what I was taught, and that's what I used to do with myself. If you had seen my computer screen on the floor of the exchange, I had about 30 indicators plotted. We didn't have chat rooms or trading rooms then, but I was subscribing to every newsletter of every trading guru. I was weighted with, just anxiety for every stock that had an earnings announcement coming out, or the jobless claim, or the money supply in those days. That was a big thing. And there was just so many things I overcomplicated my trading with. And guess what? It didn't make me a dime. For the first 2 years of my tenure on the floor, I didn't think I was going to be down there much longer, because it was just so overcomplicated. My mentors, who were specialists themselves, saw this. So they said, Steve, it is the easiest thing in the world to overcomplicate your trading. Anyone can do that. It doesn't take a lot of character to do that. But on the other hand, it's the most difficult thing in the world to simplify your trading. And by simplifying, what they meant was to strip away what they called the useless noise, all of the indicators, all of the different systems, all of the different market times, time periods, all of the complication that we think is going to make us successful. Once again, in my 45 years of trading, it's the opposite. It's the simple things that work, not the overcomplicated ones. So if you have the courage enough to strip away half the things, I would say closer to 75% of the things that you have in your trading plan, and just focus on the basics, I truly feel you'll get that closer to the consistency that you're searching for. Let me share with you what I mean, okay? So let's begin today's educational presentation. Edge number one. Now, the first thing is we want to look for the overall trend, because the overall trend will tell us what side of the fence to be on. In other words, what type of mindset we should have. Should we be looking for buys, or should we be looking for sell setups? Well, if the overall trend is up, we only want to look for buy setups. If the overall trend is down, we only want to look for sell setups. So here's edge number one. If price is above the 50-period simple moving average, the overall trend is up. It's that simple. And conversely, if price is below the 50-period simple moving average, the overall trend is down. See what I mean by uncomplicated? And you can all do this right now. Whatever time frame, if you trade a tick chart of the E-mini futures, or if you trade a weekly bar of crypto, makes no difference. You should have a 50-period moving average plotted on that screen. For example, let's take a look at this generic chart. Most traders would say, hey, Steve, there's no trend here. Look, we're going down, then back up, and then back down again, right? There's no trend at all. But what's the first thing we teach our students? It doesn't matter if you've been trading, once again, for decades or just a few minutes. The first thing we teach them is to apply the 50-period moving average. And then we teach them to always ask themselves this question before they pull the trigger on a strategy. And that is, where is price in relation to that 50-period moving average? If price is above the way you see it right here, well, then the overall trend is up. And remember, you will have a higher level of consistency if you only look for buy signals when the overall trend is up. We are never going to look to short when the overall trend is down. I know a lot of you would say, that's silly. I mean, the other day the market was straight up and I could have shorted it, made a ton of money. You're right. There are going to be some fantastic setups to go short and to go long when price is below the 50 that are out of sync with this simple rule. But remember, it's about consistency. It's about a numbers game. 2 steps forward, 1 step back. Because just like the slot machines in Las Vegas, they will give you a jackpot every once in a while, right? They have the worst odds in all of Las Vegas. But if you stick around long enough, you'll get a jackpot. And it gives you this false sense of security that you're doing well. You're saying to yourself, hey, look at all the bells and whistles going off. I guess I'm doing pretty well. But they're designed to keep you there, because if you eventually continue to stay at the slot machine, you will give all the money back. And they know that. It's the same way with selling above the 50 period and buying below the 50. Sure, you may have a great trade every once in a while, just like a jackpot. But if you do that over time, you'll eventually give it all back. Trust me, I know, because I used to trade that way my first 2 years before my mentors got a hold of me, and I couldn't make a dime. Every once in a while, I'd have a fantastic trade. And a week or two, maybe a month later, it would all be gone. So trade in sync with the overall trend. Now, let's look at this generic chart. Once again, most students would say, Steve, there's no trend. And just a sideways down, up, down market, right? What's the first thing we teach our students? To apply the 50-period moving average and then ask that question. Where is price in relation to the 50-period moving average? In fact, that phrase and that question is so important, I would suggest writing that down on a Post-it and putting it on your screen. So therefore, you wouldn't be out of sync. You can remind yourself each and every time, where is price in relation to the 50-period simple moving average? And price is below, as we see here. So what's the market telling you? Not me, not some guy on TV, not someone in a chat room. What is the market telling you? The only thing we should be listening to. It's telling you the overall trend is down, and therefore we will only be a seller. We don't care if it goes straight up. It has to be above the 50 for us to be a buyer, okay? Now remember, this is not a system. This is not a strategy. We don't just simply buy or sell at the market. It's just telling us what mindset to have. Should we be a buyer or should we be a seller? Should we be looking for buy signals or sell signals? Doesn't matter what strategy, doesn't matter what technique we're trading. You can apply this to any strategy. It makes no difference, and we truly feel it will increase your odds for consistency. Okay, so we know the overall trend. And if you don't believe how powerful this is, go back and look at your last 10, 20 trades. I can almost guarantee you that the reason why you had losses is because you were either buying below the 50 or selling above the 50, doing the opposite of what this rule states. So what we want to do now is look for the short-term trend. We found the overall trend. Now we want to look for the short-term trend. Now, I know a lot of you will say, well, Steve, the way I was taught is that we have to look at a higher time frame, right? So in other words, if I'm trading a daily bar, I look to see what's going on in the weekly time frame. Or if I'm trading a 5-minute time frame, I look to see what's going on in the hourly time frame, right? That's the way you do it. Remember, don't overcomplicate your trading. There's no reason to look at 2 different time frames. In my personal opinion, I don't tell students not to do this, but it's up to you. But in my personal opinion, I have found no consistency in looking at 2 different time frames. In fact, the only thing that does is to keep me out of a winning trade while I'm waiting for them to line up together. So only look at one time frame, the time frame that the signal that you're trading is generated on. And so here's what we want to do. For edge number 2, when a bar closes in the top 25% of its range, the market, not me, not some guy in a trading room, but the market is saying, I want to go higher on the short term. Conversely, when a bar closes in the bottom 25% of its range, the market, not me, not some guy on TV, but the market is saying, I want to go lower on the short term. Okay? So let's look and see what we mean by closing in the top 25% of its range. Once again, a generic bar here. This could be a tick chart. It could be a monthly bar, a weekly bar. Makes no difference. But what you want to do is, if this is above the 50-period moving average, what you want to do is divide by 4 separate but equal parts. And if you close in that top 25%, what is the market telling you? It's saying it wants to go higher on the short term. All right. So if you have this in sync with the overall trend, well, that's a really good sign. We'll show you that in just a few minutes. So let's look at this chart again. All right. We're above the 50, so we know the overall trend is up. Now we see these bars right here. Here's the first one, close in the top 25%. And look, we went up for the next 5 or so bars. Now this could be monthly bars, could be yearly bars, it could be tick charts. Makes no difference. And then look what happens. Straight down. This is where students say, hey, Steve, I could have shorted there, made a lot of money. You're right. But look what we have here. Another bar that closes in the top 25%, okay? Had you shorted, you would have had to be very quick and get out, because look what happened after that. Isn't it a lot more conducive to being consistent, to being profitable, if you're just in sync with the overall and the short-term trend? Now, What if we close in the bottom 25%? Same thing, makes no difference the time frame. All you want to do is divide by 4 separate but equal parts. If you close in that bottom 25%, the market is saying it wants to go lower on the short term. So as we look at that generic chart, once again, we are below the 50. So the overall trend is down. Now, if we have the short-term trend down, as we see here, we have a high probability setup for the market to go much lower. Once again, do you see how simple trading can be? There's nothing you have to buy. Didn't sell you some $10,000 system. There's nothing you have to have a higher time frame, or there's no chat room you have to go to. You can start doing this Monday. Remember, our goal as a mentor is to put the power back in your hands so that you make your own trading decisions. As I said in the beginning of this presentation, the only traders I know who are still trading after 30, 40 years are the ones that make their own trading decisions. They don't go to chat rooms or trading rooms. They don't wait for earnings or jobless numbers to come out or economic announcements. They don't watch guys on TV. They simply follow their plan. And that's what I'm trying to instill in all of my students around the world. So we know now how to identify the overall and the short term. So how can we put this into some type of a plan, some type of a technique? Well, here's what I'm going to share with you today. Here are some technique examples. Some of them happened within the last couple of months. Some of them happened within the last week, okay? But let me share with you and show you the exact rules for this. Now, remember, we're not talking about a system or a strategy. Those are complete rules for entering, exiting, placing your stop, money management, tracking the trade. That's not what we're talking about today. A technique simply highlights or puts a spotlight on a high probability point of entry, okay? How you decide to get in is up to you. How you decide to get out is up to you as well, okay? Now, we teach you these things in our courses, but in today's free educational presentation, I'm just going to highlight these high probability areas with this particular technique. Okay, let's look at this chart here in Apple, all right? This was a couple of months ago. Someone will look at this and say, hey, looks pretty good, it's been going up, but you know what? That chat room I go to or that $10,000 program I bought on support and resistance tells me that all the institutions are selling here. So I've got to sell too, right? Because they're never wrong, right? They're always right, the institutions. That's where all the big money is. Once again, do you see how I'm making my decisions based on someone or something else? What is the market telling me? Well, the way to do that and find out is we apply the 50-period moving average. And we see the last 5 or 6 bars have closed above. So what we're looking for is a bar that either closes, or I should say intersects, or as close to as possible the 50-period moving average. We have a couple of them here. And if we apply the short-term trend, which are bars that close in the top 25%, which we have identified, we want to see a bar that either intersects or is very close to, and then consecutive bars, 2 or higher, right next to each other, as we have right here. This is a high probability sign that this wants to go much higher. That's it. Did I say anything about earnings? Did I say anything about economic news of what's going on in the world? No. The market tells you just about everything you need to know. In fact, to tell you how powerful this is, remember I told you I used to look at news. I had to make markets in roughly about 60 stocks, so I needed to know the inner workings of all of my companies that I was making markets in. That's what I was taught anyway. It wasn't until my mentors told me, they said, there's no reason to know that. You're getting in and out of trades in less than a week. Why do you need to know that? The market's telling you basically everything you need to know. And this is one of the first things they taught me. So let's see what happened here. This was coming into July. And as we see towards the end of August, it went up 30 points. See how simple this is? Let's look at another example. This one's in GameStop, okay? Once again, someone looking at this would say, hey, Steve, I took that $5,000 course in candlesticks, and there's a bullish engulfing pattern here, extremely bullish, right? So you decide to just buy at the market, and look what happens. And you say, well, you know what? Maybe I got it a little bit too early. Maybe it's time to double up because that chat room says that it's oversold. So now it's time to buy. Once again, this is the way I used to make my decisions based off what someone or something else was telling me what to do, right? Basically, when you base your decisions off someone or something else, what you're telling the markets, what you're basically telling everyone else is, I'm not smart enough to make my own decisions, okay? I don't have enough knowledge, I don't have enough experience, so why don't you do it for me? I'll pay you to do it for me. Can you imagine a lawyer or a surgeon saying that? I'm not smart enough to operate on this person. I'm not smart enough to be in court with this person. Why don't I pay someone else to do it for me? It would be ridiculous, right? more of an airline pilot. I'm not smart enough to fly this plane. Is there anyone back in the seat in the economy section that can fly this for me? I'll pay them. But that's what traders do on a daily basis. You've got to learn to make your own trading decisions. Just the way those professionals do, so do you. Don't rely on what others are saying. You should never ask the question, what do you think of the market? Once again, when you ask someone or say, what do you think of the market? Or what do you think of this stock? Or what do you think of this time frame? You're basically saying, I don't know what to do. And you shouldn't even be in the markets if you don't know what to do. So that's the gap we fill. That's the service we provide. All right, so let's say you think this is oversold, right? What is the market telling you? Well, we apply the 50-period moving average, and right at this point, it's starting having consecutive closes below. So it's telling us that the overall trend is down, all right? But what about the short term? Because if the short term isn't down, well, then we don't really have a setup. Remember, we want to see a short-term bar that it closes in the bottom 25%, either intersecting or at least very close to, and we want to see consecutive, at least 2 or more in a row. So as we identify those with these red arrows, we have a total of 3 altogether. They intersected, they're very close. This is a very strong sign that this wants to go lower. And coming into September, it fell 10 points. So if you were thinking about buying that, that was a really bad decision. If you learned how to listen to the market, look how much ahead of the game you were, and you made your own decisions. All right, let's look at GPC, genuine parts, all right? Once again, someone looking at this would say, well, I don't really know what to do here, but if you have the 50-period moving average, you say, well, the overall trend is up, so I don't know what to do yet, but the overall trend is up, so I'm not going to be seller. I know that. Now, if we apply the short-term trend, we look for bars that are close to or intersecting, but we want them to be consecutive right next to each other. Now, these two are not, so it's not giving us a sign here. It's good, but not good enough. But here, we have a bar that's very close to the 50 and followed by another consecutive bar. So this is enough for us to know that this is a high probability setup that it wants to go higher. Now, this was in July. Now, coming into September, the stock was up 23 points. And you see all these up green arrows show where the market is still in a short-term uptrend because the bars are closing higher. Okay, let's look at ZTS. All right, we were originally above the 50. Now we have closed below. Let's apply the short-term trend identifier. And we see we have 1 here telling us it wants to go higher, but that's not enough. We need consecutive. And here we have 2 consecutive, intersecting and very close to the 50. So right here, coming into August, this stock was telling us it wants to go lower. If you're thinking about buying, you really have to be careful. There's a lot of risk behind this. And look what happened. It fell 15 points coming into this month. All without the aid of listening to anyone, having to pay for someone to tell you what to do, all without the aid of having to wait for earnings or having to wait for jobless claim. You know, you don't have to do that anymore. Remember, make your trading simple. It takes a lot of courage to strip away these things that really have no levels of consistency. All right, let's look at hindsight now. Here's a chart, a 4-hour chart of the Canadian dollar. Now, looking back in hindsight, sure, it's been going up. It's been in a nice uptrend. And how could we have caught this? Well, first thing we do, apply the 50-period moving average. And we knew back here a week or so ago, just a little over a week, when it crossed above and had consecutive closes right here, coming into September 14th, that the Canadian dollar wanted to go higher on a 4-hour time frame. So we knew it wanted to go higher. Now, it's not predicting how high. We don't know how high, and we don't know how strong it's going to be, but at least we know we're not going to be a seller. I don't care what anyone says, you're not going to sell this. Now, if we look for the short-term identifier, we see here that it meets the technique requirements. It's intersecting the 50, and there are 2 in a row. In fact, there were 2 more in a row right here. And look what happened. Coming into this past week, it was up 350 pips, over $3,000 per unit. I'm not saying you would have made that, but that's potentially what you had to make using this simple technique. Let's look at LANC. All right, once again, this looks like it's just going sideways, but now that you know the overall trend technique, you know that this has been in an overall uptrend since June. Mid-June, we had consecutive closes above the 50, so now we know we're not going to sell this. I don't care what anyone says, you should not be selling this. You're out of sync with the overall trend, okay? Remember, you only lose when you're out of sync. If you're selling above the 50, the odds are against you. If you're buying below the 50, the odds are against you. Trading is a numbers game. We know we're not going to be right on every one. Sure, there will be some great shorts above the 50 and some great buys below the 50. As I told you earlier, it's like the slot machines. It's okay. We don't want to get sucked into that gambling mentality. So let's look at the short-term trend identifiers. Well, even though they're not intersecting the 50, we have 2 consecutive bars that close in the top 25%, and they're rather close to the 50. So this is a little bit subject, but if you wanted to decide to go long this or look for a buying opportunity, that would have been a wise thing to do, because coming into September, the stock was up 40 points. Okay, OKTA. Once again, we were originally above the 50, and now we crossed below. Even though we have one above, remember, we have more that are below. So the overall trend pretty much is down. If we apply the short-term trend identifier, which once again, we're just doing it on our own. We just are putting in these arrows to show you. Well, we have one here above, what we wanted to see consecutive ones, and they don't have consecutive. We have one here below, and we don't have a consecutive one going lower. We have one back above and one back below. So there's really no sync with the short-term trend. So the overall trend may be down, but the short-term trend has no real defined direction yet. So we don't have a high probability setup to go either way. This could go either way. So we wait another bar or so. Here we go. Now we have 2 consecutive bars that close in the bottom 25%. We're close to or intersecting the 50. So this is a high probability situation that OKTA wants to go lower. So let's just say we sold at the market, or let's just say you were long and you said, excuse me, I think I will get out of this because this is a pretty bad sign. Maybe I just want to exit my long position. And for 2 more days, nothing really happened. You say to yourself, wow, maybe I made a mistake here, because the overall in the short term we're in sync, and usually it's followed by a pretty big move to the downside, but nothing really has happened. Well, you just had to wait 1 more day, because look what happened. 35 points at the downside. Now, obviously, some news event came out, some announcement that caused this stock to gap down tremendously. Since we do not follow news at all, news is not a requirement in any of our teaching. I stopped listening to the news over 4 decades ago. So it's not in any of our teaching. How did we know? Well, we did know it was going to gap down. There's no way we knew that, but we did know that it wanted to go lower. And someone would say, well, how did you know it wanted to go lower? Because the chart in front of us told us. You see, we're always taught to listen to someone or something outside of what we're actually trading. Once you learn how to focus on the source, which is the chart in front of you, it's a lot easier and, as you can see, a lot simpler. Okay, as we look at MTCH, here's a weekly chart, all right? Once again, not really any clear idea. If we add the 50, well, we see most of the bars are above. So the overall trend is up, all right, on a weekly time frame. This is going back to October of 2021, about a year ago. Let's add the short-term trend identifier. And we see that we had 1 bar down, and then followed by 1 bar up, and then 1 bar down. So not enough information to tell us what it wants to do. It could go straight up, it could go straight down. We don't have any idea. So we wait, and look what happened in the next 2 weeks following. Consecutive closes below, and we intersected and are very close to the 50. So this is a clear-cut sign that if we're long, we should look to get out or maybe raise our stop. Or if we were thinking to go long, maybe we should stay on the sidelines until it gets above the 50. Or if we were more aggressive, maybe we should look for a shorting strategy, because the stock fell 90 points coming into this month. In 1 year, it fell 90 points. Now, I don't know anything about this company. I don't know anything. I don't know what it's worth, or I've never followed it before. But the market told me a year ago that it wanted to go lower. So that's all we listened to. Lastly, a monthly chart of Costco. Let's say you're a long-term investor. You can still apply this technique. This is going back to 2010. Now, we're looking at these 7, 8 months here, not much clear-cut direction, but we apply the 50 and we see that the majority of the bars are closing either on or above the 50. So we know the overall trend was up when this was trading about $50 or $60 back in 2010. If we apply our short-term trend identifier, we see, we have consecutive closes in the top 25% here, and they're touching or intersecting, followed by 2 more consecutive closes, even though they're not touching the 50, very close to. So this is a very, very high probability sign that Costco in 2010 wanted to go much higher. And we've all seen what Costco has done, okay? Up 520 points coming in 10, 12 years later. Remember, what my mentors taught me, what I teach all my students around the world in over 115 countries in every state in the United States, it is the easiest, trust me, the easiest thing in the world to overcomplicate your trading. Anyone can do it. It doesn't take a lot of character. You can apply more and more techniques, more and more systems, more and more indicators. It doesn't take a lot of, character or innovation to do that. You can be trading for 30 minutes. Trust me, when I first started trading, I had 30, 40 indicators on my screen, and it didn't make me a dime. Here's what my mentors taught me. They said it is the most difficult thing in the world to simplify your trading, because you have to let go of all this what they called useless noise that we had been trained that actually works in terms of consistency. But it's amazing how they're really like urban myths. There's so many things we're taught that have no levels of consistency. And it takes a lot of courage to strip them away and not use them. But once you do, then you're on that road to consistency. And you'll see, wow, trading is really simple. It's really simple to apply, okay? I'm excited to get up every morning because I know I'm in sync with the overall and the short-term trend. So let's recap before we go into a great offer we have for all of you. Remember, first thing you want to do, I don't care what market, I don't care what time frame, I don't care what strategy you're using. I don't care. It could be one of mine, it could be one of yours, someone else's, makes no difference. But always have a 50-period moving average applied on the screen. Let's go back to that first chart we looked at, okay? Remember, we were looking at this chart in PLRX and we said, hey, it's a trendless market, right? Not really. If we apply the 50-period moving average, it's telling us the overall trend is up. If the overall trend is up, do we want to sell anything? Absolutely not. We're only looking for buy setups with whatever strategy we're trading, okay? So the overall trend is up. Now, technique number 2, add the top bottom 25% rule. That means we're looking now, since the overall trend is up, we're looking for bars that close in the top 25%. And so we've identified it by putting them manually right here, okay? So we see that we have all these bars closing in the top 25%. Now look what we have here, consecutive bars that are close to or touching. So that was our sign going back to May that this wanted to go higher, and a couple of months later, we saw that it had a big spike. Once again, there was obviously some news announcement would cause that. We didn't know that. We don't follow the news. So how is it that this technique was telling you to buy? Because the market always tells you in advance what it wants to do. All right, how about this one in Charter, all right? Look like a sideways market, a range market. These are the ones you stay away from, right? Because you always get whipsawed. First thing you do, apply the 50-period moving average. Once we see that that's applied, we ask ourselves, where is price in relation to that? Price is below, so the overall trend is down. Are we going to be a buyer? Let's say we go to that chat room and they say, you've got to buy this. There's going to be some news coming out of it. It is so good. Oh my goodness, it's so oversold. You have to buy this. The odds are against you for doing that. Listen to yourself. Listen to the chart in front of you. It's telling you it wants to go lower on the overall trend. Now, apply the top bottom 25% bar. In this case, it's the bottom 25% because we closed below the 50. And we see that the short-term trend is down, all right? We have a number of consecutive bars here that are close to or touching the 50 period. And look what happened. Stock fell 130 points, okay? All without the aid of someone or something else telling us what to do. You're on your road to making your own trading decisions and becoming in charge of your own trading destiny. That's our goal as a mentor. 2 edges to help you survive virtually any market. So ask yourself, and ask yourself honestly, do you think these 2 edges that I just taught you can help your trading for the remainder of 2022? Remember, we only have 3 months left. I'm sure you made, just like most traders, a lot of promises and hopes and dreams and goals at the beginning of the year where you want it to be by the end of 2022. And most likely, if you're like most traders, you're not even close to reaching those goals, right? That's okay. I did the same thing. I know exactly what it's like. It's very frustrating. It's extremely depressing. But I just shared with you 2 things that can get you back on track. Now, what if I could share with you many more different edges, techniques, and tips that are totally different from what I just taught you today? Upwards of half a dozen more tips and techniques that I've accumulated in my 45 years. Well, here's a great offer we have for all of you for attending today and for being a part of the Online Traders Summit. We're going to offer you our 3 hours of trading techniques and what we call Secrets of Stock Exchange Specialist training sessions. A number of years ago, I was asked to be the head speaker at a conference in Colorado, and they recorded my speaking engagement there. And this is what this is. This is a video course, a video seminar, where I go into detail, talk about many more high probability trading edges. I talk about which indicators to use, but also more importantly, which indicators not to use. I go into the difference between a system versus a strategy, talk about the #1 chart pattern, about being on the right side of the markets. But here's one of the best things about this 3-hour video seminar is that I give you the complete rules to one of our most consistent pullback strategies. That's strategy #1. So as you see today, I just shared with you a technique, an edge. Remember, I said how you decide to enter, how you decide to exit or place your stop, that's all up to you because this is not a strategy. It's just a technique. But in the 3-hour video seminar, you actually get all of the complete rules to strategy #1. You'll know all the different variables for entry, the different variables for exiting, and the different variables for placing your stop. You can apply it to any market, any time frame, and any direction. Now, if you're still not convinced that we can really help you, let's look at this chart here. This is a chart of the spiders, and it's a 60-minute chart, an hourly chart. How could the technique I shared with you could have helped you this past week coming into that news announcement that the Fed made? Now, I know so many prospective students will say, well, Steve, I realize what you're teaching has a little edge to it, but you know what? When stuff like the Fed announcement comes out or news or economic conditions, this stuff all goes to the wayside because it can't hold up to that. Well, I'm not here to tell you that everything works 100%. I know from trading for 45 years, nothing works 100%, but there is a high level of consistency regardless of news events. Now, we all know that on the 21st, the Fed made the announcement about raising interest rates, okay? We're going back to the 13th and 14th, about a week prior to that on a 60-minute chart. Looks like we've come down, but maybe we're making a base. Here's a bullish engulfing pattern. Maybe we're going to go back up. What does that edge tell us? Once again, apply the 50 period. We have consecutive closes below on an hourly time frame. So we knew as far back as September 13th, a full week before that announcement on an hourly time frame, that the overall trend was down. Now we look for the short-term identifiers, and what do we have? 2 consecutive bars that closed in the bottom 25%, close to or intersecting the 50-period moving average. So this was telling us in advance, a full week in advance, the market really wants to go lower. Someone could say, why? Is that based on what your estimation is of the Fed announcement? No, we don't follow news. I stopped looking at that 45 years ago. I have no idea. I don't follow the Fed. But based on this, my students knew either to be out of the market or look for shorting examples. And we all know what happened. Now, here's when the announcement came out with the Fed. Isn't it funny, with the whole time we were below the 50, and potentially you could have made 25 points if you shorted or went short the spiders, okay? Now, you say, well, 25 points, that doesn't sound like a lot, but that was comparable to 1,500 Dow Jones points in 1 week. So you could have used this as a trend identifier. Not necessarily you have to trade the spiders, but let's say you were in the markets or trading the markets. You could have used this as your market trend tool to tell you what side of the market to be on, okay? So if you're not really sold on thinking that this is a powerful edge, this just happened this past week. So here's how to take advantage of this. Here's our Secrets of a Stock Exchange Specialist training sessions, 3 hours of more high probability trading edges. Let's break it down. Now, usually my sister site, Pro Trader Strategies, sells this course on their website for close to $1,000. It's jam-packed with that much information. But because of our association with Jeff and the Trader Summit, we're going to drop that price down to $37, discounted to $37. You can probably go out to lunch for a lot more than that these days than just spending $37. And you're going to get 45 years of tips and techniques that I've accumulated that I still use in my own personal trading. Remember, this is for a limited time only, for only $37. I'm going to add an extra bonus to this as well. If, along with your purchase of the Secrets course, you decide to buy it, we will include a 50% discount on any of the product that we sell. So if you go to Pro Trader Strategies and you look at all the courses, the different strategies, all the different tips and techniques, we will take an extra 50% off anything if you want to include that along with the $37 Secrets course, okay? So this is a great way to become familiar with what we teach and how we can really help you. Remember, you owe it to yourself to take your trading to the next level. The year is almost over. Take advantage of this amazing deep discount of $37 and take advantage of it. And also includes 50% off any other product we teach, any other course, any other strategy at Pro Trader Strategies, okay? Here's how to take advantage of this. Once again, Pro Trader Strategies is my sister site. They're in charge of all the discounts. They're in charge of all the pricing and tech support. You can email them at tradingapprotraderstrategies.com. I would highly recommend giving them a call. You can call them right now. They have trading consultants manning the phones right now at area code 310-598-6677. They would be more than happy to take your order over the phone for $37 or answer any other question concerning strategies or other methods that we have. We have a host of different other trading techniques that you can have more information about. Now, that link you see at the very bottom is the link that will take you to the info page. You can also sign up online if you like. That's not a live link, but I believe they're going to post that on the, chat box. Or
It's
maybe
up there.
It's up there. Thank you, Jeff. Thank you for doing that. I'm just about at the end. We have a little bit more time left for questions. So, Jeff, I don't know if you want to read them to me, or should I open up the chat box or the question and answer box?
We don't have a lot of questions, but if you do have some questions for Steve, go ahead and let us know. But we're not having a ton of them right now.
Okay. One of the main things, though, one of the questions I get a lot about any of my strategies or courses is, well, how do we stay in contact if something doesn't make sense, or we just want to check to make sure we're learning or progressing correctly? And each and every one of the students that I have, regardless of what course or how long they've been trading, they all get my personal email address. So you can email me whenever you'd like with any question. It could be on the weekends. I was answering emails this weekend from our students. And it comes directly to me. It doesn't come to an intern. It doesn't go to a salesperson. It comes directly to me, so no one else will see your question, and I'll answer it as quickly as possible. So there's always a lot of questions about that.
And for all the, Barbara wanted to know, do you take market direction into consideration when you're trading individual stocks? That's a great question. Thank you, Barbara.
Yeah, this is one thing I personally don't do, but once again, what our credo is, our philosophy is, since you're making the decision, if you want to take that in consideration, if that helps you, by all means, go ahead. So what I would suggest is, if you're looking at the Dow, or let's say you're looking at the spiders, or you're looking at the QQQ, something that represents these different indices, apply the 50-period moving average and this short-term trend identifier, and then you could use that to tell you what you may want to be doing in a certain stock. So if that is overall down, well, then maybe you want to look at and see that those have the same signals in the stock, whatever you're looking at. But it's up to you. I mean, we have students that will trade that way. We have other students who say, no, I just take face value, whatever I'm looking at. If I'm looking at a certain stock, that's all I'm looking at. And that personally is the way I trade myself. I don't look at anything else. But there is no one right or wrong way to trade. And I always tell my students, even though I stopped looking at news 4 decades ago, if you feel you have to look at news, if you can't cut the umbilical cord and you feel that it really is important to you, then by all means, go ahead. All I stress is that it's not required. There's no requirement at all in any of our methods that news comes into account. Okay?
Perfect. Krishna wants to know, how do you make sure the trend is reversing based on the 50-day SMA or SMD?
We go into a little detail with that in the course, but one of the main things you'll see is when price is above and below. Obviously, if price goes back, let's say it's above and price goes back below, well, then obviously it's reversing on the overall trend. But on the short-term trend, as let's say if the overall trend is up and the short-term trend is up, as price starts to decline, you'll see less and less bars that are closing the top 25%. This is a clear-cut sign that the short-term trend is getting out of sync with the overall trend. And so therefore, you may want to stay on the sidelines, even though the overall trend is still up. It looks like it's getting ready to reverse. So we teach you these things in the course, but there's different ways to look at it.
All right, Mark wants to know if this is on a DVD set or is it a digital?
Oh, the online course? No, it's sent to you with a link that's yours to keep. A lot of students always say, wow, this is so inexpensive. So is it only good for like a month or so and then it expires? No, it's a link you get and that you can open up and watch on your computer or even on your iPhone whenever you want. It's yours to keep. And like I said, it's filled with roughly over 4 decades of tips and techniques that you won't find anywhere else that I've accumulated from my years on the floor.
Yeah, Barbara says thank you, and Krishna says thank you. Also, like one of the questions that comes up a lot is these strategies are all built for Metastock. Do they also include scanning?
Yeah, they have scanning. One of what you had mentioned before, one of our best strategies. I didn't want to go in and make things too complicated today, but one of our best strategies is strategy number 4 that you can scan for, and that to tell you, just to go into a little brief detail, what I taught you today are the first 2 rules of strategy number 4. So yes, you can scan for these.
Can you show me how to work my microphone? Just kidding.
I can't help you there.
That's actually the end of the questions that we've got here, Steve.
Okay. I just, in closing, like I said, we're a little bit different. We're an educational company, and our sole purpose is just to provide students with tips, techniques, and education so that they can ultimately make their own decisions. So I hope I kind of shared that with people today.
Yeah, I think you did a great job. I really appreciate you coming in and spending some time with us.
Okay, thank you, Jeff, and thanks to everyone for attending today. And stick around. There's a great speaker coming up next.
All right, thank you, Steve. Appreciate it.
Thank you.
All right, we're going to do this. We'll go ahead and kind of get transitioned over. And let me make me the presenter real quick. The presenter, show my screen, and here. We do have a few minutes extra. That's okay. Yeah, I can show you one of the things I absolutely love about Metastock if we have enough extra time. Before we do that, though, I'm going to go ahead and talk about our Trader Summit Action Tool Pack today that we're doing. It includes all of the great add-ons that we've discussing. You're going to get Rick Sadler's Patterns for Profits, 3 months of Guy Cohen's OVI indicator, Daniel Sinnig's Power Bundle 360. That was getting a little late, right? Oscar Carboni's Trend Lines and Technical Formations training course, Barry Burns Top Dog Trader, 2 years of Stocks and Commodities magazine, 3 months of LearnMetastock.com, and Unleash the Power of Metastock. And all of this is very, very good. You can get that. Normally it's $4,429. But here at the event today is just $1,992 as a special offer that's available. So you can do that by giving us a call here at 800-882-3040. You can go to metastock.com/sales-chat, or you can go to metastock.com/summit-deal. Obviously, like, we've had so many great presenters. I want to say thank you to all the great presenters that have been coming in today. Mark said, great presentation. Thank you. Awesome. Thanks, Steve. It's been a really, really good day. I'm very, very happy with how everybody's done in terms of the presentations. And I hope you share that sentiment and have learned something today. Since we do have a little bit of time, but not a lot of time, we will say thank you to Stocks and Commodities for sponsoring today's event. They've got 17,000 articles that are available as part of a subscription. They've got 1.3 million subscribers. They've been continuously publishing since 1982. They've come in continuous sponsors of the Metastock Traders Summit since we started doing them 9 years ago. So they've been great partners with us. You get a free copy. If you're watching on YouTube, you need to register to get the free copy. Metastock.com/Traders-Summit, Traders-Summit. Craig is going to put the link right in your chat box. But metastock.com/Traders-Summit, you can register. All of the presenters today had really, really good bonus offers that you can take advantage of as part of that registration. But one of the bonus offers is Stocks and Commodities. So again, if you do any of the subscriptions today, you're going to get at least 5 months. As long as you spend $300 or more, you're going to get 2 years of Stocks and Commodities for free. So we love Stocks and Commodities. They've done a great job of, like I said, sponsoring us since the beginning. So in addition to that, we'll go ahead and say thank you to CMT Association. You can find out about them at cmtassociation.org. They've been long-term sponsors of today's event and or our workshops and the events that we do and all that kind of stuff. And we appreciate it. cmtassociation.org. Carlos, I'm glad you asked a question. Thank you for that. Today's webinar is it being recorded was the question? Yeah, it is. Actually, what we're doing is we're actually simulcasting this webinar to YouTube. And within about an hour of our shutdown time, we're going to go ahead and send you a recording of the event, and so they'll be automatically sent to you right around. We're going to close up today at about 4 o'clock our time, so that'll be sent right around 5 o'clock. So we do have just a few extra minutes. Our last presenter is going to kick off at about 3 p.m. our time, which is about 9 minutes away. Since we have a little bit of extra time, what I'm going to do is I'm going to just basically play a video and invite you to go take a restroom break if you need to. So here we go. Let's go ahead and turn on this. And here we come.
Hi there, Greg Lewis, Metastock Software. As the marketing director, I get asked all the time, what is Metastock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you.
Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of Metastock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love Metastock's OptionScope. OptionScope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And Metastock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, Metastock explains how they work in an easy-to-follow commentary window. Metastock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. Metastock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the Armo. And as you become a more experienced trader, Metastock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about Metastock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, well, if you enjoyed that, let me go ahead and go back to the Metastock thing. I promised to show you, since we had a little bit of extra time, one of my hidden gems of Metastock. And so as we wait for Barry to get in here and get started, I'm just going to show you this. As you know, listening to Oscar earlier, trend lines, support and resistance, things like that are very, very important. And nobody draws better trend lines than Barry or the Oscar does. But what I want to show you is one of the tools that we have in Metastock that will automatically draw lines for you in terms of just support and resistance levels. So a lot of times people want to find, like, for example, Vince Vora, he likes to find stocks that have kind of entered all-time high territory or even all-time low territory. And the idea being is once you have a breakout of an all-time high, it's going to make it easier for you to find a trading decision. So one of the tools that we've included in Metastock for basically a number of years is called the dynamic trading tools. And so what I've done is I've just opened up a chart of the DIA. You should be able to see it right here. And I've applied a template, which is just a collection of tools that allows you to automatically draw both support and resistance areas as well as trend lines. And so to do this, if you've got Metastock, you can right click on the chart, any chart, go to apply template. And the template that you're going to look for is the dynamic trading tools. Okay. And once you apply that, it's going to basically draw a bunch of lines on your chart. It's going to draw a long-term resistance, a short-term resistance, a support long-term, and a support short-term. Okay. In addition, if it sees an upward sloping or a downward sloping trend line like it does right here, it's going to draw those lines on there for you. Now, these are fully automatic, so they're going to be drawn on there and you can see them, and they're very, very easy to kind of visualize and see. But the reason that I like this tool so much is because it's totally objective. So since these are programmed in, if you want to find stocks that have made a new recent break through support, through resistance or down through support, you can. There's scans for that. So very, very easily what I can do is I can come in here. I can come into the scanner. And what I'm going to look for is, I'll just show it to you real quick. If we go to DT, you're going to see support and resistance long-term, support and resistance short-term. And I'm not going to run this because we've got our next presenter ready to go. But I have run this. I ran it about a week ago. If I go to the report, I can kind of just show you what it's looking at like. So let me see here. Oh, here, we're over here. Okay. Let me go ahead and right click. We're going to go to the report right here. And I ran this last week, and I was in the office doing another presentation. But I ran it against the same list I always run it again, like the S&P 500, the NASDAQ, the Dow Industrial. And what we've got here, the one that it is this is long-term support and resistance breakdown. As of last week, we had this list. And what you're going to see is the close price. You'll see break up and you'll see break down. And what this is saying is 606 days ago, Union Pacific broke up. Okay, so obviously that's a little bit further away, but I can come down here, and if I'm looking for something that broke in the last several bars, like Humana and Molina Healthcare broke last week above, or broke through resistance. 6 days ago, it was Regeneron, Energy, Public Service Center, ON Semiconductor, Morgan Stanley was 7 days ago. So you get the idea. Like if I'm looking for stocks, I mean, even the total trend trading strategy is very much based on a breakout trading strategy. But if I'm just looking for a stock that breaks up through a resistance area, breaks down through a trend line, something along those lines, these are the scans that'll do it. And so just another thing that's really helpful about Metastock is it can automatically go in and find the stocks that have broken through those areas. Very, very cool tool. Play with it. It's called the Dynamic Trading Tools. So there you go. That was actually exactly perfect. And we will talk a little bit if you do want to get like an extended trial for Metastock today. Again, it's been rated the #1 software program in its price category for 29 years in a row. You can do that at like $69. So we'll give you, if you do 1 month, we'll give you the second and the third month for free. So it's $23 a month. You'll be running that till Christmas Eve, December 24th, if you sign up today. So, and then you can have a Christmas. So anyway, I can't believe we're 3 months away from Christmas. That boggles my mind, but you can get in touch with us. We can help you get set up for that. Again, there's so much in here. I can show you anything you want. 800-882-3040, metastock.com/summit deal to sign up for the package that includes all of the great speakers today, or metastock.com/sales chat. So if you're using Metastock and you haven't played with the dynamic trading tools, there you go. Little tip for you. Actually, that's from a webinar that I do called The Hidden Gems of Metastock, where I talk about 3 of my favorite features in Metastock. So anyway, our next presenter is Barry Burns. Barry's been working with us for a number of years. He is going to talk about, his 5 energies for trading. He does a really good job. We're going to just get the time and over to him. I'll let him close up the day. Oh, we love Barry. It's been a minute since we've seen him, and we're really excited to have him back in the room. Barry, how are you doing today?
Here we go. I am doing well. Hi, Jeff. It has been a minute, hasn't it?
Just a minute. Like, I don't think it's been too long, but it's been long enough. You're due to kind of talk to us. So we love having you.
Well, I love being had. No, wait, that didn't sound right.
I don't have a comment there. In any case, I did just turn the presentation over to you.
Okay, great. Let me make sure real quick that I'm choosing. I'll see it got all messed up here. Okay, so for some reason, all right, is my screen share working, or it's saying I'm getting all kinds of weird messages? It says my screen sharing is now paused.
I don't even see it. Let me do this.
You don't see it. Okay, yeah, let me try again. Let me go to monitor 2 clean. Let's try that.
Okay.
Can you see my slide now?
I can't. Control room, can you see the slide? No. Okay, I hear through the wall now. Let me go ahead and do this. I'm going to make myself the presenter. I'm going to show your face again. And then I'll make you the presenter again. Now, usually that's all we need to do. It should say, hey, do you want to share your screen? Like it did just a minute ago.
Yes. Okay. So let's see. I can either do just a window.
I usually do the screen, like the entire screen.
The entire screen. Okay. Screen 2. Okay, let's try that. Screen of monitor 2.
But all right. We got it.
Did that work?
You're good. Yeah.
All right. With your expert.
Sometimes, yeah. Turn it off and turn it back on. That's what we did. So anyway, we can see your screen. We can hear you. The audio is good. I'm going to let you go.
All right.
Great. Yeah, it's all yours.
All right, thank you. Okay, so that was the trick. I was sharing the application, but I needed to share the screen. That's part of the challenge of having multiple monitors as a trader. Got several different monitors here, and sometimes it gets a little confusing. Of course, I get very easily confused, especially after the 60s. I don't know why, but anyway, so hey, everybody, we got, a good group here. And so first of all, I just want to thank Metastock for inviting me to be here. I have indeed, as Jeff correctly said, been with Metastock, working with them for many, many, many years. I would actually say decades, because Metastock was actually and this was before I've been doing any presentations with them, but even as a new trader, Metastock was the very first software that I ever used, and still with them here. So, that says quite a bit, because that's been a long time, and still using it, still loving it. And now I just feel very privileged to actually be, working with Metastock and to be at the place where I am right now. So highly encourage you all to take advantage of the offers that they're making today. So as you can see there on my slide, my topic today is trade timing strategies for entries and exits. And I want to pull up questions and chats here as well, and maybe we can do a little bit of back and forth talking since I'm here live. Let's see if I can. Oh, I can. There we go. Awesome. I love this. Yeah, I would love to do some interaction. So I was able to pull out the questions box, and it looks like that is where people are typing. So that's great. Now let me scroll down here. Wow, it's been a lot of engagement. Yeah, let me see the first ones here, or the most recent ones. Okay, cool. So yeah, let's go ahead and switch to the next slide. And the next slide is my ugly mug. So here's just a little bit about me so you know who's talking to you today. Again, my name is Dr. Barry Burns, and I'm a published author. I wrote the book Trend Trading for Dummies, part of the famous Dummies series you're probably familiar with. Stocks Commodities Magazine, fantastic magazine, highly recommended. And I'm very proud to say I keep getting Reader's Choice Awards from them. And what that means is that every year they poll their many subscribers, asking them, hey, what's helped you the most in the last 12 months for trading? And here at Top Dog Trading, we keep getting awards. And in fact, last year we got 3 awards. So, and the reason that means so much to me is because it's voted on not by some committee, but by actual traders, you know, people like you, real traders. So, by the way, if you voted for me, thank you, appreciate that. I've helped other authors write their books, and I got some training at the CME exchange, but I also went back after that and gave a presentation for the CME exchange, obviously Metastock, York's exchange, et cetera, et cetera. They're a long list. I'm not going to bore you with all the details of my background, but anyway, just wanted to let you know that I do have some street cred, meaning Wall Street. Important disclaimer here. And I just want to stop real quickly and say, you know, these legal disclaimers, you see these a lot, and especially on multi-speaker events like this today, and you might get a little tired of it. So I'm not going to read it all, but I encourage you to read it. And of course, we get people coming in and out during a multi-speaker event like this. One thing that I just want to add is so many people do not read these. And I understand why. It's not the most exciting language for sure, but it is very important. I mean, think about it. We're legally required to post this. So that, first of all, should tell you how important it is. Number 2, yeah, it's not very entertaining, but it is very educational. The reason we're required to put this is to keep you grounded in reality. Unfortunately, there's a lot of hype in the trading world, and so it's very important that you keep yourself rooted and grounded in realistic expectations. And that's what these regulatory statements do. So highly recommend that you read them. So now, since we're here live, very interested, like you say, or like I said earlier, I wanted to make this interactive. So if you would please type into the question box, what are some of your most common trading problems? And maybe I can help you with them today. So I've obviously got a set presentation, but I can customize it. And I want to provide the most value to you that I possibly can. So if you can share with me what some of your common problems, struggles, or frustrations are, then maybe I can integrate that into the presentation and be, you know, of more value than just simply going through my presentation in a rote manner. So what do you guys struggle with? Type that into the questions box. And let's see, let me open up the chat box too. Maybe some questions going in there. Nope, don't see any there. What do you want help with? What do you need? What are you struggling with? What frustrations, if any, do you have in your trading? Or is everybody just making money hand over fist? You got no problems. Everything's sweet. There we go. Thank you, Carlos. I love it. We needed a brave soul, and Carlos is a brave soul. So pulling the trigger. Okay, I get that. That can come from several different things. One can be fear. You know, money has emotion connected to it quite often. Money is a very interesting thing. Different people associate different things with money depending on your background, your experience with it, how you were raised, what your parents taught you about money, etc. But yeah, sometimes just pulling the trigger is kind of scary. And that doesn't come out of greed, that comes out of fear. You know, the 2 main emotions they say related to trading are greed and fear. So that one is more of a fear one. And I get it. I get it. You're certainly not alone. You're just the brave person who's willing to admit it. Let's see, Jay. Good, Jay. Thank you for typing this. He says, do you have a different trading mindset for your long-term retirement account versus your brokerage account for day trading? Yes, I definitely do. Thank you. Great question again. I totally do. They're very different things. In fact, and by the way, Carlos will address pulling the trigger today. So avoiding the answer to your question. We will, in fact, that question is great because that's pretty much what the vast majority of the presentation is that I have for you today. So you're at the right place. Jay, I will address your answer right now. Day trading, I feel, my opinion at least, is a very different mindset and more challenging than investing, long-term retirement account. Very, very different. My opinion is that for the vast majority of people, including myself, day trading is more challenging mentally. Although, again, everyone's different. Some people freak out over investments, and investments you have to really I don't really teach investing. What I do is pretty much just dollar cost average into things and ignore it. Watch it a little bit, maybe here or there, but don't make a lot of decisions with it. But that's given that you have a lot of time. So again, with investing, it's good to talk to a specialist in that area, and I am not a specialist in that area. So the answers to how to treat that would vary depending on how old you are, how much money you have at a certain time. There's so many variables. So I'm not here to give investment advice whatsoever. But yes, I do believe they're very different mindsets, and that for most people, day trading is very, very different. Very different. ZJ says deep pockets to cover drawdown. And so great. Another thing about drawdowns is deep pockets can help, but also hedging your position. So drawdowns are a normal part of trading and investing. I would definitely recommend that you learn about hedging your positions. I personally hedge with options. So a lot of people use protective stops. I also use protective stops in certain situations. But I remember one day before Christmas, I lost half of my money in one position, not my whole account, overnight. And it was like, again, the week before Christmas. So not a very Merry Christmas that year. And what I learned from that, what I took away from that, was I had a protective stop put in place, but it didn't really help me because the market gapped. It never actually traded at the price where my stop was. And so my New Year's resolution for the next year was to learn about options to hedge my positions, and that's never happened to me since. So for me, the best way to handle drawdowns is not so much deep pockets, because that just means that I'm going to lose and lose and lose and lose, and I don't want to lose. So I would rather hedge with options so that when the market starts going down, I'm hedged with a position that makes money on something else as the market goes down. Great comment. Great comment. Okay, so good stuff. All right, so I'll keep those all in mind as we go through this. And I'll tell you what, I'm going to share with you. I actually did a survey on this among thousands of traders, okay, because I've got a database of thousands of traders that I've worked with and that have worked with me. Here are the most common answers that were received through that survey, and you see if these resonate with you at all. So one of them was, they would say, and I kind of combine these together in different ways. Ambrose said how to combine time and price analysis for buy and sell signals. Oh, that's a great one. By the way, we're going to talk about that today. So again, you are at the right place because that's exactly what we're going to talk about. And that is a very smart question. Very few people ever ask me about time analysis. Price, yeah, get that all the time. Very few people ask about time. So I'm impressed right away. That's a very smart question. Okay, so here are the most common answers that I've gotten to this question. What are your most common problems? Number one is people often say, well, I enter the market, then it gets stopped out. Then the market goes back in my original direction. This goes toward one of my my main mentor in Chicago at the CME. He told me, he said, Barry, retailers are often right, but at the wrong time. And I didn't fully appreciate it when he told me that until later with some of my own experience and then teaching people as well. And that's basically what these people are saying. It's like they were right, about direction, but they got in at the wrong time. All right, so that's a very common issue. Here's another one. People said they get out of big moves too soon. This tends to be after people have been trading for a while and gotten some success under their belt, and they are making some money, but they're so excited that they're making money that they have a hard time staying in a trade because they want to lock in those profits right away. By the way, I found that's a pretty normal part of the journey of successful trading. So their win-loss ratio is good, but their risk reward's not quite as good because they take their profits too soon. Number 3, this one is much more toward the amateur side or the beginning stage side, getting stopped out too often. So this gives them a negative win-loss ratio. Number 4, this one's a tough one. I will admit this one is a tough one that I don't think anybody ever masters, knowing the best place to exit. I'm talking to a lot of people who are very, very successful traders and have retired, and not one of them has ever what they would call mastered exits. And there's no way to know exactly when a trend is going to end. So the best that we can do is get out at a reasonable time and place, and one that makes sense, but we don't know the future. And reasonable means statistical. And then another one is trading a trend that doesn't follow through. So you look like, oh, I want to or I want to trade trends. Trend is your friend, and then they get into a trend, and then it filters away or kind of flutters away and never follows through. Very frustrating. Very frustrating. So how do we solve these problems? Well, what I've done to solve all these problems is my trading methodology measures what I call the energies in the market. So what do we mean by energies? Well, first of all, there's 5 of them. So let's just give you the list here. You might want to write these down. The 5 energies, and these are in the order in which I look at them. So it's literally a 5-step checklist for trading. So step 1 is I ask myself, okay, what's the trend? So we want to know, well, this is the first one because we want to know, should it be buying or selling? That's a very binary decision. Do I want to be long or short? So trend comes first. Then the second one is momentum. Now, this goes toward that problem people had where they said, oh, I get into a trend and then it falters. It doesn't follow through. So how do we determine whether a trend will follow through or not? And that's energy number 2, momentum. Strong trends tend to follow through. Weak trends do not. So difference between a strong trend and a weak trend is very important. Trading the trend that just means the direction of the market. But just because the market's moving up now doesn't mean it will continue to. The big issue is, well, will it continue to move up after you buy? And that's where the energy of momentum comes in. The third one is cycles. We're going to focus that on a lot today. And you probably notice that markets tend to oscillate, and we even have indicators called oscillators. And this is where we get our higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Those are cycles. Okay. Oh, ZJ says, great, I appreciate your hedges via options on top of the stop loss story. Yeah, very important. Muy importante. Yes, that's my best Spanish. That's about all the Spanish I know. Okay, the fourth energy then is support resistance. And of course, most of us are familiar with this. This could be floor trader pivots, previous swing highs and lows, Fibonacci levels, very important. I define these as a potential blockage of energy. So you notice I call the first 3 energies. When I talk about the energy, I'm talking about the energy of money flow, money flowing through the markets. There's an energy to that, supply and demand. And then the 5th and final energy, which really, if you had to pin me down to which one of these is the most important, I would say it's this one, the fractal energy. And here's where we're looking at multiple time frames concurrently to take a trade. So I never take a trade based on one time frame. Now, this is the last one I look at. Doesn't mean it's definitely last but not least, because the first 4, I look at those and I say, okay, do we have a good trade setup here? But then step 5 is actually a filter to keep me out of otherwise good looking trades. And so that's what we'll that's your list. Okay, so now the instruments that I use for measuring. So we need some sort of objective rule-based tools to measure these 5 energies. And I don't use anything fancy schmancy, by the way. So for trend, I just use moving average. Okay, 50 period simple moving average. That's it. Okay, it's just direction. I would never trade based on the 50 simple moving average alone. But it does give me an indication. And by the way, that's what indicators do. They indicate. If they made us money, we wouldn't call them indicators. We'd call them what? Money makers. So 50 SMA is an indication of the trend. All right, not enough to trade with, but it gives me one indication of the direction of the market at this snapshot in time. Number 2, now I got to say, well, is that trend strong or weak? Okay, that's where the momentum indicator comes in. Momentum is, well, technically and literally, momentum is velocity times mass. So I'm going to look at that energy of the money flow. Is the money flow going through fast and furious? That's velocity. It's the velocity part of momentum in the markets. So, and you've probably seen that, especially if you've been a day trader, our market's moving fast. Sometimes, other times they're moving real slow, and it's boring, and you just want to shake your monitor and say, do something, market. Okay, that's a low velocity market. And then the mass part of the equation is the weight of those orders. In other words, volume. So are they weighty orders with big institutions involved, smart money, hedge funds, etc.? Or is it little, one contract, one lot, 10 shares, retail traders? Those are light orders. They do not provide a lot of momentum to the market. All right, number 3, cycles. Now we're going to use an oscillator here for this, and I'll show you that in a moment. So I'm not going to talk about it too much now because we will go into it detail. Support resistance, again, previous swing highs and lows, waves. You can use floor trader pivots. You can use Fibonacci. I mentioned a few of those things already. And then for my longer term chart, I use a time interval 3 times that of this setup chart. So I like a 1-to-3 ratio. I want them to be fairly tight. So in other words, I would not use a daily chart and a weekly chart because the weekly chart is a 1-to-5 ratio. And therefore, the timing between the two is too loose. If I do use a weekly chart, actually you could, but then you would change the parameters of the indicators to be tighter on the weekly in order to tighten up the signals to be more timely with the daily chart. Okay, so now that we've got just some, basic outline there, now what is trading all about? As I said, we don't know the future. We're not here to predict what the market's going to do because nobody knows. Nobody, well, God knows, but God never seems to want to tell me what the market's going to do in the future. Warren Buffett doesn't know. I don't know. Jeff may know, but he never tells me either. So how do we actually trade and make money then consistently if nobody knows what the future is? Well, we trade statistically. We use probability scenarios. So the way that I do it, and there's different approaches to this. I'm not going to pretend mine's the only one. I know many, many traders, but all of them have some way of determining a probability scenario, and that's what we trade. And that's why we have some losses, we have some winners. Yes, we have some drawdowns, but then, we catch back up on it because over a large sample of data, we come out ahead because we're trading probabilities. So how do I do it? Well, for me, at each point, I ask myself, how many of those 5 energies are aligned, all being bullish or bearish? And I literally just set up a score of 1 to 5 based on that. So the higher the score, the higher the probability of the trade being successful. It's kind of like taking each trade to court. I need 5 independent witnesses to establish a preponderance of the evidence. So that is the case. Now, these 5 energies of money flow are each uncorrelated to the other 4. That's why we call them independent witnesses. And that's what gives you a probability scenario. I don't need 2 trend indicators. I just need 1. But I wouldn't trade the one without then going and saying, well, okay, is there strength behind this trend? So there could be or there couldn't be because they're not correlated. Okay, and is it at a cycle low where it's time to buy a retrace? And this is a thing that a lot of people struggle with. They say, well, I like to buy retraces on the trend. But the big question there, of course, is, well, how do I know when the retrace is done and it's going to go back up? How do I know it's not going to retrace further? All right, so that's where your cycle comes in. Understanding cycles or timing, or as let's see, who said this? I loved it. Ambrose, yeah. How do you combine time and price analysis? So this is where timing becomes so important to know when and where. When is time? Where is price? Where will those two converge to actually put in a final cycle low and the market continue to go up? Okay, so that's how I do it. All right, so let's look at some charts. Okay, we got words, which is fine, but let's look at some charts here now. And let's see here. Oh, I see. I got to go over here. Okay, so hopefully you should see my pointer now. So, all right, so what do we got here? We got Starbucks, and we got a 10-minute chart on the left and a 30-minute chart on the right. You know why I have a 10-minute chart here? You know, I'm trading the 10-minute chart. I get questions on time intervals all the time. The reason is no particular reason, just random. Okay, 10-minute charts are fine to trade, but there's no best time interval. It's not that Starbucks works best on a 10-minute time frame. Okay, and that's a whole nother discussion, and I do have some free training on that. In fact, I've got a couple of blog articles, YouTube videos, and stuff about that, which I'd be happy to share with you later. But I just want to point out, because I get this question all the time, you know, what are the best time intervals? I'm actually going to show you different time intervals. So what I'm sharing with you is actually very robust and adaptable, so it'll work on multiple time frames. But you notice the 1-to-3 ratio, 10-minute, 30-minute. That part is important, the ratio between the two. All right, so let's go down. We've got our 5-step trading method. Step 1 is look for a new trend. So this red line, that's my 50-period SMA. Okay, genius, based on ancient Phoenician numerology that is very mystical. No, it's just a very common moving average. Okay, so nothing super special about it, but it does meet the criteria. And what is the criteria? Well, a trend is, in fact, if we want to get real literal about it, Webster's dictionary defines trend as the extended general direction of something. And in trading, that serves us well, because if you're going to be, well, trend systems are designed to be big reward and low risk trades. So that's what we want. We want a big reward and low risk. So the definition of it being the extended general direction means bigger reward, right? Market's going to move a long ways. Okay, so that's why it's important. 50 MA measures 50 bars, average of 50 bars, so that meets it. Again, nothing super special about it, but that's one. Then number 2, we want to say, well, what about momentum? Oh, here's momentum down here. This is our strength indicator. Is it a strong trend or a weak trend? Oh, it's angling up. All right, so now we've got a retrace in a trend that is strong. That's what we want to trade. Strong trends, not weak trends. Then we go to step 3, cycle. Is it the right time to buy this? And this is our timing indicator down here. So what I use is a modified stochastic. Again, nothing super fancy. It's your stochastic indicator, modified just a little bit. And I'll show you how we do that in a moment. Right now, I just want to give you the big picture on all of this. And what we've got is a mini divergence. Now, this is super important. These little mini divergences, this is a little bit of the secret sauce. So the black line is K, percent K. And what I want to see is these kind of angles down here. It comes down here. Now, it goes back up, hooks back down, goes back up. Notice it makes a higher low just within this single swoop down, within this cycle low. The blue line is D. So this is what I use as my cycle indicator. We've got a cycle low measured by the blue line, which is smooth. But then I want to see K make this little bit of a higher low there. And that's what I call a mini divergence. That is what gives me a high probability that it is the final cycle low. in order for me to buy. Okay, we got support of the 50 SMA, and then, oh, we go to the next higher time frame, our 30-minute, and now over here, you notice the 50 MA is going down. So some people say we should only trade in the direction of trend of the higher time frame. That can work okay, but again, trend being a long-term indicator like that can be very lagging. So what I prefer to use is momentum on the long-term time frame. I don't even really use trend on the longer-term time frame at all. So I like to, momentum is the main one. And if you think about that, that makes sense because momentum is the strength of the market. So I want bullish strength on the long term and bullish strength on the short term. And that means I've got two different time intervals, which would basically include two different groups of traders that are buying heavily. And so that causes the market to pump up, which is what we want. Okay, and then if I can get a cycle low on this one at the same time I get a cycle low on the short-term chart, well, that's just gravy. I love it. Lows. Okay, so that's what it looks like on a chart. Now that's the big picture. All right, now let's deep dive a little bit deeper. So my favorite technique for pinpointing market highs and lows for entries and exits. So now we're going to get into what I call my cycle indicator, which is my modified stochastic. I'm going to show you, whoops, I'm going to show you the rate indicator and the rate inputs and parameters. So here it is, the unveiling of the details. So this is how it looks on Metastock, of course. So what I use is, again, the good old-fashioned, stochastic oscillator. All right, so that's the indicator that I'm using. Parameters here in this tab, you got 3 tabs. On this tab, I'm going to change time period to 5, slowing 2, and %D time period 3, moving averages simple. Okay, the last 2 down here, these are just personal preference for colors, but these 4 are critical. So these are not the defaults. This is how I modify the stochastic indicator to turn it into a cycle or a timing indicator. All right, so again, I've got some extra words over here just to, if you want to take a screen capture of that or write that down, you're certainly welcome to. So you could see %K parameters, time period 5, slowing 2. %D parameters, time periods 3, method simple. All right, now there's another tab over here. You see horizontal lines. And so I changed those 2. And you can see them there. Horizontal lines are set at 20, 50, and 80. So 50 is the mid zone. 20 is low, 80 is high. So what I'd like to see preferably is for the indicator to, if I'm going to buy, I want to see the indicator get down to 20. If I'm going to short, I want to see the indicator get up to 80. And 50 is really the line on the sand, whether we have a cycle high or a cycle low. But I like to buy the extremes at 20 or 80, or buy or sell the extremes. Okay, so we've got the right indicator and the right inputs or parameters now. Again, got to really emphasize this. I do a lot of teaching, and for some reason, people always get focused and get myopic on one thing. In this case, sometimes they'll get myopic on this stochastic indicator, or sometimes that's the 50 MA, and they'll say, well, that's lagging or whatever. It's like, yes, I know. That's why I do not trade any one of these things in isolation. Any one of these indicators and a $100 bill will get you a homeopathic amount of caffeine at Starbucks. I'm fully aware that's how valuable it is. The real value comes in combining, as we talked about before, the 5 uncorrelated energies, and when they all align, we buy. When they all align bullish, we buy. When they all align bearish, we sell. And the reason that's statistically significant is because each one is uncorrelated to the other 4. All right, so in this case, again, only trading cycles in the direction of the trend and early in the trend. Actually, I didn't mention that. So when we're trading in the direction of the trend, it's not just the direction of the trend. The old saying, of course, is the trend is your friend until the end. So what does the learning moment of that mean? What does that really mean to us? What's the significance of that saying? The significance of that saying is don't buy late into a trend because it's no longer your friend. So conversely, when should we buy into a trend? Well, we have a higher probability of the trend continuing if we buy early in a new trend. So my rule is when I say trade cycles in the direction of the trend early in the trend, my favorite way to do that is to trade the first cycle low in a new uptrend or sell a first cycle high in a downtrend. Now, only trade cycles that have momentum. Again, because trend is not enough. Is it a strong trend or a weak trend? Well, momentum is going to tell us that. So we want it to have momentum or we don't take the trade. And then finally, only trade when the fractal energy is aligned. Again, we want to make sure that we have that momentum on the higher time frame going in the same direction as momentum on the shorter time frame. And then only trade second chance indicator patterns. Second chance is another term for that mini divergence that I mentioned. So that's key. That's how we can determine whether we have a final cycle high or low. So what are these second chance patterns? Let's dive into these because this is so important. Dollars are in the details in trading, my friends. Dollars are in the details. So second chance patterns indicate a momentum shift at the top or the bottom of a cycle. I call them mini divergences, but there are others. There's 5 patterns, or there's 6 total patterns. There's mini divergence, and then there's 5 others that provide extreme high probability you find the final cycle high or the final cycle low. Again, going back to time analysis. So let me show you what I mean. So first of all, here's the problem. I like to often show the problem because, well, traders have a lot of problems. And so we're here to solve problems. So here's what we want to avoid. So price comes down. By the way, just to let you know, because I get this a lot, so I'll just anticipate the question. The red line again, that's the 50 SMA. My black line here is the 15 EMA. Okay, so price comes down, goes up to the 15 EMA. All right, so this is where a lot of people would say, oh, maybe I should go short in a downtrend here. And so they go short, but then, price comes back up, takes out this high. And if they put their stops above this high, which is kind of a normal practice, then they get stopped out before the market makes a higher high, but the overall trend is down. And this is exactly what my mentor in Chicago used to say. People are often right, but at the wrong time. So this was the wrong time to get in. This was the right time to get in. Now, some people will tell you, oh, a trend is defined by a higher low, higher highs. But we've got that here, but that's not a trend. That's not an uptrend. Remember, trend is the extended general direction of something. So the 50 SMA gives us the extended general direction over the last 50 bars. This is just a short-term ABC complex retrace against the trend. All right, so now that we see the problem, how do we solve it? Well, we solve it with these little momentum shift patterns. Okay, little mini divergence patterns. So what we do, and it can be used many different ways. So here we have an uptrend. We've got our little cycle indicator down here, stochastic oscillator, with the new parameters that we put in. And again, we're looking for, we're a little lower low on price, but we've got a very clear higher low on stochastic. That's your mini divergence or your momentum shift pattern. And so that tells me, oh, okay, this one I'm not sure about, but that one, yes, I have a lot of confidence that is the final cycle low on the retrace on the trend before it continues up. Okay, so that is the key. Lower low on price, could even be an equal low, but I want to see a clear divergence, a little mini divergence here on the stochastic indicator. And remember, again, stochastic indicator, George Lane created this. And remember what indicators are. indicators are math functions. That's what they really are. I could even go so far as to say, these lines down here are not really the indicator. Because George Lane, when he created the stochastic indicator, he didn't draw lines at the bottom of a chart. No, he sat down and wrote a math function. And so indicators are math functions. That's what they literally are. And then we have charting platforms that will visually plot the result of the equation onto a chart. But it's easier to read this than to do math because, well, I'm terrible at math. Math was my very worst subject in school. Okay, so that's our momentum shift and a trend continuation trade. Now, it also works for trend reversal trades. So we said we only want to go in the direction of a trade or a trend early in a new trend because the trends are friend until the end. Well, what happens when you're late in a trend? Well, then the trend is my enemy. Then I want to trade against the trend. So yeah, sometimes I want to trade against the trend because now, again, it's all about statistics and probabilities. The longer the trend continues, the less probable it is to continue. So when we get an extended trend, now I'm looking for trend reversal trades. Can we use these little mini momentum shift patterns here? Yeah, we sure can. Lower low on price. Trend's been going down for a long time. Higher low on our stochastic indicator. That tells me that's our final low for time. And now I'm willing to get in before the trend indication, the 50 SMA, because it's slow. I can get in before the 50 SMA even turns around. So this is a much faster indicator. Remember, this is measuring over 5 bars. We changed the parameter to 5. And this is the 50 MA is measuring over, well, 50. All right. What else we got? Well, what about consolidation, contraction, breakouts? Sure. Higher high on price. Price is kind of just going sideways here. 50 MA is pretty flat. Higher high on price, lower high on stochastic. And so there we go. That's our final high. And again, we get in and there's some pretty good money to be made on these. So summary of high probability trading. There we go. We're waiting for the alignment of the 5 energies to put the odds on your side. No one price pattern. And when I say price pattern, I mean no candlestick pattern, no multi-bar pattern like head and shoulders, triangles, wedges, whatever's is enough to trade with. No one indicator is enough to trade with. We are looking for probabilities. And so we're taking these 5 when we say energies, remember, it's a very literal thing. The energy of money flow. When you look at a chart, again, especially those of you who have done any day trading or even looked at a day trading chart live, you see it better and you can see it more clearly than if you're trading like daily charts or weekly charts that only update at the end of day. But intraday, and I'd encourage even those of you who trade daily charts, weekly charts, that's perfectly fine, nothing wrong with that. But just to get a feel for that energy of market movement, to just even watch, even if you're not going to trade, just watch some intraday price action. Because there is an energy there. How fast are orders coming through? How fast do the bars move? Do they go parabolic or do they just kind of go sideways? Right? Do the bars form fast? Do they form slow? Watch the volume. We got big volume coming in or little volume. That's the energy, and it's a literal energy of money. Money is energy, and it's a literal, measurable, mathematically measurable thing. Okay, in fact, my whole system can be summed up in one sentence. One sentence. Okay, so there it is. We're looking for a trend and get in early in that trend that is strong. That's momentum. At the right time, that's our cycle indicator, modified stochastic. With support at your back, that's our support resistance level, energy number 4. And then energy number 5, after we got all that, That's the first thing. This is all in the same time frame. Now we got a good setup. Then we look at the longer term time frame, the bigger scale, and we look for momentum to either give the okay or to say nay. Because if I don't have momentum on the higher time frame, I do not take the trade. This will keep me out. Momentum on the higher time frame, agreeing with my trade on the short-term time frame, is great. If it contradicts the setup on the shorter time frame, that is a filter to keep me out of what is an otherwise great-looking trade on the short time frame. So we call it a filter in the trading system. So it's very robust and adaptable. Because we're just measuring the energy of money flow, you can use this in a variety of markets: stocks, commodities, options, currencies, futures. Oh, I should add cryptos to this now. And I do trade cryptos. I trade all these markets. And I trade them because, again, my methodology is just based purely on the energy of the money flow. All these financial markets, essentially, are just auction places. That's the best way that I can tell you to think about them. They're auction places. I mean, literally, when you go in to place an order, there's a bid and there's an ask. Just like in an auction, you go to an estate auction and maybe they pull out a piece of art and people start bidding on it, right? There's usually a floor price at which they start the bidding. Just like when you start trading the market in the morning, there's a floor price. Okay, that's the price at which it starts. And you can't pay less than that because they won't take it. And then people start bidding. And they say, well, I'll pay this for it. Okay, I'll pay that for it. Now, your bid may be accepted or not, because there's got to be someone else on the other side who says, okay, I'll accept that. So you offer, you bid, and people have to match. If there's no match, no trade happens. If there is a match, then a trade occurs. That's what we call it, trading. One person sells to another person sells to another person. Okay, and then the market decides at what's a so-called fair price at that snapshot in time, which could be very different 60 minutes from now, depending on how people feel about it and what news comes out, etc. Okay, so that is what markets are. And markets are not always logical. There are times, let's go back to the auction place example. There's times when people will buy, oh gosh, let's think of NFTs recently. People buying NFTs, little images, for JPEG images for millions of dollars. Is it worth that? Well, it's hard to answer that question objectively. A lot of people would say no, but it's on the blockchain. So there's a proof of ownership there, which means it's not literally just a JPEG that you can copy. And, the value of it is the proof of ownership. So I'm not here to tell you whether anyone is valuable enough or not to pay millions of dollars for. But as they say, anything is worth what someone's willing to pay for it. The problem is, of course, what people are willing to pay for it could change a lot in a short period of time. Look at Beanie Babies. So, but anyway, that's how you think of markets. That's the correct way to think of markets. And markets, again, are not always logical, especially when you're, people ask about investing. And investing is a very, 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 very different thing than day trading. So with day trading and even swing trading, short-term trading, markets can go up and down in price dramatically based on people's emotions. Or, as I talked about briefly, a tweet or news that comes out, or something that Jerome Powell says, or a CPI number, or it could just be rumor. I remember times at the CME where a rumor would come across the floor, and then spike prices, and then 3 minutes later, people realize, oh, that's not real. That wasn't real news. It was just a rumor, and then the price would come crashing down again. But it had an effect on price. So it's all about follow the money. Follow the money, honey. And this is where people who are really smart sometimes have a tough time trading, because they're so gobble darn intelligent, they think that everything in the market is supposed to be logical. And sometimes it is, but a lot of times it isn't. So as I said earlier, you can use this for a variety of time frames: investing, swing trading, day trading, So even in my investing, I do look at the same setups on charts. I just use longer term charts. So weekly and monthly charts. And it is a different animal. So I also include fundamentals when I'm investing. But for swing trading and day trading, I don't use fundamentals. I just follow the money. And I actually like emotional markets when I'm swing trading. Makes the markets move faster. And it's simple, because really all we're doing with this methodology is counting to 5. Now, we've got a great thing with Metastock. Metastock has really, and Metastock's the only one that has this. So we have a plugin for Metastock, the Top Dog Trading add-on. And so what it does is, remember I talked about getting early into a new trend? We'll see these wave counts here. That tells you how early or late you are into a trend. So 9 is late. 7, getting a little, so this is what we use these wave counts. These, by the way, are not Elliott waves. But we have the wave counts, which are objectively measured. This is not a theory. It's actually an algorithm that's based on mathematical formula. And the wave counts don't change. In other words, we don't lock it into 5 like an Elliott wave, which Elliott wave has some great advantages. But they always readjust the wave count to make sure that each trend has 5 waves. So the Top Dog Trading wave counting waves doesn't do that. We just count whatever the market's doing based on a mathematical formula. But the earlier you get in, like a wave 2, that would be a first retrace on the trend. So that we know is early in a new trend. After we get into 7, getting kind of late. 9, we're really late. So that's what that is for. Here's your cycle indicator up here. We got volume here. The ribbon down here tells you whether you're in an uptrend or a downtrend. So it's all plotted there for you. Now, here's the really cool part. We got commentary. So now you can click anywhere here and there'll be a little triangle and it'll tell you, oh, okay, this pops up right into Metastock, right inside of it. And it says, okay, well, here is your setup. We have a wave 9 high, 50 SMA angling up. Percent K has been up to 45 or above. All right, and you'll learn, there's things that teach you all about this. So that's the basic setup, and that's right there. So that's telling us we're extended in the trend. Commentary. A wave 9 reversal is the second opportunity we will attempt to trade in the opposite direction of the trend. It's extended beyond wave 5, etc. Confirmation. Okay, I'm not going to read through all of these, but look at this. Entry. Immediately below the low of the bar that created the hook down on K, your protective stop, and your targets. So entry, stop, targets, all right there for you, spelled out, clear, objective, rule-based, no guessing. And in a minute, I'll invite Jeff to come back on and show you a little bit more, because you can scan for these too. You can scan for all kinds of things with Metastock for the Top Dog Trading setups. And it'll actually even show you, and maybe he can show you this, the actual entry numbers, the prices where you get in and out and so forth. So before I turn it over to him, I just wanted to give everybody an extra little freebie. And that is this. I'm going to give everybody one of my favorite trade strategies. I call it the rubber band trade. I still trade this all the time. This is not an old has-been trade that I'm giving to you because it doesn't work anymore. I'm giving it to you because I want to prove myself to you. And the best way to do that is give you a trade that will actually make you money. And then you'll know, wow, Barry actually, not only does he make money, but he's starting to make me some money now. And didn't even charge me for it. This dude's cool. That's what I want you to say. But in all seriousness, that's how I approach this. So I give you a trade strategy. I want you to start making some money with it, called the rubber band trade. You get all the rules. It's in a little mini course called How Pros Trade Different Than Amateurs. My cycle indicator, you get the details on that. In fact, there's another recorded webinar that will give you some more information on that. And you get all of this by just going to topdogtrading.com/free. How's that? topdogtrading.com/free. So that's my gift to you. And I want you to enjoy it. And oh, there we go. Okay. Thank you, Jeff. Appreciate that. So now before we finish up here, I just want to turn it over to Jeff, because Jeff wants to show you some more stuff here that we have with the Top Dog Trading add-on that's really amazing. In fact, again, I want to really emphasize this. What Metastock offers for Top Dog Trading, no other trading platform does. It's exclusive to Metastock, and it's because of the power of the platform that nobody else can do. Okay, so Jeff, if you would.
All right. Yes, of course. Thank you very much, Barry. Again, topdogtrading.com/free. I appreciate the great class. And yes, I'm going to spend a few minutes just showing the Top Dog Trading Toolkit, but you did a really good job yourself. So thanks again for coming today.
My pleasure. Thanks for inviting.
All right. And then here, I'm going to go ahead and just kind of take control here. And just kind of show it to you. One of the things I actually really like, let me do this, make presenter. Barry does do a really good job of actually showing this. But I just I've got this. I think I need a little bit of, there we go. Thank you, Greg. I just got a chart open. This is the Dow Industrial Average. And I've applied the full template, which is going to show all of the wave counts that Barry's talking about here. You got the 1, 2, to the downside, you've got 1, 2 to the top side, and it goes up to 5, like he was saying. These arrows that you'll see are opportunities to go, and those are scannable opportunities. The other things that you're going to notice on this is it's actually going to draw an automatic Fibonacci lines for you. So it's going to show you where those are. It's got all the indicators that he uses, as well as his top dog stochastics. And you'll notice one of the things that Barry likes to use a lot is kind of the divergence. We have little divergence lines all over this, as well as the top dog momentum. So it's great. Barry himself showed how the commentary works and how you can kind of go in and look at the signals and see exactly what the stop losses are. It's a fully built-in add-on for Metastock, and you can also scan. So just like we've been doing all day, if I want to find something, I'm just going to keep DDT, or actually I think it's top dog. Here's the scans that are available. So you've got the confirmation scans for the 3-to-1 or the 5-to-1. You've got top dog trad trades. You've got the rubber band trades. You've got the triangles, the reversals, and even the wave count. So these are scans that you can run. Fully a very, very well-designed add-on for Metastock. Let me go ahead and kind of go back into the PowerPoint right here. They support and they use the 5 energy method that Barry was talking about. Looks at the trend, the momentum cycles. It's all built for you. You can scan for it. It's going to help you understand it. It's illustrated. One of very, very good add-on. So here's the patterns that it looks for: new trends, momentums, long trends, reversion to the mean patterns, and triangle patterns trading. Normally, the Top Dog Trading Toolkit is $4.99. Here at the summit, as part of the special, is $3.99. And if you need Metastock, we'll give you a trial for free as part of that order. So it's also part of our Summit Traders package. So you'll get Rick Sadler's Patterns for Profit, 3 months of Guy Cohen's OVI, Daniel Sinnig's Power Bundle 360, Oscar Carboni's training on the technical formations and trend lines, and the Top Dog Trader. You'll get 2 years of Stocks and Commodities magazine, 3 months of Learn Metastock, and Unleash the Power of Metastock. The thing I like about this is almost everything is backed with our 30-day money-back guarantee. Normally, this would be $4,500. Here today at the event, it's $1,992. So you can take advantage of that. Get in touch with us at metastock.com/summit deal. You can call us at 800-882-3040. You can also visit online at metastock.com/sales chat. I want to say thank you again to our sponsor, Stocks and Commodities, for helping us with the event and sponsoring all of the events. I want to say thank you to CMT Association for also being a sponsor of the Metastock Online Traders Summit. I want to thank you guys for coming. I appreciate it. I hope you enjoyed the class. I hope you learned today a lot of new things. I always come in with a little bit of it. I always learn something. I've been doing this for 25 years. I hope you enjoy the classes as well. I want to thank you for coming. I want to thank all of our presenters today for coming in and spending their time and their expertise and their knowledge with us. Thanks for coming. Thank you for coming. If you're watching this on the replay with YouTube, make sure to like and subscribe. It helps a great deal. again, get in touch with us, 800-882-3040. Metastock's been rated #1 in its price category 29 years straight. There's a reason. Give us a call, 800-882-3040. I hope we see you at the next event. Until then, stay safe, stay healthy, and see you next time.
Here for Metastock. I hope you enjoyed today's video, and I hope you found it instructive and informative. If you did, what I'd like to invite you to do is go ahead and like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. So go ahead and like and subscribe, and keep on watching.